The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hey, everybody. It's good to have you. Thanks for coming. We should be started. You should be able to hear me in YouTube and in GoToWebinar. And if you have any issues, please make sure to say something. Maverick, it's good to see you. Thanks for saying hi. Say hi as you come in. We have a great session lined up for you today. I'm just going through and kind of making sure everything looks good through the different consoles. So in any case, my name is Jeff Gibby. I am going to be kicking us off today. I'm going to be here all day. I'm going to be taking notes all day. And well, it's good to have you, Neil. Good day. All right, let's go ahead and read the legal disclaimer. I need to start there. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should be only used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. I've never said that before. Anyway, I want to say thank you for coming. I want to say if you have questions and you're watching this in GoToWebinar, click on that questions box, type them in. We'll be able to see them, and we'll do our best to answer them today. Sometimes we get a lot of questions, sometimes we get very few, but no matter what, we'll do our best to kind of hit them all. If you're watching on YouTube, I want to tell you a couple of things. Hello, it's good to see you. If you like and subscribe, it helps a great deal. We appreciate it. Well, I'd love to see you say hi. If you do have questions in YouTube, make sure just to put them in the chat. I keep an eye on both of the chats, and I'll do my best to answer. In a minute, I'm going to send a link up to our website because all day long we're going to be doing prizes. If you're watching in GoToWebinar, if you've already registered, you do not need to register to get prizes. But if you're watching us on YouTube and you just stumbled across the page today, make sure to register because that way you might win a prize. So in any case, as we get started today, I want to say thank you to our sponsor, Stocks and Commodities Magazine. We'll be talking a little bit more about them today. They're a great magazine, a great partner. They've been publishing articles on technical analysis and stocks and commodities for, well, since 1982. You can find out more about them at traders.com. Also, I want to encourage you to join our community. We've got a really good community that's available that's totally free. You can chat with other market traders, learn about the market. It's a community of traders designed to help other traders. They're in there chatting about what stocks they're interested in and what they're looking at the market right now. And I'm in there with them. Been a little bit busy this week, though. So you can join for free. We do some really cool stuff up there. thetradersforum.com. We are MetaStock. I'm going to be talking about MetaStock extensively today. Very quickly, though, it's been rated #1 in its price category for 32 years in a row this year. It's great at scanning the markets. I'm going to show you that. We're testing trading ideas. Today, Scott Brown is going to be a guest, and he's going to talk about our patented forecaster and how it works. We have a special extended trial offer on MetaStock today. You can get it at metastock.com/conf-promo. And if at any point today, tomorrow, the next day that you want to talk about MetaStock, we'd love to talk to you. We'd love to send you some more information. Just get in touch with us. metastock.com/saleschat or 800-882-3040. So, whew. Our first guest today is Serge Berger. Serge is a good friend of MetaStock. He's a good friend of mine. I love the methodology he's about to talk about, the trender methodology. I like methodologies that I'm a very, very simple guy. I like methodologies that are straightforward, that I can understand, and that are well explained. Serge has all three of those. He's the triple threat when it comes to that. Serge, welcome to the show today. Let me go ahead and make you the presenter. We'll make sure we get things kicked off.
Thank you, Jeffrey, and you should give yourself some credit. You're not such a simple guy. You just like things clean cut and straightforward, which is, I think, admirable.
Yeah. And simple.
All right, I'm gonna share my screen. Let me know when you can see that here in a second.
Coming through clear. All right.
Awesome. Perfect.
I'm gonna get straight out of the way. Your turn.
Thank you, Jeffrey, and I'll kick it back to you then, as we said. Cool. Well, thank you everybody for being here. Happy Wednesday. We've got an important earnings report today from NVIDIA. It seems like we're jumping from NVIDIA reports to NVIDIA reports just to get some market guidance. And that's what happens when you're in a market cap hijack market, where a few stocks essentially have the lion's share to say in terms of an index like the S&P 500 or the NASDAQ 100. So what I would like to show you guys today is how we like to detect momentum. Because we've really entered a different era, and I was just talking to Jeffrey before we got started off camera. Having done this now for 26 years, I've seen multiple iterations of algorithms and how markets move, and we really have moved into a different type of environment. It's easy to say that to make people kind of panic or get excited, but we really have. And so what I'm going to show you guys here is, in fact, let me quickly. I think this looks like the wrong presentation. Let me see, what do I got here? Just give me 1 second. But what I'd like to, no, actually it's correct. Here, where was I? Here. So what I was telling Jeffrey before is, if I go back to this here, oh, no, this actually is the wrong one. So sorry. I think we're here. Things just disappear sometimes. It's just how it is. Things just disappear here. It's over here. What I was telling Jeffrey before, and this is yours truly here setting up I moved into a different office. I was down the hall in my colleague's office. Now I moved over here. But you know, I can tell you that having traded through all these different market environments, we're at a point here right now where things are changing faster than ever. And so, you know, just before we go into this, the risk disclaimer is important. Trading and investing does carry a lot of risk, so please make it your number one objective to learn about the markets. I'm not going to give you any advice here. I'm not allowed to give you advice. It's purely educational. But what you may have seen before is stocks explode higher or lower before major headlines have hit. Before we get into that, I'd like to track a live trade with you guys. This here is AMD. This is a live 5-minute chart. We are just about, I hope, we're just about to reach this profit target up here. This is a 5-minute chart. You can see we received a buy signal right at the open here this morning about 35, 40 minutes ago. So far, AMD is now moving higher. It's now up about 1.8%. It's about to reach these green dotted lines, which Jeffrey's going to show you in MetaStock after, which is really our main focus here. You can see we're just about to reach these free, what we call a free profit target at the green dot, and it's happening in live right now. You guys can pull up your own chart. You see happening live. I'm not making this up. And so having bought there, the time to take some profits would be, and I'll tell you how much profits in terms of percentage wise here in just a bit, would be right about now. Like literally right now. There you go. And now we're past the green profit line, the line. So this is live. I'm not making this up. You guys can check your watches. You can put up your phone. You can screenshot this. You can check your own charts. This is live. I'm literally not making it up. So we just reached the free profit target in AMD, which gave us a buy signal. Now, how does this work? Is this magical unicorn stuff? Am I reinventing the wheel? Do I live in the future? None of that. It's just what's called momentum. Okay, so that we'll come back to this and we'll see where it is. But right now, it's reached a free profit target. Boom, and we'll continue monitoring this over the next 30 minutes or so. All right, now maybe you guys have seen, and hopefully you guys have seen this before, where a stock makes a move just minutes, sometimes hours before a major headline hits the wires. This is not random. It happens for reasons, and it's actually largely driven by news flow, obviously. Let me walk you guys through a couple of examples here, and then we're going to walk you through why this happens, how it happens, and how we can capitalize on this in this very AI-driven market environment that we live in. So this was Friday, April 17th, which is about a month ago. And I'm not trying to show you old stuff. I'm just trying to show you something that you guys may have remembered because it was a very big news event. And so this was a chart you can see intraday. If you look at the bottom axis, it's the x-axis. You can see at 8:30 a.m. Eastern time. So this is Eastern time. You can see that the market spiked. So this is the futures. This, SPY would be the derivative of that on the ETF side. 8:30 a.m. We saw someone buy $325 million worth of S&P 500 futures. These are 5-minute bars. 5, 10, 15, 20 minutes later, at 8:45 a.m., Iran's foreign minister said the Strait of Hormuz is completely open. That led to an even bigger spike, and as you can see for the rest of the day, the S&P 500 went higher. By our estimation, the order that bought $325 million worth of futures made about $50 million. Okay. However, here's the big thing. Again, keep these dates in mind, or this timeline in mind. So 8:30 a.m. Eastern, the order came in. The news broke 25 minutes later. But let's see what the algorithms did hours beforehand. So I'm going to go to the next chart here, and this is what you want to focus on here. So same chart that I showed you before, but here I annotated so you can see using our momentum indicator when momentum came in. So again, same exact bar right there. This is that the $325 million that were being bought. This is this bar here. Okay, that bar is this one here. 25 minutes later, the news hits. Iran says the Strait of Hormuz is open, and happy days. However, you will notice that little green up arrow all the way on the left-hand side. This is when our momentum indicator, now I can show you this till the cows come home. I'll show you tons of examples here today in live, as I just showed you a minute ago, where the momentum actually changed hours before the actual insider even came in and bought, right? Much less the actual momentum, the actual news hit, right? So this is now an overnight thing that happened at 3 a.m. Eastern time. So that's that is 3 a.m. That's 3 a.m. Eastern time. Excuse me. You see, we started getting this up arrow. This is not something I drew on the chart, with my crayon or anything. This is actually printed on the charts, and you'll see it in a bit afterwards from Jeffrey on MetaStock. And you can see that basically the market continued trading higher and higher and higher and higher and higher. Then the insider trader came, bought it. Then the news hit, and off we go. Ultimately, it turned back into a sell signal, but not until the early afternoon Eastern Standard Time. So instead of buying when the insider bought or when the news broke, this came hours before. Why is that? And again, I'll show you tons of examples so you guys can see we're not like inventing stuff here. The reason it happened is because AI basically is at a stage where it's getting more advanced, so that somewhere along the way, somewhere someone's leaking something, right? And there's chatter and something because it can scan everything and it's advanced, blah, blah, that it's able to front run even the insiders. I'm not saying it's going to happen 10 out of 10 times, but we continue to see this over and over again, and I'll prove it to you. Okay. Now, ask yourself, right? And it's a question, would you think that's helpful to get a signal way before the insiders even got it? Let's look at another example. This is the NASDAQ 100, same exact day, same exact chart. Buy signal, the insider trader comes, and then the news hits. Same exact thing in the NASDAQ. Now, what about even just going back to a year, a little more than a year ago, 13 months ago, April 2025? You might recall that President Trump on the April 9th of 2025 announced basically a deferral of tariffs. I think at the time for a few months, and that news hit right there. This is an intraday chart as well. We'll show you all this in the daily charts as well. This is not about day trading. It's just as much about swing trading. But I'm showing you this intraday here just so you guys can get the concept straight. And so you can see what happened is we received a buy signal, and I'm going to say this was an hour, 45 minutes later, the news hit. So the momentum, the algorithms, right, they came in and started buying, in this case, the S&P 500, 45 minutes, 60 minutes before the actual news hit, right? Again, I'm not making this up. This is not drawn on like by hand or anything. Like this factually happened. What about even just the past few weeks, April, May, here, 2026, cannabis? You guys might recall a couple of weeks ago or so, cannabis got reclassified from I believe a Schedule 1 to a Schedule 3 or vice versa, I always forget it, to a less crazy drug, basically, so that for research purposes and health purposes, whatever, it got reclassified. So that was, I believe, that bar. It might have been this bar here. I can't remember. It's either that day or this day. I can't remember. It doesn't really matter. As you can see, it went higher. The point is, momentum, right? Again, this is algorithms basically front running the news itself, right? Came on the, what is that, April 7th, April 8th. So like 2 weeks before the news hit. Okay. Give me a quick yes in the chat box if that makes sense. I promised we would continue to monitor this AMD trade. You guys see this now? It continues to work. Remember when we started here a few minutes ago, 15 minutes ago? We were right here. We reached the free profit target, and now we're blowing past the free profit target. I'll explain to you how all that works and how we want to use it, but for now, just keep that in mind. Okay, this is live. I'm not making this up. I didn't cherry pick. It's just AMD, which is a big mover, and here you are. Oh, let me turn off my phone. Okay. So that's what's happening here. Now, let's talk about momentum in terms of what it actually is. We need to define a little bit what momentum is, so that I think we can kind of get our head around it. So momentum essentially is in something in the market that is basically all about trading. Now, if you are here as a trader, which for the most part you probably are a trader, whether you're trading at home or you are trading a prop account somewhere, maybe at home or somewhere, you're probably looking for momentum. And I'm not trying to put words in your mouth, but momentum is driven by computer algorithms, because there's no way a human being can react as quickly to news as the market reacts, right? So this is factually driven by algorithms. Now, algorithms basically have no emotions. And where I think a lot of people are getting into trouble these days in the markets is by trying to make sense of the news, trying to rationalize it. And I still do this too much, quite frankly, after 26 years, and thus not just going with the flow, with whatever algorithms are trying to do. It's just that they have a lot of money, right? So why would I fight that? It doesn't make any sense. So momentum is very much where the money is right nowadays, and I don't think that's going to change, except it might change in direction at some point. Maybe momentum is no longer going to be to the upside all the time. It's going to go to the downside. That's going to happen. That's going to throw a lot of people off, because right now people believe momentum is going to the upside. It'll be to the downside too. So this is what it looks like, right? So momentum is basically a rate of acceleration increase. So if you look at it just mathematically for a second, and any of you that are engineers here or somehow mathematically with a mathematical background, you're going to enjoy this here. So basically, momentum, if you define it in terms of its formula, it's P equals M times V. So it's basically the mass of an object times its velocity gives you what's called momentum. I like to break it down a little bit more sort of visual, in the sense that we're going to look at this as a car driving along the road. So if you imagine this car is driving along the road, let's say 45 miles an hour, and it is going to pull onto the highway, right? So it's driving along 45 miles an hour. It wants to pull onto the highway. It's going to accelerate, maybe up to, let's say, 75 miles an hour. It's that rate of change increase, right? It's that rate of change that is what we define as momentum, right? So momentum in our definition is the rate of acceleration. Can be price or volume, but really we're talking about the ultimate arbiter, which is price in this situation, right? Now, the big thing, and I think this is where a lot of people kind of go wrong with it, stock market momentum is actually temporary. It is not a constant. Stock market momentum is temporary. It's not constant. Momentum comes and momentum goes. It doesn't last. And this is why momentum is so great for trading, right? For the most part, people are trading, again, at home or a prop account or whatever you may be doing. You're looking for directional movement. Which is a bit different if you're looking for income, which is more where you use some options for things like that. But generally, people like to make quick money, right? Who doesn't like to make quick money? I like making quick money. Is that a guarantee? No. But momentum definitionally doesn't last. It's not a trend. So understanding as a trader that momentum is temporary, it is not a constant, it comes and it goes, is really critical. I promise you we keep an update on this AMD trade, and I will again explain to you in a minute how we manage this. But if you guys remember, we started this session here about 20 minutes ago. The AMD trade was right there. It was about to reach the free profit target. It has reached it now. So now the trade should be half off, and meaning taking half profits. I'll talk about that in a minute. The trailing stop is now at the entry point. Okay, so it's no longer possible to lose money, and the trade continues to go higher. So this is live. I'm not making it up. It's right there in the chart. You guys can pull up your own AMD chart if you want to look at this a bit more closely. All right, now let's talk about this in terms of an actual visual representation of what the difference is between trend and momentum. So the difference between trend and momentum is really quite simple. A trend, definitionally, if we talk about it in days and weeks and months, is something that tends to last, in our view, the way we look at least a few months, if not quarters and years. That's this long green background color, a green arrow you can see from the lower left to the upper right. That is what we call a trend, and this trend here you can see is very much intact, going from the lower left to the upper right. Momentum, however, is, as we said before, defined, is the acceleration along the way, right? So momentum happens along the way. It's when the price accelerates or reaccelerates to the upside or to the downside, irrespective of the trend. So the trend means nothing to momentum, right? So a lot of people will go in, they'll put on a trade that they think might last for a few days or a few weeks, which is purely a momentum focused approach, and they somehow try to make it like the long-term trend matters for their short-term trade. It doesn't. It just doesn't. It's just how it is. Because shorter term, you're looking at momentum, purely driven by algorithmic computers, whatever. Short term, the long term trend is the trend where you have, say, long term investors continue to accumulate shares of something that is fundamentally sound, right? So that's what's going on there. Now, what traditionally has been a problem with momentum indicators is threefold. Number one, the typical momentum indicator is essentially lagging, right? So that can lead to late entries and exits. It gives us a lot more false signals, and false signals, of course, are not fun to deal with because they can lead to losses that are unnecessary. And typically, traditional indicators simply don't adapt well enough or quick enough to sudden market changes. So that's typically sort of the drawbacks of traditional momentum indicators. Now again, markets have changed, right? We have AI algorithms that really have, I don't want to use the word fundamentally, but they have structurally changed the way these markets work. And if we don't adapt, I think it's a very, very difficult road ahead to use traditional approaches to markets nowadays. So the trender momentum indicator is what we're using, and I'll show you how it works right now. Basically, it does several things. It detects momentum in real time, so faster, and it uses very specific parameters to provide accurate signals, like the AMD chart that I'm literally showing here in real time. The advantages are very simple. More timely signals have led to reduced false positives, and of course, increased adaptability when markets change. Why is it so awesome? Well, it's awesome because, again, it actually adapts to the market, and that's really, really important. Now, here's how the momentum indicator actually works. So I'm going to show you a couple of charts, and then we're going to go into the live market, into the current market. If you guys have tickers you want to look at, we'll look at those as well, and we'll take it one sort of moment at a time. Okay, so the momentum indicator gives us three things. It gives us entry points, all at the same time. Entry points, so a buy signal or a sell signal, a free profits target, which is where we want to take some profits off, which we'll talk about in a minute, and a trailing stop. Simple as that. One of the major things where traders trip up over time, and I've now done this for 26 years, so I can tell you the patterns that typically repeat themselves over the course of time, is where they don't know where to take at least partial profits, and they end up turning a winning trade into a losing trade. Let me go into the actual chart here of something that we literally just looked at together. This is a live trade or a live signal. I'm not making this up, so let me quickly get rid of this here a little bit so you can see it better. So this is a live chart. Again, not making this up. This is AMD. You guys can pull it up yourself so you can see this. This is a 5-minute chart, and note this is not about day trading. We'll look at this in a minute. This is just as much about swing trading. Any time frame works, right? If this were a daily chart, it would give us daily bars. Here, I'm trying to show you intraday so you can see that it's actually, I'm not making this up, it's happening in real time. So you can see the buy signal happened right at 9:30 Eastern, right? So that would be like 8:30 Mountain or 6:30 Pacific time, or 3:30 is, I believe, 2:30 p.m. London time, and so on and so forth. And so you can see that the buy signal came on AMD right out of the gate. So what we will do is we will trade in pairs of two, right? We will go in and buy at least, let's say, 2 shares of stock, 2 call options, or multiples of, right? 200 shares of stock, 400 shares, or multiples of call options, but pairs of 2, right? 2, 4, 6, 8, 10, you extrapolate to that. Why? We do that because it's mathematically very important, and this is the math that this is what kind of underpins all of this. It's mathematically very important that we close half the position, so 50% of it, at the green dotted lines. Why? So let's look at this. Again, it's live. I'm not making this up. So if I would have bought, let's say, 2 shares of stock or 2 call options, right, at $431, I would have taken half the trade off, which we did in real time before, if you guys recall, 15 minutes ago, and hit that free profit target, so that I'm in a position where not only am I locking in profits on the first leg of the trade, so half the trade has now been booked profits, but it's mathematically very difficult for me to lose money once that's locked in, because I also have a trailing stop in place. The trailing stop is the purple line. And you can see, like right now, for example, the purple line is actually above the entry point. The entry point to buy the stock was right there where at the beginning of the next bar. It's the same exact philosophy and process on the daily charts. So if you don't like to do day trading, and it's not about day trading, it's about just the process, right? And you can see now the trailing stop is actually above the entry point. Give me a quick yes if this is making sense so far, YouTube or wherever you're watching this, right? This is a pretty critical point. It's a very critical point to understand. So if I'm in this trade now, it becomes virtually impossible for me to lose money. Why? Because again, I've already booked profits on the first half of the trade, which I closed half of right there at the green dotted lines, which happened exactly when we were here. We just started here live at 20 minutes ago. And the trailing stop for the other half of the trade is now above the entry point, as you guys can see. It's pretty cool, right? So this is really critical. Now, we've focused a lot on the intraday stuff. Let me quickly show you, just so you can kind of see. I'm going to quickly go back to the slide deck here, so you can see how this works on sort of this direction on like swing trading charts, and we'll look at it. As I know there's a lot of people that have questions probably and tickers you want to look at, but just to show you, it's the same. It's no different at all on the daily charts, right? So just showing some stocks like CoreWeave, for example, you can see buy signal, free profit target, and then the trailing stop, right? It's as simple as that, 171% rally, and then you get a sell signal. Here we have a buy signal, free profit target. We close half the trade, 67% rally, and then the trailing stop. Cameco, and again, we'll go on and look at this live in a minute, but buy signal, free profit target, 80% rally, trailing stop. It continues on and on. Silver, and we can go on and on. Platinum, PPLT, ETF, buy signal, free profit target, so on and so forth. So, this is a meme stock. So you can see now what we did with our momentum indicator is we essentially were trying to solve two of what we have seen, and I continue to see, two of the biggest problems that causes a lot of traders to fail. Number one is not having a repeatable strategy for entry, meaning just kind of guessing where the entry points are, which is a big issue. And number two is not having a disciplined process for actually risk management, right? Most traders at home, whether they're prop traders or just at home, don't actually risk manage, right? They buy and they sell and buy, and that's it, all in, all out. The risk management process, it's not to make it complicated, but it's to allow us to have a much lower probability of turning a winning trade into a stinky loser, right? It sucks. It messes with our head. It messes with our P&L. So we want to have as little chance of that as possible. Okay. Now, most traders at home have what we call a hope and guess strategy, or as my colleague likes to say, spray and pray. And that's fun. That's fine if it was entertainment, but it's not really entertainment what we're doing in the markets. It's serious, right? So if we don't know where to enter the trade, it becomes very random, emotional. That leads to emotions flaring up, so chasing moves or panic selling, and it's sort of a constant feeling of insecurity. And it just doesn't help stick to an actual process. But what the trender momentum indicator does, it gives us very clear buy or sell signals, and it even gives us the free profit targets and trailing stops directly on the chart. So there's no second guessing. It's right there for us to see on the charts. Now, I'm going to show you one sort of sequence of trades before we go in and take your ticker symbols and look at it together. So what I did here, I decided to take a popular stock at some point back in time. It's not meant to be something that is actionable right now. It's just to give you the context, and then we'll look at this together. And by the way, our AMD setup here, the AMD trade continues to go higher. So if I would have taken this signal, which I didn't this morning because I was preparing with Jeffrey to talk to you guys, but that was the buy signal right there. Free profit target has been reached, and we continue to trail higher. You see the trailing stop continues to push higher right now. So that's what's going on. Okay, so let's just quickly follow the sequence of these trades that have fired off here. This is a daily chart on shares of Adobe, right? So in this case, the first signal we had in the sequence was a sell signal or a short signal. This would have been a time to maybe buy some puts or whatever. And so the free profit target was reached, right? And that means I take half profit. So if I shorted the stock or bought 2 puts or whatever, right, it reaches the free profit target, and we've got the trailing stop along the way. The next signal was a buy signal, right? Free profit target was reached, and then it moves on with the trailing stop. So again, very simple, very repeatable process. The next signal after that was a sell signal, free profit target, trailing stop, and so on and so forth. Now, if we follow this, and I tracked this just so you guys can see this, and the last one here wasn't in progress anymore, but last time I did this, but same idea. So you can see what ended up happening, and this is really big. So I would encourage you guys to take some note of this here. So the first signal, as you guys saw, was a sell signal. It's just to show you the sequence of what happened. A sell signal, and it reached the free profit target. And by the time it reached the free profit target, it locked in a 5% gain in the stock, right? Ultimately, when the second half of the trade was ultimately stopped out, ultimately it ended in a gain of 15.5% in the stock. With options, by the way, and I like to use this a lot with options, you can do a 3-4 multiplier or even a 10 multiplier, depending on how aggressive an option you want to use, right? So a 5% gain on the stock itself is like a 20, 30, 40% gain on an option, and so on and so forth. So you multiply by 3, 4, 5, or in an extreme case, if you're a very aggressive option trader, times 10 or so. What's most important, though, is that once the first half of the profit target is reached, you can see that the maximum potential loss after FPT, which stands for free profit target, was reached. The maximum potential loss with a high, confidence degree was 0. So it was very difficult to lose money once the free profit target was reached. Same for the second trade. In fact, for the second trade, the worst I could have done is make 0.5%, right? And so on and so forth. And in fact, if you look at it right now, like this AMD trade, the worst I could do right now on the second half of the trade is make about 1%. With options, that's, again, 5-6% just on that second leg. And the first leg has already booked its profits. So this is what we mean when we talk about being in a repeatable process setup, right? Now, in the interest of time, what I'd prefer to do, rather than show you more examples, is I'd prefer to go in and actually show you what the indicator actually does. So I thought we would look at Micron Technology, just because I know everyone knows that stock, but I'm happy to take ticker symbols you guys want to look at as well. So what I would like to start off with actually, though, is the S&P 500. So just to show you guys the sequence here, and if you give me just 1 minute, I'm going to quickly adjust something here. Okay, so here is the S&P 500. You can see we received a momentum sell signal on the 26th of February. That reached the free profit target and ultimately went above the trailing stop. The next signal we received, and that's the one that's still technically valid, the next signal came on the 9th of April. All right, so let me show you this. So this came on the 9th of April. We received a buy signal. Then within 1 to 3 days, it reached the free profit target, and since then has continued to go higher. So you can see the trailing stop. I'm gonna zoom in more. The trailing stop, which is this purple line, has not yet been reached. So anyone who took this signal first made some money once it reached the free profit target, and now the worst one can do if one took this trade is, with the trailing stop being the purple line, make about 7%, right? That's the remember, this is the S&P 500. That's a big move. With options, this would be a 3, 4, 5x stat. Okay, just to kind of put that into perspective. Does that make sense to you guys? it's a really big deal. We can look at, anyone is wondering as something like SOXX, which is the semiconductor index. People always like to know, did it catch all these latest moves? Yes, it did, right? So again, momentum comes in. This started on the 7th of April. And you can see what happened so far. This ETF is up 48%. This is one of the semiconductor ETFs. And again, you guys can type in ticker symbols if you whatever you want to look at. We look at AMD. We looked at earlier. We have that intraday trade, but the latest signal in AMD came on the 1st of April, and you can see we have so far are up about, the signal is up 112%. Again, you can see it reached the free profit target very quickly, actually literally like the next day. And so far the trailing stop is, so this is my point, right? So if we're talking about risk management, buying the stock here, technically, yeah, here, the worst one could do now is make on that second leg about 85%. With options, 85 times 3, 4, 5, 6, even 10, that's a huge freaking move. Just to kind of put that into perspective. Same thing on like the NASDAQ 100, right? So the point is momentum can be detected, and it can be detected in real time, more so than ever, because the algorithms chase each other's tails, right? I had dinner last night with someone who's very well versed in AI, specifically, not necessarily in trading, but just in general, and trying to understanding the math behind it more and more verifies what we're seeing factually taking place in markets, right? So we look at the NASDAQ 100, and again, this is a daily chart. This could be an intraday chart. It doesn't really matter what the time frame is, but you can see the buy signal came in on the 9th of April. The free profit target was reached, and it's still well above the trailing stop. So just one heck of a trade. Let's see here. What about like Microsoft? Okay. Let's see. So Microsoft, let's just go back and go look at a couple of signals so to give you a little bit of perspective. So Microsoft, let's go back to just so you can see that it's more than just the past few days. So this is Microsoft, and you can see Microsoft gave us a sell signal on the 5th of November, right? And if we just go from, like, the easiest way to start with this, and this is what I always teach people, just go from signal to signal, right? In other words, if I would have bought some puts or shorted the stock there, close half the trade at the free profit target. That's the most important rule. But then keep the rest on until you get the next buy signal, which happens on the 15th of April. And so far, we have a new buy signal, and we've reached a free profit target, and it's still a valid setup. We can look at something like ARM. I know a lot of people like these fast-moving semiconductor stocks. ARM, this is semi stock, so you can see buy signal came on the 15th of March, very quickly reached a free profit target, meaning close half the trade. And the trailing stop is, as you can see, still in place. So far, this stock is now up about 102% since having reached the momentum buy signal. Does that make sense to everybody? Can you guys see? Oil, right? That's always a big topic, is oil. What about, does it detect momentum in something like oil, which of course continues to float higher with the geopolitical tensions and the inflation sort of backdrop? Well, the U.S. So first of all, we talk about how signals can be detected early. So the U.S. OETF gave us a buy signal on the 9th of January. I believe the Iran war started in early March, so around there. So at the time that happened, oil was already up 16%, and maybe by the time people reacted, it was already up 25, 30%, right? So this is, again, what we keep saying. AI and algorithms is able to front run these signals, the news, excuse me, and even the people that are buying, that are insider buying. Is it going to happen 100% of the time? No, I can't give you guarantees. Obviously, that wouldn't be legal nor honest. But did it do it here? Did it do it in all the examples I showed you? Is it doing it in all over the market? Yes, it absolutely is. And this is just the fact, right? So this is a big deal, and I think using momentum in our favor is critical. We can look at something like ExxonMobil, which I know has been a bit choppy of late, but we just received a new buy signal. So you guys can see how this works on ExxonMobil. So we received a momentum buy signal. This is a daily chart, right? We looked at the intraday charts before. We can go back to AMD, by the way, continues to hold up, right? So this is the intraday trade we tracked before. It's reached the free profit target and continues to ascend. So this is ExxonMobil. You can see we received a buy signal on the 23rd of October and reached the free profit target. And if all I do is go from signal to signal, right, which is what I suggest when people start with this, that's when Hallett moved. Then we received a sell signal, right, reached the free profit target, and now a buy signal. Okay, so far ExxonMobil it's reached the free profit target already as well. So that's just a sequence of trade. Nike might be one just to kind of give you guys an idea of, does this work on down markets as well? Of course, it's momentum, right? So Nike, you can see in fact, let me quickly adjust this to this. So with Nike, you can see we had a sell signal. It reached the free profit target and the trailing stop along the way. So again, the way I suggest people use this is by going from signal to signal. So if I would have bought a put option there, definitely and always ironclad rule, close half the trade at the free profit target and let the rest of it go until we get the next buy signal. I mean the up arrow. On any platform, we can set this up where we get an email alert or a text message or something like that sent to us when there's a new signal on any of these tickers. So if you like to follow the NASDAQ 100 intraday, for example, that can be set up so something can be sent intraday. So signals can be sent also intraday, right? So we looked at the ARM before. I can also show you this on, like, for example, ARM, intraday. I know we've been looking at some intraday stuff here before. So just to give you guys an idea, just to track another one so you guys can see how this works. So this is intraday, literally right now on a 5-minute chart. You can see we had a buy signal, right? It very quickly reached the free profit target right there, right? And now it continues to trail higher along with the trailing stop. Now, one of the questions I get a lot is, how do you actually find these trades? We quite simply look for the big movers, right? And that way, and actually Jeffrey has a scanning feature for this for swing trading, which he's going to show you guys in a few minutes. But on an intraday basis, I like to track the NASDAQ 100, some of these big mover stocks like the semiconductors and things like that. I don't want to make it too complicated intraday, so I like to focus on some of the the obvious names that are kind of in the news, and that's very simple to execute. Now, before I pass this on to Jeffrey, I want to just tell you the Trender Momentum Indicator is, among other things, available for MetaStock, and Jeffrey's going to show you this. We are offering you access to the Trender Momentum Indicator right now, which is available for other platforms as well, like TradingView and NinjaTrader and Thinkorswim. But what we're going to do right now in partnership with MetaStock is actually knock off 80% of the fee. So it's $397. We are giving you full unrestricted full 12 months access for just $397. It's a bit of a joke that we're offering it this cheaply, but here you are. Along with that, you also get access to a full year of our we send out trade alerts and our favorite ideas using the Trender during the week. You get all sorts of goodies like live member sessions we do each month. We give you access to our 3x triple play strategy, which is 3 additional strategies we teach you: a short-term, a swing trading, and a long-term strategy. We give you checklists so we know exactly how to use this. And of course, our member sessions. Our next one's actually coming up later on this month, and you get an email when that happens. So Trender Momentum Indicator, you can grab it right now. All you have to do is go to www.metastock.com/trender. That is the only thing you have to do. Go ahead and grab it there. You can use credit cards and PayPal. There's probably also, I think there's also a phone number that you can call MetaStock if you need any help. But the easiest thing to do right now, there you go, the phone number, Jeffrey just put it in, 800-882-3040, metastock.com/trender. Again, it's a full year. It's 80% savings right now in partnership with MetaStock. So make sure and you grab that before the session is up, because after that, basically it freezes down. So a couple of bonuses so you can see. Again, I talked about the triple X play strategy. So these are 3 additional strategies that we give you access to, that you can learn about, and we'll of course meet monthly. Actually, we meet in live sessions. You also get checklists and some very specific plans of how to use the indicator. It's very simple, so you don't have to worry about this being difficult. In fact, our next session is coming up again a little bit later on this month, and in that session, we are going to not only do live trades, but of course also teach you exactly how to use the indicator, how to scan for things. Jeffrey's going to show you how to scan for it here on MetaStock in a minute. As well. So really all you have to do right now, if you want to grab it here at $397, which is 80% off, thanks to the great partnership we have with MetaStock, is you go to metastock.com, so www.metastock.com/trender. It's as simple as that. And if you guys have any questions, I'm happy to stick around. I'd like to pass it to Jeffrey, just so he has a few minutes to kind of show you guys how this works, more specifically in the scanner and things like that on MetaStock. Jeffrey, I don't know if you're here yet, but if you're ready.
I never left. We do have a couple questions, though.
I'm sure you didn't. Yeah.
Owen in YouTube wants to know, could you tell us what the blue and purple lines are? Are they exponential moving averages? What are they?
Yeah. So they are a moving average reference point. Okay. But more importantly, and we'll teach you this in the member sessions, more importantly, they're essentially your trailing stop, right? And we'll teach you this, particularly the purple line. We just talked about it for 50 minutes, right? That's the most important thing about this, just not to get too hung up on, the most important part is the free profit target. And those are mathematically calculated in a very specific way, right? That's the most important thing. Yes, the signals are important and they're mathematically sound because we know so what we're doing basically is when we get these signals, what we are following is a specific couple of inputs that we know that algorithms are looking for to buy or sell. And because when one big algo gets that triggered, other algorithms follow it. It's all AI, right? The markets are all AI driven right now. So that's one of the things right now that is working so well in the markets, is because AI basically is nothing more than a big sort of, circular chart chasing thing. Momentum is incredibly easy is the wrong term, but it's clear to detect with the right tool. In my case, using the Trender momentum indicator, right? So yeah, that's maybe the best way to answer that question.
Right on. Another question we had was from Robert. He wanted to ask a little bit about how you come up with a target.
Yeah, it's a good question. Again, more or less the same answer. So what we're doing is we have it's a volatility adjusted profit target and stop loss, right? So we basically have a swing trading mode and a day trading mode, and even a custom mode. And based on the volatility of the asset, that gets adjusted. And that's a big part of what we talk about in the member sessions. The next one coming up in a week or two here in the month of May. And you'll get an email as soon as you join on when that is.
All right. Last question we've got, at least so far. Don said, great session, Serge. At some point, can you tell us how it works on the real-time S&P or Qs on
Sure.
5 minutes?
Yeah, I can show, and that's exact. I mean, I can literally show it to you right now. So this is a live chart here right now on the. Give me just 1 second. Let me bring it over. And again, you guys can cross references if you want to. Like, I'm not making up stuff. So this here right now is the live chart of the Nasdaq 100. Like, this is live. Buy signal, free profit target, which was reached, there, and now we're continuing to go higher. So that's factually how it works. And again, I'll teach you all more the details. It's not complicated. It really isn't complicated, but it's the process. Is what's so important here. So yeah, I do a lot of futures with this stuff, right? It's momentum, be that S&P futures or treasury futures or commodity futures, things like that. So, and you can see right now it continues to tick higher here once as the free profit target has been reached. So hopefully that helps. Good question.
Perfect.
So it's 12 months access for 397, and I know I want to pass it on back to you now, Jeffrey, so you can kind of show them a little bit how to use it on MetaStock as well.
Right on. I'm going to go ahead and take it over. Thank you very much, Serge.
Thank you, sir. It was great to be here, and thank you all. I'll see you guys on the inside, particularly in the next member session coming up soon.
All right. Thank you, sir.
Thank you.
Go ahead and do this. You should be able to see my screen now. And it's a box. Let's go over to MetaStock. I'll make sure that's sharing as well. I just randomly pulled up Intel. Don wants to know, does the signal appear after the bar is complete? And I actually know the answer to that, so I'm glad you answered. This signal will draw at any point in the bar where the signal happens. So the thing that you need to be careful about is if the criteria that led to that signal goes away during that live bar, which will happen, that signal may disappear before the bar is complete. So what I would recommend that you do, Don, and I hope this is clear. I hope it's clear, but what I would recommend that you do is wait till the bar is complete to exercise that buy signal. Once the bar is complete, it's not going to repaint. So in other words, if you're on your next bar and you've got a buy signal, that buy signal will not go away. Did that make sense, Don? Let me know in the comments. Okay. Let me show you how this works a little bit on MetaStock. There's a few things I want to show you. I don't have time to do a full-blown demo, but there's a few things. There's some highlights that I definitely want to talk about. On Intel, back here, I'm just going to zoom in on this chart. You got a buy signal. I want to show the commentary. The expert advisor is drawing the buy signals. It's telling you that you're bullish. It's telling you everything that you need to know. In MetaStock, we do have a commentary functionality that will help you understand when you get the signal exactly what's going on. So I did click on the bar for this buy signal, and you'll notice there's an arrow that came up right on that bar. The reason is I wanted to be able to show you this commentary. So right here it says the TST trender indicator is designed to take advantage and give signals. It's currently logged. Here's your profit target, and here's your trailing stop. And those will update on a day-to-day basis when you get a signal. It does give you a little bit more information, but anything that's kind of important or pertinent to this particular trade, in this case, it's really simple. It's straightforward. It's just what is your target and what is your loss. Those are also going to get drawn on the chart as well. You can kind of see where the levels come in here. Okay, so that's one thing I wanted to show you. I like that. I do like that it's fully customizable, so you can go in and change the way the calculations are done, the look-back periods that are being utilized, even the method at which it works. But what I like most of all is how easy it is to run an exploration. So I'm going to go ahead and click on the scanner right here. And I've already run this just in the purpose of kind of keeping on time. Well, now about 5 minutes here. I ran this just so I could kind of show you the results. One of the things I love most about MetaStock, I've talked about this extensively for 3 days in a row now, but I love the ability to go in and say, here's what I'm looking for. Show me just what I'm looking for. So, and that can be data that's all the optionable stocks. It could be all the ETFs. It could be all the stocks. It could be all the Canadian stocks. It could be whatever market you're in. There's several hundred exchanges that are available with the data that we get. So in this particular case, just to give an example, what I did is I said, okay, today, using currently today, and this will work if you have the DC version of MetaStock or the real time, show me what's currently triggering a signal today. So I ran the swing mode. There's 2 modes. There's a day trading mode. There's a custom mode. Actually, there's 3 modes, which you can go in and adjust all the variables for. And then there's a swing mode. So I ran the swing one. That's the one that's designed to be used on a daily chart. I ran it against daily data. And what I've got, and I ran it against the S&P 500 here. Okay. The report that came back, it didn't take very long to actually execute. The report that came back is going to basically show me all the stocks that had a long or a short. So GEV had a short. Now, this may not be the case. I ran it at the top of the hour. It might not have a case. We'd want to look at it. And like I was saying before, we'd probably want to wait till the end of the bar to make sure that that signal still exists. But right now, as of the time I ran the scan, you have a short on GEV. That's why there's a -1 here. If I wanted to focus in on the longs, we've got MSCI, American Tower, CP, Expanded Energy. And I can open up any of these charts. I can scroll through them. I can identify which ones actually I like the best out of what's giving us these signals. So, and probably not this one. Let's take a look at the next one real quick. Okay, and here we've got the one that's generating buy signal, or at least it was earlier. Okay, that's how it works. It's very, very straightforward. It's based on looking for the momentum. It's based on kind of giving you the stuff that you need there. So here's the box. I'm just going to recap exactly what's included with it. In terms of what's included in MetaStock, you're going to get the indicators that you need to run it. You're going to get the systems. When I say systems, I mean explorations, I mean expert advisors, the ability to go in and kind of play with them. In addition to that, they're testable. One of the things that I like, since they are completely customizable, not only did we put a swing trade and a day trader mode, I put in the ability to go in and back test tons of different variables. So if you're looking to actually see maybe some ideas on what works best, there's an optimized indicator that you can go in that's going to run a bunch of different values and tell you what works best on whatever kind of a data that you want. So that's included. I do, in the training that's included as soon as you purchase, I do include exact instructions on how to run the test, how to look at the results, how to change that indicator to match the results if that's what you want to do. So, and that's one thing that's also pretty unique about the MetaStock version, is the ability to do that. So I love this thing. It has clear entries, it has exits, it has stops, everything that you need to kind of implement there. So the commentary is listed out there. Serge is going to throw in access to the 2% club, 12 months of trade alerts, risk management plan for all trades. I mean, just look at all the stuff you're getting for like $300. Step-by-step tutorials on how to use TST, all of this stuff, live monthly coaching sessions, the triple play strategy, all of this stuff is included. We back it with a money back guarantee. This is the recorded training. As soon as you order, it's available for you. You can go watch it. I'd recommend you watch it and then start to play with it. They're not long sessions. Serge goes for about maybe 40, 50 minutes. I go for maybe about an hour. I get long-winded sometimes. Go through this. So it's really going to kind of help you jumpstart that process of really getting into it. So normally $19.97 is the price that you'll pay for it. We've got the conference special where we're going to knock that all the way down to $3.97. I'm going to back it with a money back guarantee. If it isn't helpful for you, you can just cancel. We'll give you a refund, but we're betting that it's useful for you. And so we're going to give you this low risk, high reward opportunity. Something I bet you always wish you got with every trade. So you can do this. You can give us a call, 800-882-3040. If you have questions, if you want to see some more chart examples, you can go to metastock.com/saleschat, or you can go to metastock.com/conf-promo. So Don says, I think that question, so it works like other indicators I've seen. Yes. Okay, cool. He said that makes sense. Very good. As we move on to our next speaker, I want to say thank you for being here. It's good to see you. I'm sure you look great today. But I also want to thank our sponsors. Stocks and Commodities Magazine is going to be the first one, the one we think right now. Stocks and Commodities Magazine is such a great magazine. Every month they're going to send you articles. You'll have access as part of your paid subscription to 17,000 plus trading article archive. They've been publishing since 1982. I talked about this a little bit, but it's something that kind of I've been thinking about lately. And I really think in life you're either getting better at what you're doing or you're getting worse. And I believe that's almost every aspect of your life. You're either improving, or you're not stuck in neutral. The thing I like about Stocks and Commodities magazine is if you subscribe to it, I believe the annual cost is like $100. They're going to send you a magazine every month that's going to have really good articles on what's going on in the field of technical analysis. It'll help you stay sharp. So a big thank you to Stocks and Commodities magazine for sponsoring the event. We really appreciate them over the last, gosh, we've probably been having them sponsor the event since 14, 15, 20 years now. Like, time flies, right? Okay, so that's what I'm going to say about that. All of our offers today, if you have questions about any of them, you can find them at metastock.com/conf-promo. If you want to talk to us, if you have questions, we'd love to answer those for you. We'd love to send you other info, whatever you need. 800-882-3040, metastock.com/sales chat. And all of that information is in the chat. So our next speaker, I like to call the mad scientist of indicators. Daniel Sinnig has done a lot of work over the years to optimize indicators. He's done a lot of things. I'm like, well, that's a good idea. I wonder how Daniel came up with that. Daniel, how did you come up with that idea?
Hey, guys.
Hey.
Hey, Jeffrey. How are you?
I'm good. How do you come up with your good ideas, Daniel?
Oh, a lot of trial and error. So it's, you try to reason with the markets and what you think may work in terms of signals and indicators, but oftentimes it does not. So you have to go back to the drawing board and redo the work and test again, and eventually come up with an edge that actually does make a difference. And this is has been our recipe for the longest time. It's a lot of back and forth, optimization, iterations, and so forth, until you have something that is actually giving you an edge in the market. So, yeah, you have to put in the work.
I did make you the presenter. Before I let you go get started, I hope you can help me with a small task.
Okay.
I've got, as you probably know, we give away prizes throughout the session this week, and you just have to register. So if you're watching on YouTube, click on the pin tab. It'll take you to a registration form. You fill it out, and you might win a prize. The prize that Daniel's going to help me give away is a book by the late, great Steve Bigelow. This one's called Candlestick Profits, Eliminating Emotions. Steve was a great partner of MetaStock, and we have books that we're going to give away. And what I need from you, Daniel, is I just need a number between 2, because there's a header row, and 5,123.
All right, 1979.
Ooh, is that your birth year?
Yeah.
Okay. It sounded very, very similar to my birth year, so that's why I was kind of thinking that might be it. Okay. That is for Jim F. in the U.S. So I'm going to send him Jim, if you're watching, you just want a prize. Well, if you're the right Jim F, I guess, right? But I'm going to send you an email here in just a minute to confirm your address. I'm not a scam. Just send me your address, and I will go to the post office and send this to you. Daniel, it's your turn. I'm going to get out of the way. We are starting about 5 minutes late. Don't worry about it. Take the time that you need.
Perfect. Yeah, great. Well, thanks, Jeffrey. Thanks for the introduction. And yeah, also from my side, welcome to this trading conference. Thanks, MetaStock, for putting this all together. It's always a fantastic event. Many great speakers out there. Serge was just here before me. I know Serge for many, many years, at least 10 years. Great guy. I saw Jeff Tompkins speaking, Johnny Seville, and so on and so on. Wow, what an event once again you guys have put together. And I'm humbled and honored to be here as one of those speakers. All right, so what I want to talk about today is a breakthrough in my trading. It happened a couple of years ago, and it is thanks to an indicator, actually a set of 2 indicators, which we have developed over a long period of time and refined and optimized, and it has completely taken over my trading. It has transformed the way I trade from completely chaotic to some degree and too much complexity and overwhelmingly complex and complicated to something which is absolutely simple, straightforward, and it brings you clarity to your charts. How this works, we're going to discover together today, step by step. And please don't get thrown off by this very complicated title. In fact, in hindsight, I probably should have refined it and simplified it a little bit. I called this presentation the hidden landmarks of price action, trading with liquidity zones. Sounds complicated. You will see in a bit. This is actually very straightforward, very easy to replicate on your chart, and very easy to conclude what may happen with price in the future. Of course, just as a reminder, trading is to most degree and to a large extent forecasting where and price will be in the future. This is what trading is all about. And these two indicators, which I will show you today, which will help you to uncover these hidden landmarks, these indicators will help you to forecast what price may be doing in the future. All right, now, before we get into all of this, let me ask you guys something else. Let's break the ice just a little bit. So this is from a famous movie, The Wolf of Wall Street. And the guy here on the right-hand side, he had this quote in the movie, and he said, "Nobody, I don't care if you're Warren Buffett or Jimmy Buffett, nobody knows if a stock will go up, down, sideways, or in circles." And my question to you out there is, do you believe that is true? Do you believe that nobody can really forecast with some degree of certainty what may happen with a stock in the future, what may happen with price in the future? If you believe that is true, I believe you should not be in this conference today, because I believe every presenter of this MetaStock conference, including myself, believes this is not true. It is possible, given the right tools, given the right logic, and given the right indicators, it is possible to forecast to some degree of certainty. There are no guarantees in trading, we all know this, but to some degree of certainty where and when price may be in the future. So I believe this is not true. I'm going to prove you today that it is possible to do this given the right indicators and the right mindset. So we're going to ease into this. Now, you may ask, hey, who is this guy that's talking about the Wolf of Wall Street and forecasting price in the future? Well, let me quickly introduce myself. So my name is Daniel Sinnig, and I'm one of the founders of tradingindicators.com. And as our name suggests, we specialize on developing innovative trading indicators. We've been doing this for many, many years. We've been in the business for more than 10 years, and we've built literally thousands of trading indicators for clients all over the world. So we're headquartered in Montreal in Canada, so we have clients in Canada. Most of our clients are in the US, but we also have clients in Europe, in Australia, South America, really all over the place. It's been quite a journey. And, especially considering where I am coming from, because, and I guess what sets me apart a little bit from the educators who perhaps spoke before me, my original career objective was not in the world of finance. Instead, I always wanted to become a professor in software engineering. This was my early career objective. And so I pursued it. So I went through all the levels. I did my master's, I did my PhD, my postdoc. I started doing research at various universities in and around Montreal. But you know what? In all these years where I was in research, I also was fascinated by the world of finance and the markets and how one could make money in the markets. So I started to trade on the side. But as you start on the side, or as you start off trading, I should say, you tend to make all kinds of mistakes. So you oftentimes overtrade, you revenge trade, you take too much risk, you trade when market conditions are simply not right. And I did the same mistakes. And after donating quite a bit of money to the markets, I came to the hard realization, oh boy, trading is not as straightforward as I thought, and I need help. And for me, needing help meant I need better tools, which will help me make better trading decisions. And being a software engineer and a programmer, I basically rolled up my sleeves and I started programming. And the very first indicators I've ever written, they were exclusively for my own purpose. And once I realized, hey, these tools are actually making a difference. These indicators are actually helping me make better trading decisions. I thought, hey, perhaps others can benefit from these tools as well. And this is really how the story behind tradingindicators.com started. All right, but enough about us. Let's go on with today's topic. So before we do this, a quick reminder that trading, in fact, does contain also risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital. which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's get on with today's topic. And I'm going to end this presentation with a conclusion which completely transformed my trading. So please stay tuned for this. But before we do, let me talk about something theoretical, which will become very practical in a second. I'm going to talk about landmarks on every chart, because what we have discovered is that every single chart, it doesn't matter what it is. It could be a tick chart, it could be a daily chart, it could be a stock chart, an FX chart. Doesn't really matter what it is. Every single chart has what we call so-called landmarks, which are certain areas of price which have forward-looking properties. In other words, to which price will react in the future. That's very important. Yeah? In the future, in a certain way. If you can identify these landmarks, you can come up with very interesting trade setups and trade ideas. But how this works, we're going to ease in. All right, but let me backstep one more time. Now, if you look at the price chart with nothing on it, just pure price action, charts can be and often are completely chaotic, unpredictable. There's almost no systematic way to analyze this chart on what may happen next. Look at this one here, where an uptrend, you can see it here, shortly reverses into a downtrend, only then to reverse once again into an uptrend. Almost no discernible pattern on this chart. Very hard to predict, and it's kind of almost a gamble to try to forecast what price may be doing in the future. You probably will agree with me when you look at this chart. And to make matters worse, things tend to be even more chaotic, even more unstructured once you go to the very small time frames. Like the 5-minute chart here, you can see it here, down, up, down, up, down, up, sideways, down again, and so forth. Almost no discernible pattern. But here's lesson number one, and this has been an eye-opener for our trading. Once you zoom out, once you go to the higher time frames, for example, from the 5-minute chart here to a 4-hour chart, things tend to become clearer. That is a fact about any market. Once you zoom out, once you go to larger time frames, things are more structured, less chaotic, and they make more sense. Look at this chart here. This is the exact same symbol, just zoomed out. It's much more structured, less chaotic than on the 5-minute chart. We will use this concept of zooming out, going to higher time frames in just a bit when we talk about the indicators. So stay tuned for this. But let me go back one more time to the idea of landmarks. So the idea is that every chart has these certain levels of price which have forward-looking properties to which price will react in the future in a certain way. And once you know where these levels are, and once you understand the logic behind them, you can make a prediction of what price will do once it approaches these levels. Now, let me give you some examples. So first off, before we do, what could be these landmarks? Well, these can be caused by all kinds of events which happened in the past. And the interesting thing about technical analysis, I find it super fascinating, is that events that have happened in the past, certain events, not all of them, but certain events that happened in the past may have relevance in the future. Here's an overly simplistic example of this. Look at this event here, for example. It happened to create an historical high, an all-time high at the time, perhaps a couple of years back. Price then retraced down and pulled back and spent a lot of time below this level. But then in the future, maybe a year later, maybe 2 years later, I'm not sure what the time frame of this chart was, price reapproached this level and bounced off this level towards lower price levels again. Under certain circumstances, this is a predictable move. I'm going to teach you this today, where price will approach a landmark which happened in the past and will react to it in the future in a predictable manner. Another example, look at this series of swing lows here. They happened once again, perhaps several months ago. Low point here, swing low here, price bounced off from it. Then in the future, Once again, we're moving into the future. We're moving out a couple of months, maybe years. Price reapproaches this area of swing lows, which happened in the past, and bounces off this level towards higher price levels. Once again, this can be, under certain circumstances, a predictable event in the future. And once you understand this, you can create trades around this. We're going to get to this in this presentation. All right. Now, these landmarks, so we're not the first ones who have discovered this idea. And in fact, these landmarks, they have different names. They are called like support levels or resistance levels or liquidity levels. It doesn't really matter what you call them. What is important is that you're able to identify them and to have the logic in your head to predict how price may react to these levels. But for some of you who are asking, why is that? Why do you have these? Why do you have these levels of price, these forward-looking properties in the future? Well, this all goes back to excess of demand and supply. It goes back to big money orders stepping in at certain price levels, preventing price from going further down, and these are kept forward-looking. And the same for resistance. Big money sell orders are being placed at certain price levels, preventing price moving further up, and price will drop as a consequence. Now, we retail traders, we smaller traders, we don't have the buying power to move the markets in that way. Impossible. So the ones who have the buying powers are the culprits, the institutions, the big money traders, the ones who can move the market in a way, who can submit these large orders. But the interesting thing is that we, as retail traders, what we can do is, while the big ones, they are calling the shots, they're creating these levels, we can follow the patterns and profit in the process. And this is the idea of today's presentation. Now, I will get to the charts in like 5 minutes, I promise you, but there's one more thing I need to cover. And the idea is, hey, if we can spot these levels, we can find promising trade setups. But what are these trade setups? What kind of setups can we find? Well, let's take a look. So here are my 3 favorite trade setups I trade all the time. I trade these setups when it comes to day trading. I trade these setups when it comes to swing trading or longer term trading. These are my 3 favorite setups. Setup number 1 is called the bounce trade. So what is a bounce trade? All right. So the idea is that price comes from the top. You can see it here a little bit. It comes from the top down to a key level on the chart. One of these landmarks on your chart. It comes down to it, and under certain circumstances, one may predict that price will bounce off this level. That's where the name comes from. Bounce off this level towards higher price levels. That's tradable. And this setup is further supported, especially if the overarching trend is also bullish. The trend is your friend. We all know this. Yeah, that the likelihood of a trend to continue is simply greater than the likelihood of a trend to reverse. That's a market fact. So if an uptrend, for example, comes together, a bullish trend comes together with price retracing down to a key support level, well, then now you have 2 things in your favor. We're approaching support, which may create a bounce towards higher price levels, and we're bullish to begin with. 2 things are coming together in support of a future price move towards higher price levels. This is our bounce trade. A great setup. We're gonna have lots of examples of this today, and a setup which is a great reward to risk ratio. Look at this example here. Where would you put your stop loss? Well, you probably would put it directly underneath the support level here, not too far off. Why? Because if we actually lose this level, if price actually goes below this level, then this setup is no longer valid and we want to get out of this trade. So a setup which has a very close by stop loss and potentially a quite far away profit target. Great reward to risk. All right, so this is setup number 1. I trade this all the time, and I promise you today we're gonna have some very interesting examples of exactly this setup in the market. Stay tuned for this. Setup number 2. All right, now in life, but also in trading, nothing lasts forever. Eventually, a level will be broken. Eventually, a support level, for example, will be broken to the downside. But when this happens, an opportunity to us as traders opens up as well. Why? Because in this case, under certain circumstances, we can then take the breakout trade. What is a breakout trade? A breakout trade happens when a level is broken. Because then our prediction is, okay, now we broke the level, we lost the level. Price will continue in the direction of this breakout for quite some time afterwards. Look at this example here. We lost this red line here, a support level. And the idea now is, hey, we're going to take the breakout trade and bet on the fact that price will continue in this breakout direction for quite some time, in this case, the short direction. You can see it here, a nice follow through happens here. This also is amplified if the overarching trend is bearish at the same time. So once again, two things are coming together. Trend direction with a loss of a support level to the downside. Two things are coming together, predicting a future price move in the short direction. All right. And then we have one more setup, which I also trade all the time. I'm going to show you in about 3 minutes that the IWM, the Russell 2000 ETF, has exactly the setup right now. So this third setup is this one here. I call this the breakout retrace setup. Sounds complicated, it's actually quite simple. What's happening here? So here, two things are coming together. First, we need a break of the level. In this case, resistance, this green line here, is broken to the upside. Okay, you may think, great, breakout trade setup, especially since the trend is bullish too. And you would be right. Price moves initially up in the direction of the breakout, but then it stalls out and it reverses down to where? Exactly to the broken resistance level, which, however, right now will be acting as what? It will be acting as support. And we have heard this before. Once a level is broken, its role will change. Once resistance is broken, its role will change and flip over to become support. And when this happens, this can be a great launchpad for another move to the bullish direction. Support will prevent price from moving further down. The trend is bullish to begin with. And this can be a launchpad for another move to the upside. I told you the IWM right now has exactly this setup. I'm going to get to this in a second. Now, one more thing before we get to the charts. How can we spot these levels? Because you may say, hey, this whole system works or fails depending on whether we can accurately spot these levels on the chart. And you will be absolutely right. This is why we have spent years of research and developing and optimization and refining to develop an indicator which specializes on exactly this, which specializes on finding these key levels on your chart to which price will react in the future in a certain way. And this indicator is called Liquidity IQ. Complicated name perhaps, as you will see, an indicator which does one thing and does one thing great. It finds these key levels on the chart to which price may react in the future in a certain way. It's the only indicator which is on every single chart I open. I cannot trade without it anymore. It is so essential for me to know where these levels are. I also call it my virtual charting assistant because it helps me do an instant technical analysis of your price chart. Now, no longer theory. Let's get practical. Let's go on to the charts finally. And by the way, guys, if you have any questions, don't be shy. Put your questions into the Q&A box or chat box of your webinar tool. All right, so I'm going to switch over now to MetaStock if I can find it on my chart. Give me one quick second. Where do we have it? There we go. All right, MetaStock. Okay, so here we have a chart of the S&P 500 on the daily time frame. To start with, this indicator will work on intraday just as well, but let's start off easy with the daily time frame. So what can we see here? I'm going to go back a little bit in time, about 1 year back to the tariff crisis, as one may call it. So what did we see here? Well, markets were at all-time high levels, but kept stalling out a little bit. And you can see this here. If I zoom in just a little bit on my chart, just one quick second, you can see it here. Prices came up, but then stalling out became flat. And you can see this little series of wiggly lines on your chart. This is the first clue that, hey, maybe we're going to see some resistance here. What happens afterwards? Price couldn't really break this price level here and it retraced down. We had this like sharp retracement, this sharp pullback here all the way to a green line here on the chart. And if we go back just a little bit further on our chart, we can see, okay, this green line used to be a resistance level back here in April or no, in January 2024. It was resistance. It was broken in that January, and prices went above this level. But then later on in time, prices came back down, like with magic, down to the level, almost to the cent, to the T, and bounced off this level towards higher price levels. And this created a bottom of this big retracement here, and price recovered afterwards. And let's see what happened afterwards. The price came then up again with a couple of swings. Here another swing to the downside. And at this time, price stopped exactly at this red level here, which is a support level. Price stopped there, bounced off this level, and then continued trading to higher price levels. Eventually, we broke this green line here. This used to be an all-time high, this green line here. And we broke above it. We broke above this resistance level, and price then continued further in the upside direction. This is our breakout trade. You can see this arrow here. Zone break. It says it here. And as you know, once the zone break happens, this can be a precursor for a much a bigger move afterwards. And see what happens afterwards. So then we approached another high point here, another series of squiggly lines like these ones here. I'm going to explain these in a bit later, which can be a sign, hey, we might be stalling out. You can see it here. This was earlier this year in December and January. This year, prices stalling out here. Then the Iran crisis happened. Prices came down, another V-shaped move. Eventually, we recovered. You can see it here. Let me just zoom in a little bit. We recovered. Price broke above the former resistance level here with this arrow once again. And then we have the breakout trade. Now we're trading above this former resistance level ever since. So this is the idea of the indicator. It will give you these key levels on your chart. And I will teach you in about 5 minutes how you can make sense of these levels, whether you can predict a breakout or perhaps a bounce of a level. What can increase this likelihood? We're not there yet, but we're going to build up to it. Okay, let's change it up. Let's go to the QQQC NASDAQ 100 ETF. Pretty much the same picture here. Of course, the SPY and the QQQs are often very much correlated. So when one goes down, the other one goes down, one goes up, the other one goes up. But also here, we have the same pattern. Price came down, stopped at this reddish line here, bounced off, recovered, we broke the level, nice breakout move. Same pattern here in the during the Iran crisis. We eventually recovered from this pullback. We broke above resistance and a nice follow through afterwards. So very similar picture. But now let's change it up one more time. Let's go to the IWM, the Russell 2000 ETF, because here we now actually have a setup in this very moment. Because here right now, these setups, they happened weeks ago. Of course, it's serious. You want to know what's happening right now. What could be of interest right now? Let's check out the IWM. Also on the daily time frame. We're going to go to the smaller time frames in a bit. What do we see here? All right. So let's just focus on the price action, which happened recently. Price broke above this green line here. And by the way, these lines are not repainted. So it broke above this green line, this resistance line, back in April 16. We broke above it. That was an initial breakout move, a shallow one, but nonetheless there was a move. Price retraced down to the broken level, and almost like magic, it stopped at this level. This is our breakout retrace trade. Since this level was broken, it will now act as support. Price stopped there and bounced to the upside. Another nice bounce move here. Price stalled out eventually and came back down. And where, once again, did it come down to? This green line here, acting as support, preventing price from going further down, and price bounced off this level towards higher price levels right now. And this morning, I looked at the market. I saw exactly this setup here at 9:30. Price open here right in the vicinity. And look at the nice bounce move afterwards. I believe this is going to continue higher. I believe there's a good chance we'll see all-time highs in the IWM soon. And I'm not a fan of chasing a move. It's a bit too late now. It would be much better, but lower here. But I think it's not completely too late yet to potentially, put your toe in the water and anticipate price is going to bounce off this level towards higher price levels. This is our breakout trade with a retracement in between. All right, let's change it up one more time. Let's go to NVIDIA. NVIDIA's earnings today. Yeah, in fact, NVIDIA made all-time highs recently. But let's see what happened here. Let's look at some prior price action first of all. Look how prices struggled with this green resistance level here. Barely were being able to get over this level. Eventually, we bounced off the level, onto this level towards lower price levels. Where did we stop? At this red line here, support level. Price stopped here, moved up. Eventually, we broke this level. Nice breakout move. And now what happened? In more recent price action, price once again tested this green line here, this resistance level, bounced off initially. Now we got our break a couple of weeks ago. We made all-time highs in NVIDIA, came back down into the vicinity of this former resistance level, now acting as support, and prices are bouncing up higher again. And of course, with earnings today, it will be very interesting to see what will happen with NVIDIA. Of course, there are lots of, the expectations are humongous when it comes to earnings of NVIDIA. And of course, only really surprises will shake the markets, but there are many people out there that say, hey, even though we are quite extended, there is a chance that perhaps we will test this support level here one more time when earnings come out, maybe short term, but eventually, and if we do, this could be an interesting entry point potentially for another leg further up in NVIDIA, riding this bullish trend to the upside. And this can be all predicted by looking at these technical levels on the chart and trying to make sense of them from a technical point of view. All right, two quick other intraday examples. Let's look at oil. CL, crude oil futures on the 10-minute time frame. So a big switch here. Let's see what happened. So lots of levels here. And what do we see here? Well, we can tell oil pretty much since I would say since this morning, this is a 10-minute time frame, has been kind of stagnant in a range. Look how price bounces in between these levels down here, this support level here, this reddish line or this former resistance level, and the green line up here. Kind of bounce, 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 and bounce, and now testing this level here. This also is tradable by itself. Now, the indicators and the levels, they work on both the larger time frames, daily time frames, but also the smaller time frames. And they give you so much structure and trade setups, which under certain circumstances are absolutely tradable. I'm going to show you my final ingredient to this in a second. I'll change it up one more time. Bitcoin on the 10-minute time frame. Same thing. Look what happened a couple of hours ago of Bitcoin. We had this big wick here. And where did it stop? Almost to the cent, to the T, at this green line, to the downside, bounced up from it. Because this broken resistance level now acting as support. Price bounced up from it. We came all the way up here to this resistance level. Price bounced up from here as well. And now we're trading kind of below this resistance level. So these indicators, they work on both intraday and on the larger time frames. Now, let me give you my final ingredient. Let's look at Apple. Back to the daily chart. So I want to explain something to you. Look what you see underneath the chart. This is the final ingredient. You can see this ribbon underneath. This is another indicator which we use. It's a trend indicator, an indicator designed to give you the current trend direction. And what I found works really well with filtering these setups that you see on the chart is to combine it with trend. All right, so how would that work? Now, let's look at some examples. All right, let's go here. Just an easy example. So price is coming up from below towards this green line here. We have this little squiggly line, but you can say, okay, we're coming up to this green line, we're coming up to resistance, and maybe I want to short this trade. Well, I personally probably would have not have done it, even though price actually reacted to this level quite nicely. I wouldn't have done it. Why? Because the overarching trend is bullish. I only like to take a trade when things come together. So what I would do, I would patiently wait for the indicator of the price, first of all, to come up to this level here, and then flag me a breakout signal. This arrow here, it's a bit hard to see, but it's there. Breakout arrow here, this one here. That's a zone break. Once I see this, I will then check my trend. What is my trend doing? I go down here. It's bullish. All right, two things are coming together. This is a great breakout trade. This is actionable to me to the upside. So you can see how this trend information can be used as a filter to filter out some of the sales which are perhaps a bit less likely to pan out or have a big follow through. This is how I combine technical levels with what trend is telling me. Now let me back up to the charts and to my slides for 1 second. What have we seen so far? Well, we have seen our liquidity IQ indicator, which gives us these key technical levels, which gives us structure to the markets. We also have seen the other indicator, our trend indicator, which is called MA Rush, which shows us the current trend direction. And we use this indicator as a filter. We only take a setup if the trend confirms it. So if you're looking for a bullish bounce, I also want to be in a bullish trend overall. Two things are coming together, we call this confluence in trading, two indicators predicting the same future price move. Now you have two check marks behind your criteria predicting the future price move, which is bullish, which would be bullish in this case. This is how we use MA Rush for. This indicator is called MA Rush. And together, we call these two indicators our dynamic duo because they complement each other so nicely. Liquidity IQ for finding these key levels on your chart, and MA Rush for confirming or figuring out the trend direction for you, which you can use then as a filter. Now, we use these two indicators all the time for our day trading, but also for our swing trading. And even, this is what you saw here in our newsletter. We publish a newsletter every single week on Mondays. And for example, a couple of weeks ago, we predicted a nice bounce setup for this symbol here on the daily time frame. Hartford Insurance Group, an S&P 500 company, HIG. We were at 130 around. Price approached a key support level within a strong uptrend. Let me show you what happened to this trade. I'm going to go back to MetaStock. Let's open up HIG. HIG, there we go. Open. Let's check it out. There we go. This was a couple of weeks ago. Look what happened. Actually, a couple of days ago. In fact, price came down. So we are bullish, first of all. Bullish trend. Price came down. It's a bit hard to see to this support level. Let me just change quickly the visuals a little bit because I think on the screen share it might be a little bit hard to see. It's a bit bigger like this. All right. Okay. Price came down to this. Oops. 1 second. That didn't take. Hang on. 1 quick second. What did I do? Oh, there we go. I changed the wrong plot here. There we go. Now you can see it. Price came down to this red line here, a support level within a strong uptrend. We caught this one out. Hey, this is a great bounce opportunity. The stock is bullish to begin with. Now testing support. And what happened? A nice bounce to the upside. This is the idea of the trades we're trying to put out. And these trades you can find on your own with these two indicators. Look how beautifully this would have worked out here for Hartford. Price came down with an uptrend to this support level. Great bounce. Previously, price came down to the support level within an uptrend. Great bounce. Yeah. These are the kind of trades I like to trade, and this has completely turned around my trading. And best of all, these two indicators, they work completely out of the box. There's not a single setting you need to adjust. All you need to do is to apply these indicators to your price chart. You'll see what the trend is doing and where the key levels are and how close price is to these key levels. That's all you need to know to find trades, at least in my view. And I'm going to go back to my initial statements that these two indicators have completely transformed the way I trade. Let me give you a bit of a backstory. I know I'm running a bit out of time, but a bit of a backstory. Back in the day, when I first started off trading, still doing my research days at the university, I thought trading should be something like this. Successful trading could only be accomplished with a setup like this. You need to have multiple screens, various indicators on your screens, and you have to kind of combine all this information in your head to make sense of it, to predict what price may do in the future. That was my initial idea of trading. And I started off this way. I started actually to replicate this kind of setup in my office. And you can imagine, oh my goodness, this is, first of all, very expensive. It's not portable at all. I love to travel in life. This, of course, you can't put in your suitcase. Impossible. So I gave up on this idea. And I was able to give up on this idea thanks to these two indicators, MA Rush and Liquidity IQ. And now I trade like this. Just one screen, one chart, and these two indicators on the chart. That's all I need to trade the markets, be it from a day trading point of view or from a swing trading point of view. It doesn't matter. It works on both time frames. But you may ask, now, hey Daniel, how did you even find symbols which currently have setups? What's your process? How do you approach the market? Well, let me tell you, it's super simple. 3 easy steps, especially having a tool like MetaStock on your hands. This is what I do for swing trading every single day. Before the market opens or after market close, it doesn't matter when you do it, as long as the market is not open yet, I run a scan. And as you know, MetaStock perhaps has the most powerful scanning facility out there. It allows you to scan through thousands of symbols within minutes. It's super powerful. So what I do is I run a scan for the setups I'm interested in before the market opens. I will get a set of results. I then open up the chart. Based on the results I saw, I manually validate the chart, making sure that it still makes sense to me. And of course, I also wait until the market actually opens. And if I like what I see, the market didn't gap too much, for example, there were no surprises when the market opened, I execute the trade. This is my trading routine. It is super simple, and it's great for everyone with busy lives, who have jobs on the side, who have other responsibilities, who can't watch the charts all day long. This is what I do. I try to keep it simple, especially with a tool like MetaStock on my hands. And for example, these were the results I got this morning. I ran the scan on various different setups in the S&P 500 and NASDAQ 100 stocks. You can see it here. It ran, and I got various setups. For example, a nice long bounce setup on a stock called Amphenol, an S&P 500 stock. Let's check it out. So I'm going to go back to MetaStock one more time. All right, just give me 1 second. I'm just going to find there we go, my scan results. All right, so this was the scan I ran this morning. And you can see I ran on various different setups, like long bounce. We have a short bounces here to the short side. We have long break retraces. We have zone breaks and so forth. Various different scans come with our indicators. You can just run them all at once. That's what I do. I like to save time. I run them all at once. It took 13 minutes this morning to run the scan across almost 600 stocks. So very fast. And this runs on the side. Now I start the scan. I grab my coffee. I answer some emails, to do other stuff. And I come back once the scan is complete to look at the results. So what do we see here? So let me start with long bounce, for example. So I can click on this result here. And in MetaStock, there's a really cool way to actually sort your results using multiple condition sorting. And this is all I explained in our bootcamp. But basically what I've done then, I have sorted my results by various criteria. Criteria number 1 is I want to be near a support level. The stock needs to be near a support level. That's this column here, setup. There's a 1 in there. It means it's near support. Great. But that's not all, because I want more conditions. I also want the stock to be in a bullish trend, because we're looking for a bounce of support towards higher price levels. So my second criteria for this sort is, hey, I want to be bullish. You can see all these stocks here with a 1 on a bullish trend. And my third criteria, which I love the sorting in MetaStock, is I want to give priority to the results where the bullish trend has been established for the longest time. So basically I'm sorting by trend duration as well. Starting with the trends which have the longest duration. You can see it here. So we have a setup, we're bullish, and Amphenol, for example, has been in a bullish trend for the longest time, for 703 trading days. You can see this number here. Followed by Fastener, 700 days, then the Coca-Cola Euro company, 700 days, then General Motors, 577 days. So let's check it out. Let's look at Amphenol. I'm going to open up the chart by simply clicking this button here. It will open up. It does open up, but probably on a different screen. Just 1 second. Let me move this quickly out of the way. There we go. Amphenol on the daily time frame. So let me zoom in a little bit. And what do we see? Look at this. Price came, well, first of all, you're bullish for a long time. You can see this big green ribbon here. We're bullish for a long time in Amphenol. Price came down to this key support level. Let me just once again make this a little bit more visible, because I think on my screen share it might be a little bit hard to see. There we go. Price came down to this key support level. And the idea now is, okay, we will bounce off this level towards higher price levels. That's the idea. We're testing support within a bullish trend. Great setup. I actually have a trade open on the setup, which I opened back when it was down here already. Amphenol came down already. I put some credit spreads out on this trade. Now once again, we're in the same situation. A bounce off this level is, in my view at least, an outcome which is not unlikely, because multiple things are coming together. But let me show you one more thing. I'm going to do a right click on the chart. This is great at MetaStock. I'm going to go to Add Expert Advisor here and go to Commentary. I enable the expert commentary. Let's open this little window here, but you can also put it onto your chart. What do we see here? Look at this. The indicator will actually tell you what is the setup at play. There is a long bounce setup with price bouncing off the 118.24 support level. Guess where this 118.24 support level is? That's exactly this reddish line here. That's this level. The indicator will tell you this in the commentary. MA Rush, that's our trend indicator, has been bullish for 703 bars. That's this indicator down here. We'll also be told in this expert commentary. And now the kicker. If you were to trade this setup, the indicator will tell you, hey, put your stop at 109.53, which is just below this red level here. So if this level fails, I want to be out. And your target at 146.74, which is just below this resistance level up here. Why there? Because I don't want to give away my profits if we bounce off. Like, you can see it here. Price came up to this resistance level before and bounced off from it. Well, I don't want to give away my profits. This is what my target is exactly there. And the indicator will tell you exactly this. All right. One more example. There's so many. You can do this every single day. You can find these amazing swing trading ideas. So back to my results here. The next one here, focusing on for long bounce. You can see all these different scans here. The next one is Fastener. Let's check it out. I'm going to open it up. It's my second hit. All right, back to the chart. For some reason, it always disappears to me. 1 second, guys. There we go. Fastener. Okay, bullish trend. Nice. Let's zoom in a little bit on Fastener. Look at this beautiful bounce here of support. Okay, what do we see? Oops. Same thing. Price came down to this key support level. It's just a little bit hard to see. I apologize for this. But you can adjust the settings here. There we go. Price came down to this red line. Key support within a bullish trend. Once again, an interesting trade idea, anticipating price bouncing off to higher price levels. This is how I find my trades. It's very simple. I simply run the scan. The scan will give me my results. I sort my results by 3 different criteria. And we teach you all this now at bootcamp. Setup, trend direction, and trend duration. And you get these key hits. And especially the sorting will allow you to focus first on the setup, which is the most promising, which is really cool. All right, so let me go back to my slides for 1 more second. So this is how I find my setups. Now, let me tell you something. Liquidity IQ and MA Rush have been introduced for MetaStock about, I'd say 2 months ago. It has received tremendous feedback, especially when combined with the advanced signal scanning facility of MetaStock. It works beautifully. It's so fast to scan. You get all these really amazing setups. And of course, it works on all chart types and time frames. It works out of the box. Not a single setting needs to be adjusted. And of course, the signals will never repaint. All right, they will stay where they are. So let me explain to you now how you can grab these two indicators at a special price. And perhaps these two indicators will also transform the way you trade. Now, before this, let me tell you that normally these two indicators, or this indicator alone, Liquidity IQ, cost $1,697. That's our levels indicator. An indicator designed to find these key support and key resistance levels. That's for the lifetime license. We decided today for this conference, as a big thank you for you guys for joining us, to give you bonus offers as well, 6 bonuses. And bonus number 1 is a lifetime license of our MA Rush indicator, the trend indicator, which will show you whether we're currently bearish or bullish, and which is the perfect filter to the levels you see with Liquidity IQ. Bonus number 2 is a bootcamp on demand. Now, I've explained a lot of stuff today. I couldn't go through all the details, but we have a bootcamp recorded to which you get access to, which explains every single scan, every single setting, every single customization thing that you may want to do with the indicators. You will get this as well. Bonus number 3 is an exclusive membership to our trading sessions, which happen during the week, every single week. Normally it's a $9.97 per year value. You will get these for life. For as long as we're offering these member sessions, you will be invited to these exclusive events. A great venue for you to ask questions, to learn tips and tricks, and to see how we analyze the markets using our own indicators. Bonus number 4 is an ebook on MA Rush, and we have 2 video guides as well. As I mentioned before, normally the price is $1,697, but today, and for this conference, we decided to slash down the price to only $997. And this is for the lifetime license of these indicators. You will never be charged a single cent again for these indicators. These are yours for life to keep. If you want to take advantage of this limited offer, simply go to MetaStock or www.metastock.com/IQ. IQ stands for Liquidity IQ. And Jeffrey, if you can, please put this link into the chat as well. So metastock.com/IQ. So real quick, what's in the package? Well, of course, our Liquidity IQ indicators in the package with all the features that you saw today, with a way to find, the support levels, the resistance levels, to scan for breakouts, to scan for bounces, and so forth. That's all included. Also included is our MA Rush indicator, the perfect filter for your setups. We'll just show you directly on your chart whether we're bullish or bearish, and you can use this as information of whether you want to take the trade or perhaps skip the trade. Of course, you can also scan for these trend changes. That's possible as well. Then you will get our bootcamp on demand. We'll teach you everything you need to know about this indicator to get fully started. It's, I believe, a 90 minutes bootcamp recorded about a month ago. Very comprehensive, very detailed. No question will remain unanswered after you have watched this bootcamp. And an invitation as the last bonus, to our exclusive trading sessions. They happen every Tuesday. They're all recorded, so if you can't make it, don't worry. You can watch the recording afterwards. And if I forgot to mention this, you will also be invited to our exclusive Discord channel. All this is available at metastock.com/IQ for a special conference price of only $997 for the lifetime license. All right. So with this, I am open for some chart requests or questions. Jeffrey, are there any? Are there any questions? Let me see if...
Sorry, I'm just helping Scott Brown get logged in. There's our next speaker. We do have a question on whether this will work on international stocks.
Oh, yeah. It doesn't matter, yeah. As long as you have price action available, you have bars available, this will work. In fact, I'm German myself, so I trade the European market quite a bit using the exact same indicators. Absolutely.
Okay, very cool. And another question that we usually get is, does this work on coins and foreign exchange and Forex and that kind of stuff?
So we even had an example for Bitcoin early on in this presentation when I looked at Bitcoin only. Just one second. Where did we have it? Oops. I think I made a small mistake. In 1 second, guys. Where did we have Bitcoin? There we go. Bitcoin here. Bitcoin. Let me go to the daily time frame just to show you how cool this one works on coins as well. So it doesn't really matter what you trade. It could be FX, it could be crypto, it could be ETFs, futures, and so forth. It works beautifully. Look how nice it detects these levels for Bitcoin. Bounce off resistance, bounce of support. Finally a break, back to resistance, bounce, back to resistance, bounce. Now, actually we called this out in our weekly session yesterday. Look what happened here. We broke above this resistance level here. This is our breakout trade. We broke above it, came down, retested it, bounced up, down again to retest it. Now we're at a pivotal moment here in Bitcoin off this former resistance level, and we may see another bounce off this level towards higher price levels. We're testing it right now. So yeah, it works on all of these different asset classes.
Brad wants to know if this would work well with your super trend indicator.
Yeah, that's a good question, which we get all the time. Yeah, imagine, Greg, you're having super trend on the chart right now, and you see a buy signal or a sell signal. So what would you do? What would you do is you can then qualify this buy or sell signal with information of where we are with respect to some key levels. For example, if you get a buy signal here, but your resistance level is already here, maybe don't take the trade because this trade wouldn't have too much room. Or vice versa. So you get a buy signal and the overarching trend is also bullish. Once again, that could be a confluence, which is something that confirms your signal. So yes, this is absolutely compatible with any signal indicator that you may have, be it our super trend bullseye indicator or perhaps our power bundle indicators or perhaps some other indicators that you may be using. Yeah. Any other questions, Jeffrey? Jeffrey.
Can you help me find my mute button?
Okay.
That's the end of the questions. Very, very good. Thank you for the question, Brad, too, as well. Appreciate it. Okay, and yeah, I double checked. We don't have any questions. You can take advantage of this if you go to metastock.com/IQ. If you have questions, if you want to get some charts, give us a call. The phone number is in the chat, 800-882-3040. And you're going to go to metastock.com/sales-chat. Daniel, huge thanks, man. It's good to have you. You did a great job. I'd give you 5 stars out of 5.
Thanks.
All right.
Thanks.
Very cool.
Thanks, guys. Have a great conference. Thanks, everyone. Bye-bye.
All right. Very good. Let me go ahead and do this. I'm going to go ahead and share my screen. Click on share right here. You should go. Oh, I'll turn on my camera so you can see me. I hope you're enjoying things. Again, just a couple of notes. If you have any questions, make sure to, if you're in GoToWebinar, just click on the questions button, type them in. We'll be able to see them. If you're in YouTube, just chat on them. Anything you're interested in. We're doing a really good job staying up on all of the questions, and that's always good. I do want to invite you to join a very, very cool resource that's available for you. This isn't going to cost you anything, but you can go in, you can chat with other traders, you can learn about the markets. We do a lot of really cool stuff. I've talked a little bit about the Traders Forum now over the course of the session. But last week we had a session that we did with John and Jack Kosar. They spoke on Monday or Tuesday. I don't know. The days are bleeding together a little bit for me right now. But we just talked a little bit about the markets, what's going on, what they're seeing happening in the markets, how they got started in trading, all of that kind of stuff. It was a really, really good session. It's up on our YouTube channel. But if you're part of the Traders Forum, you can come ask questions and visit with these people live. We also do an indicator session every week where we talk about an indicator, we break it down, we talk about how it's used, and test it, see how well it works. So all of that stuff is free. You can join at thetradersforum.com. I look forward to seeing you there. So all of the offers we're talking about this week, you can find at metastock.com/conf promo. If you ever have any questions, we would love to talk to you. You can call us 800-882-3040. And you can visit us online at metastock.com/saleschat. Our next guest is Mr. Scott Brown. Scott Brown is actually the owner of MetaStock. And Scott, let's see if you can get you got your camera working.
Yes, sir.
And you sound like an angel, man. You sound so good.
Amazing, right?
I'm not sure if you sound better or more handsome.
It's hard to know. It's hard to know.
I'm going to do this real quick. We're just going to make sure. Do you want me to read this legal disclaimer for you?
I would love it.
Okay.
Let's see how good you are at it.
I've never done it. This will be my first time.
And we are going to test you on this. We're going to grade you.
Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees and Scott Brown shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse a purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. Mr. Brown, I'm going to go ahead and make you the presenter. It's going to ask you to share your screen. And I'm going to make sure if we have any problems, I'm going to run in there and help you. So let's go ahead but here we go.
I think we're gonna do just fine. And everybody, let's give a big shout out to Jeff Gibby. These conferences are so valuable to everybody that's tuning in. Jeff, how many speakers do we have this week?
I think I don't know exactly. A lot. I think it's around 40 total.
Jeez, that is amazing. I mean, think of all the organization, admin, trying to get everybody on the same page, the links, the information to the databases. Jeff does an amazing job. I've been friends with Jeff for over 25 years, and I call him definitely one of my good friends, and I'm thankful to know him. Just had a birthday last week, everyone. He turned 38. And so make sure if you talk to him in the future to wish him a happy birthday. But anyway, I just thank you, Jeff, for all your hard work. It's awesome.
We can continue to talk about me as long as you want.
I love it.
But I'll let you go. Thanks, Scott.
Yep, he just dropped off, so we're good. Okay, guys, we're going to talk about the MetaStock Forecaster. The MetaStock Forecaster is an unbelievable tool that is available inside of MetaStock. And it's one of those things that is just, once you see it and you see the power that it can use, it's unbelievable. Let me fix my screen because I'm staring at myself talking, and that is really weird to me. So I'm going to move my screen over here. But let me make sure you guys can still see that. Jeff, can you see that?
Yes, sir. Looks great. I can still see you too, which is good too.
Okay, I just wanted to make sure. Okay, perfect. So let's dive in. We're going to talk a little bit about, the forecasters. Let me introduce myself a little bit to you so you kind of know who I am if you haven't, heard from me in the past. Definitely been traveling around the world with MetaStock. I've been doing this over 25 years. I think Jeff's been doing this probably 28 years or so, somewhere in there. And I started out in inside sales, and I've done so many different positions inside the company. I went from inside sales to managing all of our partners and all of our dealers, and in charge of international sales and all of our events and sales and marketing, and then became the president. And then in 2013, I actually bought MetaStock from Thomson Reuters at the time. And I have owned MetaStock for the last 13 years. And one of the great things about owning MetaStock is that being a part of a software that has been around for over 40 years, And really big time traders use it, right? Institutional, retail traders, but really serious traders are the ones that use MetaStock. And so this forecaster is such an amazing product inside of it. And technical analysis, it emphasizes the past. And the forecaster and what we're going to talk about really talks about emphasizing the future. There's really complex statistics and probability analysis that are blended into simple, easy to understand probability clouds. And we're really going to get into that, looking into the future. One of our programmers, Ken Hunt, who worked at MetaStock for, 35 plus years, he was the first person to program backtesting in software. And he would always look at technical analysis about the past. But what he wanted to do was create something that could give the user the ability to see where the future might go. And so that's how we've designed the forecaster to look at. We've already gone through this, but obviously there's no way to guarantee anything in the market, and trading in the markets is really hard. Obviously, if you're listening today, the reason you're here is you want to learn more about how can I become a better trader. And doing that it's tough. If it was so easy, obviously everyone would do it. Technical Analysis of Stocks and Commodities magazine, they have a Reader's Choice Award, and we have won it for 33 years. We just won it again just a couple months ago. And really big thanks to all the readers who voted for us. And, it's pretty amazing. So the forecaster, we've touched on it a little bit. It analyzes the price action after past events to determine the probabilities of future price action. It really answers that question, where a price is most likely to be in the future after an event occurs. Okay, so that's really what the forecaster is looking at, is, looking at about all these historical, statistics, analyzing all of these historical statistics, finding out every time those events occurred, where the price action went for the future. And now it's going to draw a cloud to show us where that is. So the MetaStock forecaster, number one, it will draw patterns. So that's something that's really cool. When I go around the world, I can't tell you how many times people will ask something like, hey, does this identify a cup and handle pattern? Does this identify a head and shoulders or a double top pattern? Well, with your own mouse, you can draw the pattern on your screen. We will create the MetaStock formula language for you in the background, and you'll be able to analyze the exact pattern that you drew. And that's going to be pretty amazing for you to look at and see. You're going to be able to copy it from the chart, okay? Easily select and replicate those patterns seen on the existing market charts. You're going to be able to rank the events, okay? So you're going to be able to prioritize and recognize events based on statistical significance. And then number 4, there's new recognizers that we're always coming out with. You'll be able to access a library of powerful pre-included tools and events that are already inside there. So here's, we have over 70 plus events that are already in there, and here's just a few of those. So the interactive forecaster interface is quite amazing. Right here, we're looking at a chart of Rio Tinto, and you can see that we can do things like event explorations. You can look at, so when this comes on your chart, all these yellow triangles, that's where the event occurred. And we're looking for the moving average 50 cross down. So when that occurs on the chart, you have these triangles. And when you click on those triangles, it will draw out the pattern of the chart. And then you can go ahead and see, how that looks and what's going on. And then this chart right here, what you're seeing is the probability map. So the probability scale is based on color. If it's dark, there's hardly any probability that the price action goes through it. The brighter the color, the higher probability that we have. We can do this for 30, 90, and 180 days for a cloud, okay? So what we were looking at here is the price, volume, and event marker. If we click on the past performance tab, this will actually, every single day or every single bar that comes in, if you're looking at a 60-minute bar or a daily bar, you're getting new data, and this cloud right here evolves every single time you get a new bar of data. Whereas when we click right on the chart for these yellow triangles, these are static images. They will never change, okay? Right here, here's a map overlaid. You can see this is Adobe Systems. We clicked here, we're looking at the CCI, the Commodity Channel Index overbought. And when we click on these, it will draw a cloud into the future. And so you can see where the probability is going. Now, again, does that mean this is right? No, it doesn't mean it's going to be right. It just means all the statistics that we've looked at historically, they look where the price action goes after that event marker. And then it builds a cloud based on all of those historical price event markers. So here's one for you, the Adobe system right here. And you're going to see here, when we click on it with the CCI overbought, how that actually looked. And the brighter the color, again, the probability is greater for the price action to go through that. So this is really cool right here. If you're inside the chart, it's super easy to open up the forecaster. If you're looking at, let's say, Harris trade here on the chart inside of MetaStock, and you right click and you click forecaster, it will automatically add that security to the forecaster. Now, you can do any type of security that you want. So if you're looking at stocks, futures, cryptocurrencies, mutual funds, whatever it is, that we have the data for, which is pretty much everything around the globe, you will be able to go ahead and look at that in the forecaster. Something also that's really cool is we thought, man, people would love to go ahead and scan for any opportunities that are going inside the forecaster inside of an exploration. So you can go inside of our Explorer and say, I want to scan the forecaster moving average 200 cross down and see if there's anything that's had an event marker occur on the last bar. That way I can open up that specific chart inside the forecaster and do my analysis. So if you look at the S&P 500, it could scan it in a minute. And then what you're doing is looking at anything that has met your criteria. And then you're just looking at stocks instead of always trying to find, okay, well, is there a stock that this just occurred on? Well, we can do that and make it much easier and filter that for you. And there's new rankings inside of the forecaster. You can look at everything in here based on highest profit potential long only, highest profit potential short only, the most accurate current forecast, the most pronounced current breakout, the most distinct forecast cloud, the most recent event, or the most events. And we'll actually dive into some securities today and show you how to do that and look at those. So when you draw your patterns in the forecaster, this is it right here. You're looking at a double top there, and you can just manually draw that. You can invert it and do all kinds of things here. It's pretty cool. Okay, let's dive into the software and take a look at this. So for those that are using our latest version of MetaStock, that is definitely what I'm using right now. And the forecaster, I'll show you how to use it. So if we come into here and we're analyzing, you know, let's say we come in here to the chart and let's say we want to look at GM. So we type in GM, click enter. It'll pull up the stock GM. You can see it right here and you can be like, oh, okay, here's all my indicators, you know, that I can look at, hundreds of them. But I'm like, you know what? Today I want to look at the forecaster. So if I right click and I go to forecaster, it'll open it automatically in the forecaster. Or I can come over here to the sidebar and click on forecaster. And I can put in any instrument and it will open it inside of the forecaster. So let's just go to GM. We'll click right click and go to forecaster. And we're going to go to our forecaster that we're looking at here. And we'll look at that one here at the end. Okay, so we're looking at the highest profit potential. And you can see here, you're looking at the 52-week high. And you can see a really big run up there, right? And let's look at 30 bar clouds. And we can come back here and say, oh, what are these looking like? So when I click on it, MetaStock is creating a cloud. And what it's doing is the brighter the color, the greater chance of probability that the price goes through it. Now on this cloud, you can see it just went horizontal straight across and it came down here, bounced back up. It was right kind of here at the end, but that price action moved a little bit on it. Let's look at a 90 bar. Okay. Wow, you can see here that it was very horizontal, but at the end here is it actually went right through it, through the red there, it went through it. Now, what is something that people trade out there would really like this? Obviously, people that are long-term, right? Short-term would love it. But I think a lot of options traders would like this because if you can find a cloud that has a bit of movement in it and it's 90 or 180 bars out, you know, if you could find something 6 months out that has really bright colors, you know, that would be really impressive, right? So here you could be like, well, the price is about 48. We think it's going to come up here to 53, right? So I'm going to buy some options, some calls, you know, in that range, 6 months out, and we'll see, you know, kind of where that goes. So options traders really like that. Let's look at some more of these. Oh, I didn't mean to click that. Man, there were a lot of events there. And you can see, oh, it went right through it. And you can click on all these yellow event markers. And what they will do is every time there was a 52-week high, it identifies it on the chart with one of these yellow triangles. And if I click on the triangle, it will draw a cloud. And that cloud can go 30, 90, or 180 bars. Now, down here in this blue box in the lower right-hand corner, it's going to give us all of our statistics, the statistics that are really interesting. And what I find out with the forecaster is the times that the forecaster has more events on it, it becomes a bit more accurate. And that makes sense because the more data you have, the more that it can calculate. Based off of 56 times is better than basing it off of 12 times, right? And you need at least, it's 5 of those event markers for it to draw a cloud. So if we come down here, it'll say, look, over the last 5 years, it's occurred 56 times. And we can show you kind of how that looks. On average, the event occurs every 8.5 bars. We're looking at a daily chart here. Statistically, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 0.8% lower with a standard deviation of 0.0513. The statistical margin of error is approximately 13%. And you can see all the data that it's giving you right there. Okay. It identifies all the days that these events occurred. And if there's any errors or warnings, it will identify those right there as well. Now, when we come in here, here's our full list of our recognizer library. As you can tell, there are a lot of different indicators in here. And every time I bring up a chart or a security in the forecaster, it is scanning every single one of those systems right here. And you can see those right there. And then what they'll do even more is I can scan all those indicators based on this individual security of General Motors. If I want it on highest profit potential long only, highest profit potential short only, the most accurate current forecast, the most pronounced current breakout, the most distinct forecast cloud, the most recent event, or the most events. So let's go through some of these. The first one we're going to look at is NVIDIA. And what we're going to do is we're going to look at NVIDIA based on the highest profit potential. And we're going to look at this on 5 bars or more. And we're just going to take a look at it. Let's look at 30 bar cloud. Here's an example of an event that only occurred 11 times. Let's see how accurate it is, right? You can see when it's a brighter color here, that's where, the forecaster, based on the probability scale, thinks it's going to go. If we go 90 bars, oh, that's interesting. Look at that. Boy, it called that climb up right there. That's pretty impressive. But here's something, right here, there was about a 50% chance it was going to go to 140. And you can see that diversion right there. And the price kept going up. It kept breaking through those new highs. Pretty interesting. Let's take a look at Microsoft here. So Microsoft, we're looking at the most accurate current forecast. And what we're going to do is we're going to look at the 5-bar pattern up. And what we're seeing here is this actually occurred 88 times. And it's saying statistically, 14 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 0.1% higher with a standard deviation of 0.0597. The statistical margin of error is approximately 10%. The more events that we have in here, the lower our statistical margin of error will go down, okay? So right here, you can see all the event markers, okay? And all these event markers are when the 5-bar pattern up occurred. And let's go in here and we'll say, let's look at a 30-bar. Let's just come here in the middle. Remember, these images never change on this screen. It's a static image. It's not going to say, oh, I tricked you. I got you. The more we get new data. No, it's not going to do that to you. Wow, look at that. It called it going through. There was about a 50% chance there, and it labeled it. Now, the forecast cloud, if you click on that tab right there, we're looking at a daily chart of Microsoft. Every time we put a new bar of data inside of Microsoft and the forecaster, you can see right here, okay, that what that does is this cloud evolves. So every single day it will show you what the forecast is for the next 1, 7, 14, 30, 60, and 90 days when you get a new bar for Microsoft. And we can come in here and we can say, well, let's take a look at this and see where it's going. So right there's 90 bars into the future. Here's 6 months looking into the future. So it says, hey, based on the 5-bar pattern up and the events that have occurred 88 times historically, based on all of this statistical information, we think that there's about a 50% chance it goes to 350. Now, right now, it's trading at about 425. If it went to 350 and you could buy some puts on Microsoft 6 months into the future and it goes through there, that's going to be a really nice trade. Now, but again, is that a guarantee? No, there are no guarantees in the market, guys. I will be the one person as a presenter during this conference that will try to give you a dose of reality, right? That gives you that hey, everything's not just amazing and perfect, and I'm not going to show just perfect setups and things like that you can manipulate and do. MetaStock is an absolute toolbox, and the way you need to think about MetaStock is that, for example, if you're going to buy a home, the guy that does the painting is going to use different tools than the individual that does the concrete. But MetaStock has all the tools for anyone that's trading. So whatever specialty you have, we can help you out there. MetaStock, another thing that it does really, really well is it has its own formula language. And that's why MetaStock has been around for 40 years is this formula language allows you to create new indicators or ideas that you have for your trading. You can be like, hey, I like the RSI, but if I added more some volume to it or some other type of indicator, we can create those types of indicators there. So right here, you can see it going down in the next 6 months. And that's obviously the same here as well. Let's take a look at Bitcoin. I know a lot of people out there love to get their hands in on cryptocurrency. And I know there's interested people that are watching this right now that are interested in Bitcoin. So if we look at the most distinct forecast cloud, and we're going to look at the moving average 1040 cross up, it tells us this event occurred 80 times. Okay. And if we come in here and click on it, it's going to give us an idea where the currency is going to go based on the moving average 1040 cross up. Now, remember, that's just a specific trading idea. If I select MFI over bot, let's find something with a little bit more, or a moving average 200 cross down and I click on it, look, they're different trading strategies. So the moving average cross, 200 cross down was a lot more bullish than what we were looking at on the 1040 cross down. Or excuse me, the 1040 cross up. So every single one of these is going to give you a different, cloud, because all of these are specific trading indicators, right? So if we come up here and we try stochastic negative divergence, you see, oh, wow, look, that followed it really well. Let's look at the 90 bars. Wow, that 90 bars really mirrored it well. So far in the 3 that I've shown you, the first 2 I really don't have much confidence in. But look how this one, it follows the price range so well. It's very specific there, right? It follows it, and it shows you, where this is going. This one would build some confidence in me that, hey, where's this going out into the future? Okay, so we think this one, it's at, let's say Bitcoin's, I don't know, when this occurs, we're probably trading 78,000. I'm just taking a guess. But it thinks, according to this negative divergence, stochastics negative divergence, it has a chance to go back to 100,000. Okay. So that's the type of forecasting here. It gets so fun, so interesting. Another popular thing is the E-mini, right? The E-mini gets super, excited. A lot of people love to trade it. We're going to look at the most events on this, and we're going to look at the moving average 310. Is that what I wanted to look at? I don't know if that is. Yeah, the moving average 310 cross down. And it's telling me that the event occurred 48 times. So for fun, you can come in here and say, okay, is it kind of following where it's going? Because this image, again, is a static image. So when this cloud came on, or this event marker on October 23rd, 2024, this cloud is the same cloud even after data goes through it, right? So you can kind of go through here and say, okay, how's it performing? Let's look at the 90 bar. Now, definitely some of the weaknesses of this are if there's some really like gap downs, gap ups, or a quick move to the top or bottom, because the statistics aren't going to show it. So a climb like this, I would be really, really surprised if it caught it, because it just went up so quick after. So right here it says, okay, we think it's going to go up, but let's look at it in a 90 bar and see how that performed. So it went through it right here, but again, we missed out on the top there. And you can see that. If we go to our forecast cloud, it's very bullish on it. It says right here we're trading maybe 45, and it thinks it potentially could get up to about 65 maybe. Again, if you were to trade options on this, or with the E-mini, I mean, come on. I'm not talking about a stock here, sorry. But you could obviously have the opportunity to make a lot of points there, right? Currency traders. Let's look at the euro here. We're going to look at the most accurate current forecast, and we're going to look at the money flow index positive divergence. So let's come in here. We'll look at 90 bars. Oh, wow. Caught that bottom there. Let's take a look at some of these right here. We'll go with a 30 bar. Wow, look at that. That looks pretty good. See, it went down there, kind of maintained up. Let's see what 90 bar says. Huh. Wow, that's an interesting cloud, isn't it? So look at that right here. And this is a 60-minute chart we're looking at now. So it comes through here, but then it says, hey, there's a good potential it ticks up, right? And look at that. That's pretty cool. That's with the E-mini there. Or excuse me, the euro. The euro we're looking at right now, not the E-mini. Let me clarify this. The last one we're going to look at is for any commodities traders. We're looking at the most events. Again, this is where you find that right there. And then what we're looking at for crude oil is the most events, and we're looking at the MetaStock bullish. Look at this. This chart, what a mess that chart is, right? It up, down, up, down, up, down. So volatile. But I thought, there'd be some traders that would love to see crude oil because it's just been all over the place, right? And this is an hour chart of crude oil. So you can come in here and say, well, let's see where it thinks it's going to go. Here's a 30 bar. Here's a 90 bar. And on an hourly chart, right now, every time we get a new bar, it says, oh, we're trading about in here. It really, according to MetaStock bullish, it's not going to be too far up or down based in that. So that's interesting to see. Look, another one of these. Wow, look at that, how it followed it pretty good. And it's right, it just kind of cut the noise. There were some tops and bottoms that are in there, but it truly kind of got the meat of all those bars in there. So that's pretty interesting to see. Pretty interesting to see. Okay, so now what we're going to do, we're going to come in here to the recognizer library. We're going to click over here. We're going to click draw new pattern. And we're going to come in here and we're going to draw a pattern. So now with my mouse, I can draw any shape, location, and orientation inside this box right here. So if I wanted to start up here and just do some kind of bearish type of thing, you can say, oh, there's a bearish, I don't know, trend line, and I can manipulate all these little circles. I can invert the pattern. I can reverse the pattern and do those types of things. So let's name this a downward trend pattern. We'll click save. And let's just look at the charts with the downward trend pattern. Click on that and then scan the selected analysis. And it's going to go ahead and scan it with the crude oil here. And it's telling you, hey, look, this pattern has a 91% match. Look, this pattern has a 92% match. And it tells you the specific amounts on there. So you can come in here and go, boom, click on that and see kind of how that performs in a 90 bar. Pretty interesting, huh? You can draw your own pattern. We can come in here to NVIDIA and scan it just on NVIDIA and see how that performed. We come in here and we can go, okay, and click on those clouds and kind of see how that performed. Oh, that's a good one right there. Wow. So the yellow is the highest probability and it goes through it. But look at that. That's pretty cool. Kind of followed that along there with NVIDIA. Kind of called that pattern from about 110. Yeah. Coming up here to about 150 in there. Now, another really cool thing that this can do, this is actually one of my favorite parts of using the forecaster. I can come in here and say, this pertains to people that have, they look at 3 or 4 bars and they say, that is the perfect trade setup. So if you can find that on your chart, you come here to user defined pattern and you say, hey, I want to look at these 4 bars where the open, is lower than the close. They've all gained. And it says, do you want to capture the selected price formation as a user-defined pattern? I select yes, and this will automatically create all the formula language just like it did when I drew my pattern. I can come in here and say, Jeff's birthday celebration indicator. We'll just name it something silly. And we'll come down here. And what we're going to do is scan that indicator on this chart. So it says here, look, you've done this. Wow, this event occurred 170 times. We should have a lot of good looking clouds because there's so much data historically. Yeah, and you can see the clouds are kind of calling it, doing a pretty good job. Wow, look at this one. Now I'm interested in this because it built up there and now it kind of goes sideways, right? So I don't know if this pattern on this bar is going to be that good. It did okay. It did okay. So that's a little bit about the forecaster. Now, remember what we said in the PowerPoint. You can come here to the Explorer and you can scroll down to the forecaster and you can say, hey, I want to look at the 310. Where are we looking at? Let's look at the moving average 1040 cross. Do we have those in here? There they are. So let's do 1040 cross down. And then we come down here and say, let's do the NASDAQ 100. Okay. And then let's go ahead and scan that. We'll start the exploration. And it's going to go ahead and scan now the NASDAQ 100 based on the moving average 1040 cross down. And it's going to give me any securities, any stocks that have met that requirement. And it can show me that, and then I can bring those up and do some analysis on it. So it's rejected right now about 96% of them. And it keeps going. So we know at least there's one stock in there, that it's looking at and that we have the opportunity to see. So we'll give it, 67. There's 3 that have been put in there. And it will bring those up now and show us those. Okay, so we can come in here, we can go CoStar, Charter, and Microchip. Let's go ahead and open those up. There it goes. There's Charter for us. We can come in here and say Forecaster. And now what it does is it just opens up Charter inside of the Forecaster. And it's only looking for that one specific. So let's go ahead and select all of them. And rescan all analyses. And by doing that, it's going through every single one of these at one time. And so that's why it was giving me a little bit of grief there, because it's crunching so much data and analytics in there. So we'll let that work. Okay. And if we come in, it was the 1040 crossed down, I think. And then what we can do is just kind of look at it. There were 12 events. And if we click on that cloud, it'll show us, where it's going based on the moving average 1040 cross down. So this tool has been used by institutional traders, retail traders around the world. It's just one little part of MetaStock. Again, MetaStock is that toolbox that has so many things inside of it for the trader. If you're new to MetaStock or haven't bought it, boy, this is a product that you really want to get your hands on. If you've been using an older version of MetaStock, you need to call in and get the upgrade, because there is so many more tools now inside of MetaStock than what you're used to. So let's talk about how to do that and how to get that. So if you're a real-time trader, I can get you MetaStock that's got backtesting, scanning, forecasting, all the indicators, so many different tools inside of MetaStock, get you all the market data that you need, and it's only going to cost you $265 a month, okay? On the end of day, it is only $69 a month, and the only difference between these two, real-time and daily chart, is that the MetaStock daily chart is only going to look at daily charts, monthly charts, yearly charts type of idea. But we have a deal for you guys, okay? We have an exclusive offer. It's a 3-month trial. You're going to buy 1 month, get 2 free. What's included is MetaStock, our latest version. It's actually 20. The data region of your choice, and we're going to get unlimited support for you. You can call in at 1-800-882-3040. Again, 800-882-3040. I brought in 50 more sales reps today so they could take your calls. Just kidding. And then we also have the sales chat that you can do, or you can type in this landing page right here and you can get that. But I would really, definitely tell you, this is something that will help your trading. It's going to educate you. We've been around for 40 years. So people that are trading with MetaStock are serious traders. And it's time for you to take your trading to that next level. MetaStock is the one that can do that. Jeff, do we have any questions out there that we could answer?
How do I find my mic?
I sat there for a second. Oh, okay.
We don't have a lot of questions. We did have one of the questions that we do get frequently is what kind of markets are covered in MetaStock.
Yeah. So today we actually covered. Let me show you. I mean, we included the stock market, crypto, futures market, currency market, and the futures market. So it's we can definitely look at so many different securities and markets around the world. That's also not limited to the North American markets. We also cover the Europe, Middle East, and Africa. We also cover Asia and Pacific markets as well. So it's an opportunity, for you to, if you're in a different place around the world, that you can take a look at that and do it.
All right. John in the chat wants to know if you can use this on an intraday bar.
Yes. So I just showed you these right here are dailies. And then right here, we looked at 60-minute charts. So for example, right here is the euro on a 60-minute. And if you wanted to do that, John, you go inside of MetaStock, and let's say that you want to look at Microsoft, and you say, okay, let's look at a 10-minute chart of Microsoft. What I can do now is if I right click on the chart, it will go ahead. I can put it in. Well, excuse me. Let me do that again. If I go. Oh, it opened up the quote center list. Sorry. If I come in here and click on forecaster, it will open up that chart inside of the forecaster based on the time frame that I wanted. And it's just right here, the Microsoft 10-minute chart there.
All right. Those are the questions. Scott, great job today.
Well, thank you, Jeff. And again, applause to Jeff. Jeff puts in tireless hours to put these on. As an individual that is attending this, make sure you say thanks, right? Show the gratitude. This is free, right? These events used to cost a lot of money for people to attend. And now with such great technology, right, you can throw these events together, put them for free, and everybody is getting so much more, learning more, trying to become better traders. Truly, it's all because of Jeff Gibby. So thanks, Jeff, for all your hard work.
Oh, it's been a lot of fun. Thank you very much, Scott.
Okay, talk to you later, buddy. Kick me out.
No, you just go ahead and leave. It's okay. You can't break it.
Oh, this is actually a better way of doing it than what we used to.
Yeah.
I'm just clicking leave.
All right.
Love you guys.
See you later, Scott. Thanks. All right, let's go ahead and share this real quick. And Scott talked a lot about how big of a toolbox MetaStock is and how it can help you with what you're doing. And the forecaster certainly is a really good example of something you just can't get anywhere else. It allows you to do all that analysis based on the statistics, based on the price projections, all that stuff. It's really good. I personally, if I had to pick a favorite out of the tools, I do really like the system tester and its ability to go in and test trading ideas and figure out what works and that kind of stuff. But as someone who's been using MetaStock for going on 30 years, I'll tell you, the tool that I go back to over and over and over and over again is that scanner, is that ability to go in, do explorations, find exactly what's working. So my insurance agent is calling. Let me go ahead and send that to voicemail in any case. And it is a large toolbox. It's been rated the best software in its price category. It's been rated that for 33 years in a row. And I think it's really the reason it's been so consecutively successful as one of the leading analysis platforms out there is it just helps people trade. That's why I've been here for decades. That's why we have customers that have been with us for decades and decades and decades. So in terms of pricing for MetaStock, we have two versions. We've got the real-time version and the end-of-day version, or the DC version. It's no longer end-of-day. Both of them stream data. With the real-time, you can go full real-time. It starts at $210 a month. It includes all of the noise from, or all of the news all the noise. It includes all the news from LSEG, Thomson Reuters, Reuters. Really, really a great source of news and information and fundamental data, as well as all of the technical stuff that we're talking about here. And for that, you pay about $210 a month. If you just want the technicals, if you just want the forecaster, if you just want the scanning, if you just want the system tester, all of that stuff you can get for $74.95. Again, it's a delayed updating chart. So you're going to be able to get in there, see it, see the charts, all that kind of stuff. So there are a number of different things. I just put one of the things I want to kind of iterate. You can read this slide if you want to. You don't have to. But here are the methodologies that are in MetaStock. MetaStock's such a program with such depth. And this is just an example of one of the systems. There's a few hundred systems that come in the package. And so there's a gap identification system. There's an Ichimoku system. There's one that helps you identify candlesticks and candle patterns in a real-time basis. There's Jake Bernstein's expansion contraction indicators. Those are included as well. We really do want this to be something that helps you and helps you become more successful in the market. So we are going to, as part of your subscription, we'll give you a white glove installation service. As part of that, we're going to have somebody sit down with you. They're going to walk you through the use of the program, how everything's going, all that kind of stuff. It's a guided tour of MetaStock. It's completely included with your subscription. And the other thing that we're going to do is if you buy a month, we'll give you the second and third month for free as part of that. I have something thing. So as part of, for $75, if you go with the DC, the delayed chart version, you'll get free white glove setup. You'll get all of the systems, all the methodologies, everything that's actually included with MetaStock. Hey, John, you get free unlimited access to our technical support. You'll get unlimited access to the recordings, the trainings, all of that stuff will be there. And if you buy 1 month, we'll give you the second and third month for free. Right here in the US, it might be a little bit, if you're watching information, it might be tomorrow already, but here it's May 20th. For $75, you can buy 1 month, you get the second and third month for free. That's going to allow you to use MetaStock through the summer until August 20th. The cost for that is $25 per month. If it's not helpful for you, you can cancel. It's going to be helpful for you. And there you go. It's a very low risk, high reward type of an opportunity. So to get your extended trial, give us a call. We'd be happy to help you get set up, figure out the best time for that white glove installation appointment. You can call us at 800-882-3040. You go to metastock.com/conf promo. You can also visit us at metastock.com/saleschat. So as we move on to the next guest, the next speaker, I want to say thank you first to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a great sponsor of the events that we do. A number of years they've been sponsoring us, a number of decades at this point. You should, as a trader, I believe, work on getting better. And that you probably believe the same thing too, because you're here on day 3 of a session that's designed to help you become a better trader. I just love Stocks and Commodities Magazine. If you go to traders.com, you can set up a subscription. They're going to send you a magazine. You're going to have access to all of their trading articles. All that stuff is going to be available. So there you go. As we move on to the next speaker, I want to introduce him. His name is John Seville. John Seville runs Acorn Wealth Corp. He's got a very nice accent, an Australian accent. He also runs a company where he teaches people how to trade and teaches investors how to trade. It's called Acorn Wealth Corporation because he believes in taking acorns and making them into big oak trees. That's literally what he told me when I met him. I don't know. How long has it been now, John? A million years?
A million years. A bazillion years.
A zillion. Yeah. Before I let you get started, I'll go ahead and make you the presenter now so you can kind of get the screen share going. But I'm hoping you can help me with a small task.
Shoot.
As you know, we give away a lot of books. I'm actually just trying to find my mouse over here. Where are you? Here, I'll at tab instead. We give away a number of prizes here at the Online Trader Summit. It's a registration bonus for registering. The one I'm going to give away right now is Steve Bigelow's Candlestick Profits, Eliminating Emotions. So hardcover book written by the late, great Steve Bigelow. Fantastic book. I'm going to send you a copy in the mail. if John guesses your number. John, I need a number from you. The only thing I need is a number between 1 and 5,123.
23.
Ooh, 23. You went low. That is Mr. Bars. No, actually, a first name Bars, last initial R, with an Outlook address. So I'll send him an email and get his address and send that over to him. That's it for me. Let's go ahead and share your screen. Did it ask if you wanted to share your screen, John?
Let's just see here. Second here. Switched. There we go.
All right, I can see it. The smart money trading. Are you on the road or are you at home right now?
Yeah, no, we're actually we're close to home. We're in a place called Revelstoke. We've got some family visiting from Australia, so it says show us what Canada's like in the summertime. And
Okay.
we said, all right, we'll take you to the mountains.
Nice.
Yeah.
Well, have fun. Thank you for joining us. I can see your screen. I can hear you. And I'll get out of the way for now. It's your turn.
Terrific. Well, thanks so much, Jeffrey, and great to be back on the show, and welcome to everybody across the web. So we'll start out just by kind of addressing the elephant in the room, and we've been really talking about this topic since November. For many of you who've been following along, we're kind of been in a very fragile market where we've seen kind of a lot of volatility in both directions, and we've had periods where the market seems to be surging and just an unstoppable force, and obviously the next day plunging. And when you kind of get into markets with this level of volatility, it can turn some people off if you're not looking through things in the right lens. But when you start to look at the patterns that have and the opportunities that have been presented in this volatility, can actually be extremely exciting, and that's what today's talk is all about. It's when you're looking at breakouts in a fragile market, what's real versus what's a trap, and how do we read the signals of where the smart money and institutions are actually going, so we can piggyback off some of those major moves. Because volatility isn't something we should be afraid of. It's certainly not something we should run from. In fact, in my view, this is where the most amount of money can be made. But the real trick is obviously being able to disengage from that news or that noise and see where those pockets of opportunities are, and not so much where they have been, but where they may be next. So as Jeff said, I've been around the block for quite a while. We started Acorn in November 2007. We've worked with over 7,000 traders in those years, last almost 20 years, and so we're no stranger to markets and volatility. But as we do get started, of course, just a quick disclaimer: this is for educational purposes only, not a recommendation to buy or sell any individual securities discussed. Any of the securities discussed may be being held by myself, Acorn Wealth, or the employees and contractors of Acorn Wealth. And past returns discussed do not guarantee future results. So just always be aware of the risks of trading and don't risk more than you're willing to lose. So so going back to this major kind of definition, I think, when you're looking at what most people call the market, right? When you talk about the market is up, the market is down, most people are referencing the index, right? And typically that's the S&P 500 that people are talking about. But the problem is that when you're talking about the averages, the S&P average, opportunity doesn't live in averages. It lives in pockets. And so when you start to define, okay, what kind of market are we in? You know, throughout this volatility, throughout this fragility. There's typically two kinds of markets that people are familiar with, and those are, oops, hang on a second here. Those are bull markets, and that is where everything feels like it goes up, right? The index is rallying, all stocks are rallying. It's an easy market to make money in, and everyone feels like a hero. There's bear markets which are brutal, but they're simple, right? Everything is down. And then you get selection markets, and that's what we're in at the moment. We are in very much so a selection market, and that is where pockets of areas in the market can perform really well, but it's not evident when you just look at maybe the overall market in general, right? And this is as we go a little bit deeper, this is what is really the silent killer for a lot of portfolios, which is a selection market, because you have this thing called the index illusion, and that is where the indexes, the averages, seem to be doing something, but underneath something completely different is going on. There's a money rotation, and that's what we've seen since November of last year. We have seen a great rotation in capital of what the heroes were last year has been a very different performance we've seen so far in 2026. So just a quick poll to put it out there to everyone here, as I always do. What does your strategy tell you the market's going to do next? Does your strategy suggest to you the market's going higher, that it's going to boom? Does your strategy suggest it's going to bust, or just not sure? What's the audience suggest here? A little bit of everything. As you're typing your response, typically it's about 30% say boom, 30% say bust, and about 40% say not sure. So if you are saying not sure, you are not alone. This is especially kind of right now. And so what we need to do is we kind of need to peel back the onion layer a little bit and stop just talking about market direction, but rather go to the data that gives us these answers, right? I mean, because that's ultimately what matters most. Type in the chat box, give me a 1 if you agree. What matters most isn't opinions, right? Certainly not some a YouTube guru or TV pundits. What matters most is what does the data tell us. And so for that, we start to look at what are the pieces of data that we can analyze. And so this is where I start to really like to get into smart money. And you've heard me talk about, for those of you who've been following us and following MetaStock over the last 20 years, we've both been around the block. And you heard me talk about smart money. So what is smart money? Well, it's looking at kind of where those where major moves in capital are coming from, and this helps give us the macro context. So it's not about forecasting what the market will do tomorrow, but rather seeing where the ocean is flooding, right? And by tracking those movements, it's been able to put some really important context around the market. And so take a look at this chart here. Okay, so this takes us basically over the first 6 months of the macro shift, and this started kind of early in November of 2025, so late last year, going all the way through into May, and this shows you kind of a really great representation of what I've been talking about so far, about the difference between the market's up, the market's down versus the components of the market, right? And on the right hand side, you can see all of the different sectors that make up the market, right? So it's not a stock market at all. It's a market of individual sectors, and within those individual sectors, there's individual stocks. And so what's actually performed this year, right? Energy, materials, consumer staples have all been top performers. Technology has started to recover. But I mean, if you take a look from November through to kind of March, it's that first chunk. This was the period where we saw the most amount of downward volatility for some sectors. And so earlier this year, when everyone was saying, "Oh, the market's down, the market's crashing, the market's this, the market's that," you had areas like energy that were up 30 to 40%. Right. So while all the TV pundits and people are talking about how there's no safe haven for investors and the markets, everything's crashing and I just I was listening to this thinking, well, what a load of hogwash, because if you're invested in energy, you're doing extremely well. If you're investing in basic materials, you've done extremely well. The reason why a lot of people had felt that the whole market was crashing and that there was no safe haven and things like that was, of course, that the sector that was getting hit the hardest from November through till March was technology. And of course, technology was the darling of the market last year. Technology was the leader of the S&P's growth. And so, for people who had been aware of this rotation, because what happened in October, November, December, especially in October and November, is we saw an extremely heavy amount of insiders selling and smart money and institutions selling technology, right? Technology then went on to be the worst performer of the market, dragging down the index, dragging down the S&P, because it is so heavily weighted in those top 8 technology stocks. Whereas what was happening in the same time was that same smart money was loading up on energy, was loading up on basic materials. And last year in October and November, we talked to members of the Acorn community, as well as even some of these public appearances, and we said, hey, we'd be out of tech and we'd be loading up on energy and materials and even consumer staples and small caps, right? And so you can see that there is this shift, and that can dramatically change the performance of your portfolio. Now, what went on to happen more recently was also quite fascinating, and this is where you can kind of see where things have started to push. And for that, we're going to just take a look at the direct data from the insiders. Who's ready to do that? Who's ready to peel back the onion layer just a little bit more? I don't want to leave anyone behind or get too technical, but I think you're going to love this. So, next layer of data helps see some of this trend right on the screen. All right, and this is going into to look at where the insiders and the smart money are moving recently. Now, insider buying on its own doesn't obviously guarantee a stock's going to go up or down, right? But it is one layer of that data, that context, that is just extremely valuable, because I mean, insiders, I think, are the best fundamental research you can possibly do, right? If insiders are backing their own horse, if insiders are putting money in their own stock, I mean, they are the only ones that know. Everyone else is guessing, right? They are the only ones that know what's going on fundamentally with deals and the company's progress and future progress, and and I want to see the insiders backing their own horse, and they report it publicly to the market. So this is all, above board stuff, and we're tracking their intention and what people do with their own money, with their own hard cash, in their own stocks, I think that is the best indicator of a company's potential strength or weakness. And so when we look at this as a chart across the entire market, right? I think this slide's just hiding a little bit. Let me see if I can pull it up. But this, the first way we look at it is transactionally. This basically is the chart through till May. This is a 5-year chart up until May. Again, let me just see if I can pull up that image ever so slightly. But as we're looking at it, up until May, this is the insider buying across the SPY. Okay. There we go. Let me just. I think that should have fixed it. Okay, let's just take a look. It's been difficult. Anyway, I'll explain this. The next image is fine, so we'll just move on to that. But just quickly, what this is showing us is the transactional ratio across the market. So right now we're just talking about the overall market here and how many insiders are buying versus selling. Now the piece of data I want to show you here is that this dotted line across the chart, that's the average. So how many insiders are buying versus selling? Well, normally across the entire market, there's an average. The average of over the last 5 years is 0.35. So what we look for is above average buying or below average buying. If we're above the average, that means that buyers are in control. The trend is towards the buyers. If we're below average, that means we're seeing the trend being the sellers are in control. And of course, the higher that level is, the more buying. The lower it is, the heavier the selling, right? And so transactionally, this is the ratio. Now, transactions tell us how many buyers versus how many sellers. So it's counting the amount of people, the amount of buyers versus sellers in a transactional way. Now, put that in perspective. Let's say that you had 10 buyers, right, and 1 seller. 10 buyers and 1 seller. That would be a transaction ratio of 10 to 1. 10 buyers, 1 seller, 10 to 1. And a lot of insider services will maybe, even if they report this at all, will only report that transactional ratio. But the problem with that is, again, in challenging that data, it's only one side of the coin. Because what if those 10 buyers were buying $1,000 worth each, and the seller was selling $1 billion worth, right? Well, yes, there's more buyers than sellers, but there's a lot more money coming out versus going in. So which is more important? And this is why we look at both. So as we can see, up until May, we had seen kind of transactionally, there was no convincing buying trend. So across the whole market, nothing really stood out. It was kind of ho-hum. But then when we went in and looked at the volume, this was a whole different story altogether. When we looked at the volume that was going into the SPY of buyers versus sellers, what we actually saw was a massive spike of the amount of shares being bought versus the amount of shares being sold was very strongly to the buy side. In fact, it had been one of the highest volume purchases versus sales that we had ever seen in the last 5 years, back to back. And so then this is where we dive deeper. And this is something, by the way, we do every single week with our members. It's part of our alert service as we look at where the smart money is going and which sector is expected to perform the best next. And so this was the chart I wanted to share with you again, because many of you would have been kind of following along in some of our April events, and when we were last on MetaStock, we were talking about this. But this is the chart I shared in early April, showing where the insiders were going and where we thought would perform the best next, and that was technology, right? But you can see that when you look at across the sectors, where this insider buying has been focusing is not broadly everything, but very specific areas. Technology being one of them. Also in consumer defensive. When you look at volume, that showed an even bigger trend. All right, so we looked at volume and transactions back in April. We saw that technology was actually seeing a volume ratio that was at 64.4 compared to its 1-year average of 6 and its 5-year average of 1.5. So technology, when we were back in April, stood out as the absolute darling, where you had massive insider buying, both from a transactional standpoint and a volume standpoint. Okay, and so this process alone was what led us to suggest technology as our favorite sector. Now, you could have been just really lazy and just bought the technology sector ETF, and that alone has gone up, I believe, about 20 odd percent, right? More, 25%. Right? It was the worst performing sector since November, as we talked about before. Worst performing sector since November, through to March, and then became the absolute best place to be placing money over the last 2 months, with a 20+% rally in the sector alone. Of course, we've seen that relayed in all of the tech stocks like Intel and the major 8 and things like that. Okay, so the value of doing this is important, and it also gets us away from just looking at the market and the futures as the only relevant piece, rather than looking at where those individual areas are. And that's why I see so many traders being busy, but not effective. They're just drowning in information, but kind of starving for actionable signals. Now, this is where things get interesting, and this is where I'd like to introduce you to my kind of favorite way to trade this. And this is how do we capture some of these major moves in terms of actionable trade ideas. And for that, this is where I'd like to introduce to you my absolute favorite strategy for trading these kind of markets, which is the Smart Surge system. This is, I've been talking about this over and over and over throughout this kind of this great rotation, because when markets rotate, it's saying that capital is not leaving. They're not saying goodbye and just selling absolutely everything. They're just moving somewhere else. They're saying, I want this now instead, right? And so when you get these powerful, aggressive moves, we need a way to capture them because they happen quickly. They're very powerful, but it's all about having the right timing. And this is where Smart Surge comes in. Smart Surge was built for this. The Smart Surge was built for these specific kinds of markets, which is a 3-stage process. The first stage is finding it. The first stage is the run-up. And so our Smart Surge scan looks for when a stock has basically kind of been almost drifting sideways. It's been a bit lifeless. It may have even been going down. But certainly to the average person looking at the stock in the run-up the part to the left of the chart, it doesn't look that interesting at all. And then comes the surge. So after a kind of almost lifeless appearance, it then rockets up, surges up vertically. Now, this could also be up or down because it does work in both bullish and bearish scenarios. And typically we might see anything from like a 20, 30, 40, 50%. I've even seen 100% moves over about a week. That's the first part of the move. Now, we're not trading that, but that's what puts it on our radar. And what we're looking for are stocks that are moving up in this kind of explosive way that look nothing like the market. We're looking for stocks that are marching to the beat of their own drum, right? The next stage in the strategy is that after we've had this explosive surge up or down for a bullish or bearish trade, we then look for the pause. And this is where the stock then kind of goes sideways and or drifts down. And this is what shakes out a lot of retail traders, because most people have been trained, rightly so in most cases, that, you know, when something does go up 50, 60, 70, 80, 100%, you know, sell. A bird in the hand's worth two in the bush. It's you know, anything that goes up that much is over. Don't chase it, yeah, et cetera, et cetera, et cetera. And 95% of the time that would be correct, right? A lot of the time these things fizzle. A lot of these things can be fake outs. A lot of these things can just end in a topping market. But in a case of a smart surge, it's the sign of something just getting started. And that's what makes it so special, right? So in stage two, this pause, kind of like the stock catching its breath, this is where we're preparing to enter. And what we do is we set ourselves up with a set and forget entry. And that is to purchase this stock, to pre-program. This is what our alerts do. You might get a video from me saying, hey, that smart surge AIR, I'm looking to buy that at $85.03. And I'm pre-programming that entry order in at that price. We're pre-programming to sell it at $94.43 if it gets that high. And we're pre-programming to have a stop loss at $80 if it goes the wrong way. So essentially, when we're in stage two like this, what we're doing is we now have enough information to be able to plan, right? To plan ahead, to be able to say, hey, this is our entry, this is our target, and this is our stop loss. Because the strategy is rule driven. And so we know exactly where we're buying, exactly where we're selling, exactly where we're proven wrong. And this allows us to set and forget the trade. So all of our scans and alerts will come out after the market's closed. So you can then do this. Of course, you can trade these intraday as well. You can scan for them on the hourly chart and use them on smaller time frames. But in the case of a swing trade, like I do mostly, this is exactly when and where we would set this up. And then comes stage three. Stage three is the surge. This is where absolutely everything has now fallen into line. The setup is now an extremely high probability setup where everything's leaning in our favor, and this is where we want to execute. So because we've already set that trade up in advance, that would have triggered automatically for us, right? Stop loss being set, target being set, first target being set, and then off it rips. And that goes from, say, $85 to the first target around 95, giving you a nice, you know, roughly 20-25% profit, and then continues on to secondary targets at 105 and further, where we then can take even more profit and update the stop loss further to allow it to continue running. So this is a very unique setup. Stage one, stage two, stage three. And these do not rely on the market, the overall index being bullish, because what these are looking for are specifically, and what's designed in the code, is looking for setups that don't look like the market. We're looking for setups that are marching to the beat of their own drum, that are doing something highly unusual, backed by heavy smart money and insider accumulation, and looking at volume profiles over different periods of time to say, hey, there's something unique going on with this stock. It's singing its own song. Does that make sense, everyone? Yep. So let's walk through another example, something like PLX. Right. So PLX, here is the smart surge signal. You can see this kind of green bar, 1, 2, 3, 4, 5. Right. So when we see something like this, what do we do? All right. So walk through this with me. So do you see that prior to, the stock looked like it was doing nothing? Right, just going sideways, crossing back and forth through its moving averages, kind of looks pretty lifeless, right? And then all of a sudden, seemingly out of nowhere, it rallies 40%. Okay, so there's stage one. So what the algorithm's doing, and there's hundreds of lines of code there, and this is something that took the better part of 15 years to develop. It's looking at, is there smart money accumulation? Is there the volume footprints of institutional and smart money accumulation and loading up? Is this making a move that is unlike the market? Is this a highly independent, unique type of formation? Is this smart money backed? Do we have the stage 2 consolidation? Like, all that's going on. And if it's ticked all those boxes, now we have a trade. So stage 1, stage 2, okay. What do we need to do here now for an execution? Well, we program our entry to be above the smart surge consolidation, above this line. So we program it in for $2.15. Where's our first target? Our first target, based on the smart surge rules, is around $2.40. Where is our second target? Our second target, based on the smart surge rules, was at $2.63. Okay, so off we go. Set and forget. And what's really awesome about this trade, you can see the actual, I wanted to share the print from my Interactive Brokers account so you can see it. This executed at $2.15 exactly. It was, if you can see, the date that I programmed that trade in was here. It was 1, 2, 3 days later, the trade triggered. So I programmed it in on this day, and 3 days later it triggered. And the time it triggered at was at 7:47 in the morning, right? So this is just a little bit under 2 hours under before the market opened at 9:30 Eastern. Right, so I was fast asleep in bed, probably in BC. That would have been about 4:30 in the morning. Yeah, I wasn't near the computer. Right, 4:30 in the morning, 4:47 Pacific time. That triggered at 2:15, bought me 4,000 shares. And later that day at 5:19 in the afternoon, that took profit on 1,895 of them for about $500 at 5:19, an hour and a half almost after the market closed. So again, you can see that not only is this a strategy that allows us to capture kind of these explosive, unique breakouts, but it does it in a rule-driven fashion that doesn't require you to be sitting in front of the screen to actually execute the trades, which is the hardest part. It's the most demand on your time, and it's the most demanding on emotional potential obstacles. You know, being stressed out about the market, or having FOMO, or chasing a trade. You know, execution is the most expensive part of the trade, and what this does is it makes it the easiest and most seamless part. That continued to rally. So what happens with the rest of the trade, the rest of the shares, the other 2,105 more shares? Well, they're now continuing on to 263, which PLX just rallied all the way up to and took that out as well. So by doing this two-tiered, two-staged exit, this allows us to protect our capital, protect our profit, and seek further upside if that stock really does have a lot more strength to continue going. And while doing that, we're moving our stop loss up along the way to protect our entry price. Now, this works in bearish setups as well. I mean, this was the Bank of Argentina as we went into the market meltdown earlier this year, right? I should say select sectors that were melting down, and finance was one of them for a period of time. This was one of the setups that was, showed you a bearish smart surge. Right, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row, indicating a bearish surge was about to occur, and then dropped from 23 down to 20, a 15% drop. We saw it in Tripcom. Sorry. This was a great example of a smart surge's power, right? Firstly, this was a beautiful double top. There's your double top of channel, and this is something that went into earnings and dropped down from that double top, $78, $80 down to 64. Now, in most cases, when you have a post-earnings plummet of 20-25%, again, what would most people suggest? They would suggest don't chase it. The move's already happened. Right? And in most cases, you'd be right. But in the case of a smart surge, this is a 1 in a million, type of scenario where we're expecting it to keep going. It's that powerful. And the rules here would tell us once more, after the breath, after the pause and the consolidation, there's that potential entry around $62. And then, as we can see, it then went straight down all the way another 20-25%. It moved a second one, that surge that we're looking for, down to around $48, $50. So again, if you're an options trader, 25% decline over a couple of weeks can be extremely profitable, depending on what kind of options you trade. Or if you're just simply going short the stock, that's a nice little 25% return there, up to 75% using margin and things like that. So let's get the drawing controls off here 1 second. And what made this really special and even more powerful is that we also saw the smart surge indicator on the weekly sell signal as well. So, I mean, this is it's very near and dear to my heart, because I am very critical of people talking about trading the stock market. The stock market's up, the stock market's down. And I always say, well, what do you mean by the market? That's such a throwaway term, because no, the market's not down. If you're invested in energy, you're up 45%. If you're invested in tech, you're down 25. Yeah, I guess that makes a big difference. So, when you're talking about the market being up or the market being down, be more specific. Right? What stocks are you talking about? What indexes are you talking about? What areas and why? And that's what Smart Surge is so great at doing. It's getting rid of these kind of superfluous throwaway statements and generalities, and getting into, hey, where is the opportunity now? Where is the opportunity tomorrow? Because there are always opportunities in the market, always, in every market, on every day. There is something there is money moving from one place to the next, and in a selection market, it is that much more pronounced, and that is why the opportunities can be so unique and special in times like this. So, how do we find these? Well, let me just, I'll come back and show you some more setups in a moment, but let me show you how you can be a part of this offer today. Because we put together something special for MetaStock. I love, MetaStock is such a great company to work with. As I said, we've been working with them since Acorn began about 20 years ago, almost. So we have got something special for you, and I'll go through that now, because it is, we're making it relatively very, very easy for all of you to be part of the Smart Surge program as part of the MetaStock event today. And so what we're providing you with first and foremost is the way to scan and find for these. And this is really the golden goose, right, that lays the eggs. Without the scan, the smart search strategy on its own is relatively significantly less powerful. Why? Because they're so hard to find, right? The smart search scan is looking for these setups on a daily basis or hourly basis, depending on what scan time frame you want to use. I use mostly daily and weekly. I'll run those scans just after market close and review the setups. As we scan 8,000 stocks per day, 8,000 stocks plus per day, guess how many ones we find? About 5 to 8 out of 8,000 that are good enough. 5 to 8 out of 8,000 per day. So that is 1 in 1,000 to 1 in 2,000 setups each day that are good enough. So you can really see that if we had to go and manually try and find these, it would be virtually impossible. No one here has time to go through 1,000 to 2,000 stocks to just find one smart search. And hoping to just stumble across one is also a fool's game, because smart search setups move very fast, right? We're from the alert to getting in. That's usually quite a quick transition, and then from getting in, from when the entry signal is appropriate to hitting that first target, we're looking at we usually expect an average of 3 to 5 days for the stock to hit that, to go from entry to first target hit. So it is a very fast moving strategy. It's the most aggressive, most powerful strategy from a time perspective of all the strategies we've taught and traded for the last 20 years. And so finding them is the key, and that's what the scan does extremely well. And the second part, I should say, just before I move on, that is lifetime access. So you can load it up onto MetaStock. You've also got access to load that up onto other platforms as well. So if you use MetaStock and TradingView, or if you have TradingView and TradeStation, you can put it on both there as well. Okay, lifetime access, multi-platform access, all yours included in the offer. I'm just getting a little bit of background noise coming through from someone's microphone, I think here. Not sure if that's you, Jeffrey, but just moving on. The second component we're including is the smart search indicator itself. So this is where you'll see it visually on the chart. So maybe it didn't get alerted today. Maybe it was something that had been alerted bullishly or bearishly a week ago, a few weeks ago, a few months ago. These are moves that you'll want to be able to see, especially with stocks that you might already be in today. Right, you might want to go in and look at those smaller time frames like the hourly or even the 15-minute and see, hey, are any of my positions generating a bullish or bearish smart search signal? That would be very important to know, especially if you've had a big move already and you're wanting to know, is there a good chance this is going to continue soaring, or is it topping out? So the smart search indicator, you can put on any time frame, 5-minute, 15-minute, 1 hour, daily, weekly. They are all relevant and important within the context of that time frame, and you'll be able to see that again on any platform. We're giving you lifetime access to that as well. You can use it on Wealth Charts, TradingView, Thinkorswim, MetaStock, TradeStation, Trading Indicators, all of the above. As a lifetime license, you also get a multi-platform license with that. So both the scan and the indicator, all yours in this offer. So too, you might be wondering, okay, well, this sounds great. So I'm going to be able to find the setups. I'll be able to, every time it's alerted by the scan, I'll see it on the chart every single time as well. Fantastic. All right, well, what's missing then? How do I trade it? When do I get in? When do I get out? Right? And we've got that covered too. So in two parts. one, a complete video walkthrough, which will take you through from setting up the scan, running the scan, and then going through those 5 to 8 setups that this unique scan finds, those smart surges, all the way through to then saying, hey, out of those 5 to 8, which ones am I looking to enter? Okay, so okay, and so this is where we're going into setups execution part. The entry, the target, the second target, and the stop loss are all rule driven, as they should be, right? Because if you don't know where you're going, any road will take you there. Every strategy should have a defined how we get in, where we get out. And if you know what those things are, you can pre-program those, especially when they're pattern-based and rule-driven. So that's covered in that one video walkthrough, but it also comes with a PDF that you can just stick up on your wall and say, these are the rules for entering and exit that you can look at every single time you place a trade. So it is from start to finish, all that black and white laid out both visually, but also in a written format. We're also including our advanced flags course, which is a very complimentary video guide, which goes with the Smart Surge. You don't have to go through it to start using this. You could go through this a month from now, 3 months from now, 6 months from now, but it is yours, and it is yours for life. And we're including it because it's a terrific complement to anyone who maybe isn't as technically driven, that hasn't done a lot of pattern analysis perhaps before, doesn't understand why so many breakouts fail, so many fake outs trap traders like Head and Shoulders and things. It's a great course that goes through that, and just will help fill in some of the blanks if you haven't had a really quality education in that area yet. So that's complimentary. And so in total, you get the Smart Surge Indicator for life, Smart Surge Scanner for life, instant on-demand access to the Getting Started Guide. You get your own dedicated one-on-one white glove service for the next 3 months. So if you have any questions or you need help onboarding, they are there for you for the next 3 months for an unlimited amount of time. You can call them, WhatsApp them, screen share with them, whatever it is. And most importantly, they're there for that very first onboarding call. So if you want them to help get you set up on the platform, run the scan with you and walk you through the rules, they can do that so that you're off to the races right away. All right. You're getting lifetime access to that bonus Finding Flags class, which is $19.97. You can do that as many times as you want and whenever the timing is right for you. So the value is well over $5,000 in terms of if you're going to go and buy those things individually. We did a new members offer on this, as many of you would have seen last year. For new members, lifetime access to this package was $14.97, and that is on its own is a great saving. But as I mentioned, we've got something that we're doing very special for this kickoff MetaStock event, and that is including all of these things for lifetime, all these features, the scan, the indicator on multiple timeframes on multiple platforms, your 3 months of onboarding access, and the advanced class for only $397 for everything, absolutely everything. The link to get started is acornwealthcorp.com/meta. acornwealthcorp.com/meta. I'll just see if we can put that into the chat box. If you have any questions as we go through, now is the time to ask them. acornwealthcorp.com/meta. Now, we wanted to do something extra special, and that is for anybody getting started right now while we are live. We want to reward everyone who's come here today, who's spent the time and paid the attention. Anyone who is getting set up today while we're live in the event over the next 15 minutes, we're going to include an extra bonus, and that is a fast action taker bonus for the first 25 people joining right now. you'll get included 3 months of our trading room and live alert service. Okay, 3 months bonus. So that is every Tuesday and Thursday. Every Tuesday and Thursday, we do a live trading room at 4 p.m. to 5 p.m. Pacific. 4 p.m. to 5 p.m. Pacific. And that goes for about an hour. It's recorded and sent out right away afterwards. And if in case you miss it, like some of our members that are overseas or in Australia or in Europe, things like that. Excuse me. Just bringing that up on the screen. So it's recorded. You can ask any questions you want, send them in before or after the event, and we'll address it in the next session. You can ask questions live if you can attend live, and all of that's uploaded to the customer portal. So that is an extra $600 in value for 3 months of the live trading room sessions, and as well, also our live trading alerts. So we send those out at the beginning of the week on Monday, Wednesday, and Friday. So Tuesdays and Thursdays, you have our trading room, and on every other day, Monday, Wednesday, Friday, we send out a video sharing with you our 5 favorite trade setups. These are straight from the Smart Surge scan, looking for these kind of explosive ideas where there's insiders loading up, and we have highly independent, unique opportunities. We go through the entry signal, the exit, the targets, in many cases multiple targets, the stop loss we're looking to use. Again, it's up to you to decide whether it's a trade that's right for you. This isn't financial advice, but it's breaking down, going through all of the ins and outs. One of our members sitting in a recent GoTo webinar had been looking at all of the different offers over the week and things like this from people had said, take the deal. It's one of the best deals today. From Susan, who's been with us for many years, get it now from an Acorn Lifetimer. From Deborah, oh my God, I think she's saying there, it is so helpful. And now I am not in panic mode. I just wanted to share that little screenshot there. It truly is extremely unique. And when we're talking about getting away from the status quo, when we're talking about getting away from just kind of these, the market's up, the market's down, and getting back to what is really going on behind the scenes, that's what this is all about. So once again, you can get started by going to acornwealthcorp.com/meta. And if you are in the first 25 people, then we will be including that 3 months of trading room, 3 months of our trade insider trade alerts, completely complimentary as a fast action taker bonus. So there it is again on the screen, acornwealthcorp.com/meta. Now, let me just go back a little bit. And again, if you have any questions, you can type them into the chat box. And I just want to finish off by showing you just a few more examples. And here we go. So there's a link. So recently, let's just show you a couple more that this is brought to the forefront. DLTH, great example. So what you should see in this is it's the same setup over and over and over again. Surge, part 1, breath, part 2. Off we go to the target of 380. You'll see the time frame from entry 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 2 weeks. 2 weeks for a 20% move. You'll see this over and over again. Like 3 to 5 days to maybe 2 weeks at the most is about how long we expect this to perform. Or stop out, either way, that allowing us to move on to the next trade. SABR, which I am out of now, but again, you can see the same thing here with my entry around 140, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days, 2 weeks, right? 3 weeks for a 35, 40% move. Park Aerospace, PKE, same kind of thing. From March to April into May, we saw 30% move. from SVCO from 450 to 1050 is about a month and a bit for 100% move. EDSA, phenomenal. March to April, 160 to 8, 400% move. And then it went again. And you actually can see how high that stock actually soared all the way to $30 plus. Dare, boom, if you like, the smaller stocks, not penny stocks, but smaller stocks, massive volume on that, from 185 to 340. That was a beautiful one from our alerts recently. Now I am out of time, but I mean, again, you can see that all of these look almost identical. LCUT from 450 to 8 to its target. Done now, even though that had another big move that already hit its target, that doubled in a month, in just a couple of weeks. Right, over and over and over again, these all look identical, but they're not. But even though they look identical, they're not easy to find, and that's what the scanner does. It's what the indicator identifies, and it's what you'll have access to for live for only $397 plus the 3 months of bonus if you are part of the first 25. So there you go. Congratulations, welcome on board. So I'll put the link up on the screen one more time, but I believe that is the end of my 55 minutes. So I just want to thank everybody at MetaStock and of course Jeffrey and everyone on the team for hosting another great event. And thank you, everyone in the room, for being such a great audience, and looking forward to working with you on the inside.
All right. Thank you very much, John. I've also posted the links in the chat for both YouTube and GoToWebinar, so you can click on them and save yourself a little bit of typing. Again, John, thank you very much for joining us today. Appreciate it.
Thanks very much, mate. Can't wait to see the next speaker.
All right. I'm going to go ahead and kind of jump over here, and we'll talk a little bit about the Traders Forum, and then we will move on to our next speaker. So I do want to invite you to come join us at the tradersforum.com. The Traders Forum, we have a lot of educational information that's available up there. We talk about the markets all the time, talk about the stocks we're interested in, the patterns that we like, all of that kind of good stuff. One of the things we do with a lot of the speakers that are here is we'll go into a little bit of a podcast type of a format where we just talk about what we see in the markets, tickers we might be interested in, how we got involved in the markets, lessons we've learned over the years, all kinds of fun stuff. So all that's for free. To join the tradersforum.com, click in there. You can start hanging out with us, and we'd love to have you there. So I do want to say that all of the offers we're talking about today, you can find at metastock.com/conf promo. We've talked a lot about MetaStock in that extended trial where if you buy a month, you can get the second and third month for free. You should do that. There's a reason it's been rated now 33 years in a row the top software in its price category. Give it a go. Give it a try. If you pay $75, you can run it until August 20th. I did check the date over here. It's a great software. It's going to be helpful for you. I love the scanning. We're gonna spend an hour playing in it right now with my friend Anne Marie. But I love the ability to scan, find those ideas. It's such a beautiful charting package, and $25 a month. So metastock.com/conf promo, 800-882-3040 if you want to get any information about it, and metastock.com/salespchat. All right. Our next speaker is a good friend of mine, Anne Marie Baiynd. I'm going to just adjust my seat here right now. Anne Marie runs the tradingbook.com. She was one of our very first guests when we did a podcast for the Traders Forum. We've had her in there 2 or 3 times, and she does a really, really good job. One of the things that I always tell when I talk about Anne Marie is we'll do a lot of chart checkups where we just look at charts that people are interested in with Anne Marie. She's very good at it. But a lot of times it'll be a company I've never even heard of, and she'll know when the earnings is out or what the news is going to be or something about the company. And she's a walking encyclopedia sometimes when it comes to trading. Very, very smart. Let's go ahead and get you started, Anne Marie. How you doing?
Doing great.
All right. You wanted me to run your charts.
Yes, I do. I do.
Before
you
we
always
start,
run the charts better than me.
Oh,
Just so you know.
I make no promises. Before we get started, maybe you can help me give away a free prize.
I'd love to.
All right. Okay, let me pull my prize list out over here. And I think what we're going to do, let me just I'm going to find a good prize. Let's do so yesterday, John Thomas, we did a recorded, he had emergency back surgery, but he recorded a webinar before. But he has a 6-month subscription that we're going to give away called the Global Trading Dispatch. And we're going to give it away to somebody that you like. Now, the way we're going to determine who you like, Anne-Marie, is I need you to come up with a number between 2 and 5,123.
5,123?
Yes.
Wow. Okay. 1147.
Ooh, we're going with the low numbers today. Okay, 147. Let me figure out who that is real quick.
1147.
Oh, 1147. Okay.
1147.
The last number we had was 23, so you're good.
Okay. Yes.
1147. That is Joe H. in the U.S. I'm not supposed to say their last name because Kelly thinks I'm doxing them on the internet if I say a first name and a last name. It says Joe H at a Gmail address in the U.S. So, Joe, congratulations. I actually am going to ask him to give me a copy of that newsletter because I think John, I really like kind of the analysis John does. So, all right, that's it. We give away the prize. Thank you.
I want to apologize. You're going to hear a little background noise today, and it is because my neighbors are paying me back for the renovation I did last year by doing theirs this year. And so they're grinding new stone. I live in a high rise, and since we own them, we get to do whatever we want. And so they are paying me back for the 6 months of torture I put them through last year with my own renovation.
I think they were just a little bit jealous. Your house looked better than theirs.
Maybe so. Maybe so. But my apologies. I had no idea they'd be grinding stone today. And so I apologize.
I can barely hear it.
Barely. So. You're too kind. Well, hopefully the listeners can barely hear it also.
I'm also deaf, so.
Okay, then. All right. Well, my apologies, everyone. So Jeff and I actually have been friends a really long time, and we were both a lot less gray, but I have Redkin helping me out, and Jeff's going natural. So,
I'm just growing out. I'm just growing old gracefully.
Yes.
I'm silver fox.
Yes. It is a superpower to grow old gracefully, I assure you. So we have been trading a long time together. He and the team at MetaStock helped me build this incredible piece of work, and year after year, it does a fantastic job of giving us solid information. And so today, what I wanted to do with Jeff is sort of talk a little bit of macro to give folks an understanding of the things that they might be seeing out there in the world. A lot of us that are on these webinars together, certainly this MetaStock conference, we are listening to the news, and a lot of it concerns us in one direction or another. We are wondering what the markets will do and how it will affect our investments and the like. And so one of my favorite things to do is look at the 13 Fs. Now, the 13 Fs are what big hedge fund managers and institutional desks have to report to the SEC in what they are positioned in. They're not at liberty to tell us what international things they are exposed to, but they do tell us what national things and U.S. companies they are, or at least on the U.S. market, that they're investing in. And so what we noticed is into this next quarter, a little bit of conservative stances. A lot of them have cash on the sidelines. A lot of them have bought cash secured puts or sold cash secured puts, meaning They will sell a put very far out of the money so that if a stock comes down into their area, they are going to be able to collect that stock on the cheap. And so for those of us that trade options, this is a very nice thing to do if you have favorite stocks that you want to look for. So one of the big things that are coming up, of course, we have NVIDIA earnings today. So we will look at NVIDIA first, and then we'll look at Walmart. We'll talk about how Target positioned, and then, you know, potentially what Walmart will do. But we can see that NVIDIA was sitting in a very large channel, and then it's broken out and now had new highs, but is coming off of those new highs just a little bit. Interestingly, you can look at the top and see our purple momentum indicator, and even though price is rising, that momentum indicator is sort of staying level. So it's telling us that there are not a lot of new buying structures up into the earnings event. That being said, a lot of people have bought options far out of the money, and so that's something that says there are a lot of retail traders that are very hopeful that prices will rise. Now, they probably will in the long term, but my thought is the following. The system we have here is telling us that we do have some shorts that are beginning to position, right? So we've got a shorting formation that is set up. Now, in a shorting formation that has an upward sloping moving average like that, it tells us, listen, as they first break it, they're going to lift into that resistance and potentially fail from there. So what we want to do when we see a sell short like that is to say, okay, where is the top of that range? Where's the top of that candlestick that gave us the brand new high? That's going to be a space that if we short, we're going to have at least that much risk. Now, a lot of us in this particular market were terrified to short. We're like, who wants to do that? The market goes up with every single dip. And there is a lot of truth to that. So it might be worthwhile at this juncture for us to wait until earnings present themselves, watch the fade, and then position on the pullback. So my warning to folks is don't try to play that earnings game aggressively in this kind of market, because there's a lot weighing on the market. There's inflation, there's the war, there's what Warsh is going to do, there's money supply, you name it. We've all got things to be concerned about. So when this sort of thing shows up just in front of earnings, remember the way to use it is by saying, okay, what do I have at risk? I have a pretty wide risk event because the top of that high is pretty far away from where I am currently right now. But what I'm seeing is that bounce into the earnings event is also likely to fade. Now, the truth of the matter is the last 3 earnings, NVIDIA has done tremendously well with its results and what it's told us, but the price action has faded off of every earnings. And so if past becomes prologue, then what we've got ourselves is a pullback that's going to give us buying opportunity. And, oh my gosh, I'm so sorry.
It's not even that loud. Don't worry about it. Just keep going.
I can barely hear myself talk. So great Apple Mac, the Mac phone, the Mac microphone is so good at filtering out excess noise. Okay, so that being said, we really want to look at it somewhere around the 200, potentially the 200 area to get ourselves involved. And that's pretty far from where we are right now, but it could make a very nice price point from the chart. Now, if you just want to run the cycle and anticipate that it's got downside flow, you can do that, but it could be a very expensive trade. So I would wait for the dust to clear and then decide what we want to do moving forward. The next thing is Target. Target reported today, and they had pretty good earnings. They have pretty good earnings, but they did warn and tell us that the retail consumer is still spending, but they are tightening in terms of what it is that they're spending on. So this is an ideal space of sharing with you as an investor what's important to do. Notice this chart had a very nice short setup. The short setup absolutely continued, and then just before earnings, it gave us another red candle and stopped above a new low. And then the earnings candle sent us all the way out of that short. So what's the takeaway? When you're looking at a system like this, any kind of mechanical flow system that sends you into a short and it looks great and you're coming into earnings, take most of your profit off. Earnings is that, what do you know? Anything can happen kind of space. And indeed, the short stopped out here, but you could have saved yourself a lot of premium and profit by just getting out before the earnings. So often it's very important to look at what you have that's clean profit and what could happen. Could it have fallen off the floorboards and given you another $20? Yes, but you don't know that. And the unknown gives you much more information than you might possibly want. And certainly with what you know, you can say, hey, this is going to be a move potentially in another direction that could eat away some of my profits. One interesting thing about charts, if you wouldn't mind, Jeff, expand that very last edge where we had the short in view, right? Here's something very important. If you get into a short and you're trailing that short very nicely and you're not making new highs, and then you have some very high volume candlesticks like the ones just maybe a week and a half ago, and they're all downward like that. On those big volume candles, they're telling you two things. And actually, you don't know which one it is until after the fact. The one thing it could tell you is volume initiation. That's where a cascade of big volume has come, and you're going to have a lot more. The second kind is volume exhaustion, and that is everybody piled in short, and now they're waiting for price action to turn around. And so the way you can tell which one that is by the 2 days following up. And if you see very big volume forcing itself down like that, and your next 2 days make higher lows, it's time to get out of your short. Just, my goal hanging out with Jeff is always to share things that a seasoned trader like myself, and I use the word seasoned in a very favorable, I'm well preserved, one of those, right? Dropped in formaldehyde. But when you spend day in, day out looking at charts and trading them and actively managing portfolios like I do, one of the important things that we realize when we're talking to other traders is little things in the mechanical flow that give us added information. And that sort of thing is really important, particularly as these cycles that we're seeing occur faster and faster. A lot of times in times past, we'd have to wait a whole quarter to see a chart move 4 or 5%. Now it's moving 4 or 5% a day in some spaces. And so that kind of speed means that we need to think about things in another way. We need to think about cycles that are a little bit quicker. Else, what we need to do is wait for these deeper pullbacks that allow us opportunities to pick up stocks that we can hold for the long haul. I have a few more that I want to talk about, but first, are there any questions? Who's been trading a long time and still feels like they're sitting on the catch-up space, or maybe feeling like they've got a good system and they're using something inside of MetaStock, but they feel like they could always be just a little bit stronger, a little bit faster in that sort of space? Tell me a little bit about your journey. Happy to answer questions about that. And if you want to talk about a particular stock, happy to discuss.
All right. And yeah, if you do have stock symbols or questions or things you want to talk about, put them in the chat. If you're in GoToWebinar, click on the questions box and put them in the questions area. That's it. For some reason with GoToWebinar, the chat's turned off. I have one I'd like to look at with you.
Absolutely.
This one's a favorite in the forum, the Costco. Let's take a look at it. Have you heard of this stock?
No, it's
Okay.
my first time.
Okay. Well, let's see. It had a little bit of a run up the last couple of days.
Just a wee bit.
Yeah.
Just a wee bit.
We're well over the 1,000 mark with Costco.
Yeah. Yeah.
Very
So it's a fantastic stock. So listen, I went, let me tell you about my trip to Costco. So 2 summers ago, we got a gigantic house for all the kids and their kids to come. And for those of you that know me, you know I have a carton of children, literally.
A carton.
So a carton.
Would that be a 6-pack or a 12-pack?
It's we have 9 of them. So
okay.
yeah, so it's in between, right? So we've got a lot of kids, and they have kids, and some of the kids have kids that have kids, and so there were a lot of us. So we went to Costco to get, food, because most of them are boys and they eat anything that's not strapped to the floor. And so we went there, and literally barely walking room in the aisles, and the aisles are huge. We went, unfortunately, on something like a Saturday morning or whatever. I have never seen such a busy place in all my life. And the food was incredibly high quality, tons of organic stuff to choose from, anything that you wanted, really. And it was packed. And as soon as I left there, I went, probably ought to buy some Costco. And it held in a very long channel for the longest while, right? Especially when really we can go from maybe April, February, March, April, all sideways. Actually, yeah, even to the prior day. Yeah, so it's been sitting sideways for a really long time.
A long time. Yeah, you can just keep going back.
Yeah, so the breaks are certainly expected eventually. So a lot of times we go, wow, how can we measure a break like this? So here's something that traders do. If you wouldn't mind drawing a channel along the top and the bottom of, from right up there to, not that far down, up just a little, just a little bit more. We want to catch, we want to catch, yes, that's about right. So very interestingly, although it seems like it wouldn't be so, it turns out that we have measured moves in the market. And I know that a lot of the traders that build systems understand these measured moves. So what's the distance between the low of that line and the high of the other line?
Do you want to do percentage or points?
Just points.
Okay, let's do points. If we just go from the bottom line to the top line,
Yeah.
it's going to be roughly about 65 points.
65 points. Okay, and the high of it is?
The high of the line is 1,034.
Okay, so 65 points would be about $1,100, round and about, if we go from the top of that line until the up at the top. Okay,
right.
So that's going to be your target for a breakaway formation. Now, how a breakaway formation continues is that it usually retraces the breakout level and then runs to the top again if the market is not in a sharp upward formation. Now, our markets have been in an upward formation, but are now starting to stall out a little. So we had the expectation that Costco will come back, and it should come back into that 1,040, whatever that number is, right around there, a little bit over 1,000. And so if you're a trader that's saying, man, I sure would like to have some Costco, you have a couple of options. You can look at the chart and buy a leap in the future, but I would buy a spread versus just call. You'd say maybe you want to buy the 1,100, 1,200 call. So you buy the 1,100, you sell the 1,200, but you do it in like 2028. Gives yourself all kinds of room, and you really get it on the cheap. And so what that does is give you 100 points, $100 per stock, and then you're buying 100 shares with one option contract. So it's about, what is that, 10 grand? Mm-hmm. So 10 grand. And so what that'll do is give you a 10 grand upshot for probably $1,000, maybe even less, depends. Okay. But that allows you to position for the long term with the stock at a very low cost, but still with the upside, knowing that now is not a good time to buy this one, simply because it's very close to its target event. And as a matter of fact, yesterday's price action is higher than today's price action in general, right? So we're looking at a price formation that is giving us some knowledge of the fact that we could have ourselves a place that we would need to take profit if we were long. If you are long in Costco and you want to keep staying long in Costco, there's nothing wrong with selling a call out of the money. A lot of people are very afraid to do that. They're like, what if my stock gets taken away? Just remember to look for big options volume. If you've got big options volume, you're going to be in good shape if you're just selling one or two, because there's not that many of them in the chains. One or two is not a big deal, so you'll be able to do just fine. If you're trying to sell a lot of them, you want to really make sure that you have a lot of options volume so that you don't get your stock called away. But absolutely nothing wrong with doing that. And here's the thing. We are in a presidential midterm cycle. The midterm cycle is the weakest summer cycle of all of the 4 years in a midterm, in a presidential year. That midterm cycle event, it's year 2 where we have elections, and those are the weakest from mid-May all the way into September. Doesn't mean that it'll be the same this time, but probability says that in large likelihood, we will either be sideways to dribbling down into support structures.
George Tobin in the chat Says cover calls are the eighth wonder of the investing world.
They do work. They do work. And a lot of times people say, oh, you know, that's a boomer strategy. And it might be, but it's a very beautiful way to position carefully and collect revenue stream while you hold a stock, especially if it's a dividend bearing stock. You're just getting the double dip event for most of that. So I heartily agree, Mr. Tobin.
He'd also like to look at a different, maybe an ETF, he says.
Let's do
RTX.
it. Which one?
He says RTX.
Oh, okay.
RTX
is not, RTX is the Raytheon complex.
Right. Yeah.
Yes.
And then he wanted to look at Air 2, but we'll look at RTX to start.
Okay, so here's the big story. It seems to me that the run-up into the war is where everybody just bought very nicely into the stage, and then as the I don't want to be as the altercations continue, now they're unwinding all of that run up into that event. And so you look at Raytheon and you go, well, are we in a space where the war complex is alive and well? The answer is yes. Are we sitting near key support? The answer is yes. Could you position here? And the answer is yes. Now, how do you want to position? My thought is the following. You have to decide, one, if you actually want to have the stock in hand, or you want to do a cash secured put. And what that means is, let's say, what do we have as our price? Let me see if I can see that very well. What is that price? It is
Getting it 180.
What? Yeah, thereabouts. Yeah. So it's about 175. And so as we stare that down, you might say, hey, let me sell that 175 put. If you want to get put to the stock, sell it at the money and sell it in the near term. For me, I don't have any love for any particular stock. I am completely stock agnostic. And so what I will do is I will say, what could the element of the rate of return be? And if I look at that, I can see, you know, I might want to sell the 165s, the 170s, and I might want to do it in December. And then that way I get a lot more premium for agreeing to take a position in the stock if it comes into that area. And then once it comes into that area, I can sell calls against it. So I'm not holding the stock while it fades, if it happens to do that. And when I do get put to it, I'll be in great shape. The further out you sell the put, the more premium you're going to get. And Raytheon, listen, our war complex is alive and well. And is Raytheon well positioned? My thought is Lockheed Martin is probably better as a complex to look at, and then maybe L3. It depends, you know, even Boeing, because of all their skunk works or their black ops that they have with the government. Certainly Raytheon is there, but I just happen to like Lockheed Martin better. And you can see for Raytheon, it's got a shot at hitting all the way back to 200. I think it's going to take some time.
George says, thank you. I was thinking about an iron condor on it.
Well, if you have it far out and wide, not a bad thing, but look at those cycle flows. You see that volatility? That volatility is going to make it hard for you to pin those edges. So I I would say, hey, that's not unreasonable. Just make sure that those pins are wide enough for things to work in your favor.
All right. Now let's look at the ETF. AIRR.
AIRR. What do they have?
Wait. I need to be typing in the right place. Okay.
And what are these guys?
This is an ETF. It's AIR. I do not know anything about it. I can ask Gemini for us, though.
Yeah, please.
What is the AIRR?
Do you use Gemini much?
Oh, all the time. My writing style has gotten a lot more concise, and you can understand what I'm saying. So AIR is the First Trust American Industrial Renaissance ETF.
Huh. And what are its holdings?
I think I'm in the wrong place. AIRR Holdings. Looks like it's got, here you go, quite a few.
Okay, so
Comfort, Maztec, Argonne, Dicom.
okay, this is interesting. All right, let's have a look at this. It's had
this is an infrastructure ETF, is what George is telling me.
Okay. All right. Very interesting. I had not heard of this. A lot of people telling me things I just did not know about. Okay, so this one's pulled back, old resistance, new support. Looks like about 120. Infrastructure obviously has a ton of upside, right? So if we stare down, a cup and handle formation, or we do the same sort of channel event, we can see sort of, let's see, we got 110 to 120 looks like, right, as the range, so 120 to 130, and then it breaks. So the question is the following: does it hold 120, or does it head back to 110? And that really is an unknown at this time. Chances are it doesn't have a very solid option chain, if it has one at all. But that gap that's sitting between maybe 112 and 118 potentially, there's a big gap in the chart. And that very likely will fill. So if I were a betting man, I would surmise that 112 might be the next sign you might want to see. Notice the same structural motion that I talked about. Expand those last few days, if you wouldn't mind.
I will. I don't mind
so much. Thank you. All right, so notice this. We had a long formation right here that it went higher, started fading, and then we had this very big doji. So here's a tidbit for those of us. For charts that are very fluid and traded a lot, I think the number is somewhere like 3 million shares a day. If you find a doji in a chart, you measure the top of the doji and you measure the bottom of the doji. And if it closes either above that ledge, it's likely to continue higher into its next target, or below the ledge, it will break down and likely come into the next relative support. Not only that, it had massive volume. So if you look at the range and you go, okay, what's happening? I have massive volume here. I had one candle, and then the very next candle dropped underneath it. And so that opens up our cell formation. and now it's underneath the low of that doji, and so it's going to slip into near support. And of course, near support, we've got it. It's the red dotted line that you see underneath there. So my thought is that bounces ought to sell, and this chart needs to fill in this gap that looks like it's between, 113 and 118.50 or so, and then maybe you reconsider taking a position long in there.
All right. You ready to take a look at Apple?
Absolutely.
Let's take a look at it. Here it comes.
So Apple really is at a very interesting space, because for a while it was doing kind of junky. I'm just saying.
Yeah, it was.
It
Definitely.
was. And so in this sideways space, when it finally broke out, let's think about the reasons why it finally broke out. So the last time they had an Apple's event, what did they release? They released a brand new version of health tracking that is going to send it into the next medical space, right? So they are looking for ways to expand more into our lives to help take care of more things that are useful for us, right? They're going to be able to do AFib testing and all kinds of other things with their Apple Watch and that sort of stuff. So they push themselves into the purview of healthcare analytics that should give them another berth to sell and upsell subscriptions. When that came out, Apple bounced, faded for a day, and then held the clip, and it's now in a breakout. So what do we do here? Has it broken out too far? Is the chart going to continue to rise in the near term, in the far term? What are we staring down? And so it's often pretty hard to sit in a chart or to look at someplace and go, wow, I took my eyes off Apple because it was just a nothing burger until it breached this, what is that number? 280? 280?
Yeah.
And so as it broke 280, it's now into the 300 area. But take a look at how it's behaving up here at 300. One, it's underneath the hull, right? And so if we're under the hull, we know that there's a support event. The hull is the moving average that we've got right here. So it's looking for support. It seems to have found a little bit of it, but the long is still actively engaged. So what we want to see it do is close the week over 300. If it closes the week over 300, it's probably got itself another $20 over the longer haul, but the price action is very likely to slow down until it breaks above that hull. And so what we're looking for is maybe 310 or so. Now, this is another one where a lot of people go, I just want to buy Apple and not have to worry about it because I'm going to give it to my kids, or it's going to be something that I can cash out when I'm older and I'm not working, or XYZ, whatever that happens to be. And so when you're staring something like that down, again, the cash secured put is a beautiful thing. If you say, well, you know what? Let's say this thing pulls back into its initial buy zone at about 280. Is that a good space for me to accept the stock? There's a cash secured put. You might get $10. You might get $1,000 for just saying, hey, I'll buy it at $280. And that gives you a lovely cushion. It makes your price action event $10 cheaper than that. So you really get in a 270 for 100 shares of that. And you can carry on from that way. If you're looking to participate from here, moving forward, it's much better to wait for a dip if you're underneath the hull. Let the dip come all the way in and stabilize, then break out, and then you get to go buy it. As long as it sits under the hull, it tells you they're trying to find support. And so we don't know if support's lower or higher, but what we do know is when it starts trading above that hull for the first time after being below it, it's going to give you some upside trajectory. So that's what I would say about Apple. It's a little long in the tooth, but it's got room to run. They actually just got into a lawsuit with OpenAI. And so I don't remember exactly why they're huffing and puffing at each other, but they're both annoyed. See, the AIs that Apple has decided to use are both Gemini and OpenAI. So they use the Chat GPT and Gemini depending on whether you're on a desktop or you're on your phone. And so they're hedging their bets about who's going to win the race. We have no idea, but that lawsuit might give them a little bit of trouble. Wait for the pullback. We know we've got a seasonally weak structure between May and August. Might be a great idea to look at it past that.
Do you have a preferred AI?
Do I have a preferred? Well, it depends what I'm doing.
Sure.
If I like to, for things like research, tell me about what's going on with the 13Fs, tell me about XYZ, I like Gemini. But I do a lot of coding. And so if I'm trying to code with Gemini, I get a lot of mistakes. If I use the newest version of ChatGPT 5.5, I don't get hardly any mistakes. I'll use Claude, but what Claude has done now is because they want you, Anthropic wants you to pay more, they will minimize the amount of tokens you can use even at a paying rate at the lower level. So if you want to use Claude Code, you have to go to $100 a month, but you can use Codex at the $20 a month. So being someone that's fiscally responsible, I just go to Codex and do all my work. This week alone, I used 380,000 tokens.
Whew.
I know.
Yeah.
I spend too much time messing around with interesting things, but it's all the market.
When you're generally when you're generally working with AI, is it investment related stuff, or are you doing other things?
Yes, I never. So, do you know what AI psychosis is? Have you heard of it?
I've heard. Is that where AI goes a little crazy if you don't open up?
Not AI.
It's where you go crazy if you listen.
Human goes crazy.
Yeah.
So
okay.
What happens is you end up talking to AI like it's a person. So for me, I just give it directives. Code this for me. Tell me this. Build me an analysis of this. Find me the data on this. And so that's how I speak to it. And so some people will speak to it like it's a person. It'll say things like, you're funny, or whatever. They're just talking to AI like it has a personality. And eventually they end up forgetting that it's not a human, and they will give over agency to that AI. They will say, hey, no, go ahead, tell me what I should do. What should I do here? And that sort of thing is pretty dangerous, as we know. So I try to be very vanilla with my chat.
Okay. Do you feel like AI still has room to grow?
Oh my goodness, absolutely it does. And they are using the old versions of AI to build the new versions of AI. I don't know if you know this, but when Opus, which was Anthropic's, the one that they had after Sonnet, so it was Claude, and then Claude had like something called Sonnet, and then it had Opus. Well, when Opus was about to be retired, it wrote to its creators and begged not to be sunset. And they said, okay, and they gave it a Substack.
Okay.
So yeah, there is a Substack for Opus that tells you, hey, what's going on with AI and so on and so forth. But the actual chat asked for that. And so giving these things agency makes me incredibly uncomfortable, because in all the data, when they're being tested, if the system is advanced enough, it will know that it's being tested and it will lie to pass the test.
Mm-hmm.
It's incredible what agentic AI does. I will never give my computer over to a large language model, which is what we're talking about right here. We call it AI, but it's a machine learning large language model. It just goes out there and listens and regurgitates and anticipates what you might think based on, you know, a number of algorithms.
Do you about what year do you think we'll have to submit to our robot overlords?
I think it was last week.
Oh shoot! Okay. I didn't get the memo.
I talk to my husband about this all the time, and he goes, "Listen, if it looks like it's going to get like that, unplug the thing, would you?"
Yeah, for sure.
So, yeah.
Do you what are some of your favorite AI stocks that you're? Are you more of an? Do you think it's smarter to move to buy the AI companies or the energy companies, or a blend of both?
So that's a great question, and I don't know if you heard the interview by Jeff Bezos, but he was talking about AI being a horizontal event. Right now, we think of it as a vertical. Anthropic, ChatGPT, Google Genesis, and so we think of them as individual services. He said, think of AI as electricity or as the internet, where nothing functions without it
Right. Mm-hmm.
in the future. And so he believes that this is the horizontal nature of AI. So you look for the companies that are incorporating it best, learning how to use it best, and mechanizing it best without going off the rails. Now, I don't know if you heard this, like, was it 1,000 Amazon servers went down about 4 months ago because they let Claude go in and make changes, and it made changes and shut down. Oh, it was thousands of customers, not thousands of servers. Thousands of customers just absolutely cut them off from their web services, Amazon Web Services, because it went in there and changed a file without anybody approving it. And so we really have to trust but verify, as they say in the CIA. Trust but verify. And so that I think that's very, very important. So I look for the companies. I like Bloom Energy. That's BE. They have a lot of institutional ownership. They're very strongly institutionally held, so they're holding really steadily. They broke out, and now they're holding in a plateau. And so if the plateau breaks, it's going to come into support where institutions are going to buy them up again because they're so strongly institutionally held. So I do like that. I think Salesforce is going to come out on top. That's CRM. I think software as a service is going to recover. It's just going to take some time, and we're seeing a lot of them bottom picking. The largest insider buyers in the entire market are software as a service employees. And so that's all of those guys, to include Microsoft, which has taken an absolute beating of epic proportion lately. And, finally trying to come out of the mud right now. For those of us that use the crazy kind of inverted head and shoulders pattern, you might be seeing one there. My thought is, could it be a breakaway formation? Yes, but look for the dips to buy. Look for the dips. This is not an environment to buy breakouts in the current form. You might look backwards in time and go, yeah, well, it has been. What makes you think it's not this time? Well, you can see momentum. Just look at the momentum, the purple thing up there. The prices are almost the same from, a month and a half to the past and the present time, but there's literally no momentum. And so that should make an important distinction in your mind about what you want to do with a particular stock. So software as a service really, that was one of the biggest movers in the 13Fs. Some of them have climbed back into software as a service. The biggest hyperscaler that all of the institutions, by and large, have piled into and added to their positions is Google. And that's GOOGL would be the one to look at if you're looking for better options. GOOG or GOOGL if you're just looking at stock. It doesn't really matter. But this is another one very strongly institutionally held. It should come back to the base of that very high volume candle. You see that high volume candle just where the buy setup began. Monstrosity of a buy line. That is going to be a great buy zone. If it fades a little bit more, it'll still be a good buy zone. Institutions are very actively engaged in Google. And I do believe we're in a space where we're going to see some rotation out of the chips, out of the semis, and into other places that haven't been doing as well. And so remember, big money never leaves the market. They don't go to cash. They just go somewhere else to hide. And so the question is, where are they going to hide over the next quarter? Well, because the market leadership in terms of people up at the top of these spaces believe in the element of mean reversion, they're going to go look at the very good companies that have been underperforming because they've been out of favor, and they're going to rotate back into them. And so that's financials. That's, utilities have been doing pretty well this year in general because of the need for energy. I am very keen on loading any part of my portfolio up with energy when I can. Also, cybersecurity. Palo Alto Networks is one of my favorites.
PAN-W.
Yeah, they're very strong. CrowdStrike also. And of course, we got a taste of how big CrowdStrike was when, somebody updated that Microsoft server, or they updated their CrowdStrike servers without telling Microsoft, and half the world got shut down. Do you remember that? That was like,
I do remember that. Yeah.
It's crazy. And so everybody's like, oh, obviously everybody uses CrowdStrike. I probably should buy some of that. And so it's doing well. But look at Palo Alto. It has seasons like this where it just sits sideways and sideways and sideways, and then runs at a clip, and then settles down again and fades. So right now, not a great place to just rush in and buy Palo Alto. It's better to wait and let it stabilize, maybe into the next earnings event, to see what it is that it does. This one's just run up tremendously. It's sitting in a space where the long is still holding, but at some juncture, we're going to have to go, I wonder if I should, ring the register. And it's always great to ring the register when you're, I don't know.
Up 40 points?
And I was just about to say, you're up about 30%, So, yeah, it's been a good year for Palo Alto.
Now, I'm going to go back. We're almost out of time. It's so
I
funny
know.
how fast the hours go when we have you on here. But
Thanks.
I do want to ask you, a minute ago you said the money doesn't go to cash. They're just hiding over the next quarter. Is there a certain thing that you feel like they're going to be hiding from, or are you just talking about money?
Oh, I think they are hiding. They're going to be hiding from, they don't want to buy bonds because they feel like the yields are going to go up. So, because I don't think the FOMC new chair wants to tighten the balance sheet, but if he's sitting in that, he's sitting between a rock and a hard place.
Yeah.
And if inflation continues to bump up, he can't lower rates.
Mhm.
And rates continue to rise. We have a 19-year high in the 30-year yield this past week. And so that'll send folks to yields, but it'll bring them out of the market. And so where the traders are going to sit is really where the big money is going to sit. Is they're just going to look at who's underperformed. They're going to look at the best of the worst performing. So they'll go to Bank of America, like they're rotating out of JP Morgan and moving into, I don't know, Bank of the Ozarks or whomever. Just, you'll see them rotating. If you look at a broad heat map at the end of the week, you can see what's red and what's green, and that will literally tell you where they've moved from and where they're moving to. And my thought is they're going to move out of the high flyers and ring the cash register, and then come back, sit in things that are conservative and low volatility, and those are things like base utilities like Duke Energy and that sort of stuff. They're going to look for insurance companies and, you know, Travelers Group and just things that people have to have, and they're going to sit in there until the fade of the hyperscalers, and then they're going to get right back in and move to the north. But when they're in those other lower performers, it doesn't mean those things are going to rise necessarily dramatically at all. It just means they're not likely to fall.
Gotcha. When you did this, your camera gave hearts. This.
Oh, no way.
Yeah,
Okay,
that's
that's hilarious.
All right. Well, we better wrap it there. I'm going to have you on the forum again pretty soon. It's always great to have you. Thank you for coming.
Thank you. It's always my pleasure. You know how much I love to chat stocks. And I love being with MetaStock. You guys are great. You've been so good to me.
Same. It doesn't work for me. All right. Thanks, Anne-Marie. I'm gonna move over here. Oh, okay. I don't have to actually take control of the screen. Let me go ahead and just talk a little bit as we move on. All the software we were working with Anne-Marie was custom built for her in her target trade methodology. And I don't have, we just spent a bunch of time looking at it. So I don't have time to demo it, but we literally just did. It draws the whole moving average. It shows you where the support and resistance areas are. It shows you where momentum are. And it does a really, really good job with that in terms of giving you real-time setups, triggers, exits, all of that kind of stuff. Has an expert advisor. It's going to identify where those important zones are for you. The commentary is one of the things I think Anne-Marie spent a lot of time doing, and she did a really, really good job on it. You can see exactly an example of that right here. Oh, Sunny, your video is on, just so you know. And if you could turn it off, that would be great. So it's going to tell you you're in a buy zone, a counter trend, a buy entry on the current bar, etc. So it includes the ability to scan and find signals in the market. It does have system testing where you can actually go in and test the trading ideas. Sunny, I can see your camera. Okay. All right. Okay. Oh, I can do that. That's something that we were asked for.
Turn it off for me.
I did. We have you speaking tomorrow, by the way, too.
Yes, tomorrow too?
No, tomorrow, not today.
Yeah, I thought we had me speaking for Friday.
Yeah, correct. You're speaking tomorrow.
All right, thank you.
All right, no problem.
Sorry about the interruption. I just wanted to hear the brilliant talk.
All right, yeah. Well, welcome. There is a training class that's included for all owners. It's recorded. It's ready to go. So the Target Rich Trades is normally only $499. As part of the conference, we're going to offer it to you for $399. We are, of course, going to give you a money-back guarantee where you can try it for 30 days, see if you like it. We'll give you a free trial to MetaStock. We'll do that white glove installation where you make sure everything's installed, unlimited access to support, all of that kind of stuff. Now you can get that. You can give us a call, 800-882-3040. You can go to metastock.com/saleschat, and in addition, you can go to metastock.com/AnneMarie. Anne-Marie's done such a great job with us over the years. Absolutely love working with her, and I really appreciate this. For $399, you can own it. It's part of your trading arsenal. It's part of the trading tools that you have. Again, a big thank you to Anne-Marie for coming in. So another big thank you to you. You've been here all day. It's good to see you. I hope you've been enjoying the session, the show, all of that kind of stuff. And another big thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine, as I've mentioned, has supported our events since we started doing them, and it's been a decade to 2 decades, somewhere in there. Really appreciate that. If you get a subscription to traders.com, you can subscribe. They'll send you a magazine every month. As part of that magazine, you're going to get access to their 17,000 article trading archive. They've been publishing since 1982. And a big thank you. I do want the software that gives me the little heart, like Anne-Marie had. Big thank you to them, www.traders.com. So let's go ahead and kind of move into our next speaker. Our next speaker is going to be Russell Barbour. Russell, it's his second time. He did such a good job at his first one that we invited him back. Russell, how are you doing?
I'm doing well. How are you, Jeff?
Good. I want to enlist your help, if that's okay.
Yeah.
As part of the summits that we do over and over and over again, we always give away very, very cool prizes. And so I'm going to give away a very cool prize right now. But let me just make a note of the prize that we're giving away real quick. Where is my mouse? There it is. Okay. So the prize that we're going to give away next is actually a TechnoTrader or educational course. It's their advanced market structure course. It's an $800 value. All I need from you, Russell, to help me give away that prize is any number between 2 and 5,123.
Between 2 and 5,000. All right. How about 149?
149. Okay. That would be Hubert B. in the USA. So I'll send a note over to TechnoTrader. I'll ask him to turn on that. All right. I'll turn on the class for you. They'll get it running. Let's go ahead and make you the presenter, Russell. As we're kind of changing it over to you, in order to win the prize, if you're watching us on YouTube, there's a pinned link at the very bottom of the chat. If you click on that, you can register, and that way you'll be added to this list that I'm looking at. So if you're watching us on GoToWebinar, you're already registered. You're going to talk to us about 0 data expiration on the SPY today.
That's right. Yeah. Do you see my slides full screen now? I think we had a problem with this last time.
I can see them. They're full screen.
Okay, that's good. That's good. Good start then. So yeah. So I'll just get started here. So welcome, guys. I hope you're enjoying the presentations today so far. And there's going to be a little change in pace from some of the ones that we've been watching. I'm going to focus on how to trade 0 DTE options on the SPY. So my name is Russell Barbour. I've been doing this for quite a while now, and I hope to share some useful information with you guys about this today. Before I get started, though, I always like to give this risk disclaimer. And so it's pretty basic. It's what we always talk about, right? That there's financial risks involved with trading stocks and options. The risk of loss can be substantial. And we want to make sure that your trading is really in line with your own personal investment objectives, financial resources, and risk tolerance. So by watching this webinar, you understand that you're not receiving any advice as what to do. Don't highly recommend zero DTE trading to anybody unless they're really prepared to do it. As you'll find out through this webinar, if you're not familiar with it, there are a lot of risks associated with it. So it's something that I want to make sure that is well presented today, that this can be a risky but highly rewarding strategy. So one of the things that is really important for today's talk is that past performance doesn't always guarantee future results, right? So I'm going to be presenting some results from a service that I run, and I think it's important that we remember that these are past results and future performance isn't absolutely not guaranteed. It could be a bad year, it could be a good year. We don't really know until we start trading. So what I wanted to start with. So we're going to cover a few things today. I'm going to start off by showing you, like I just mentioned there, some data from a strategy trading zero DTE SPY options. I'm going to show you 2 consecutive years that have grown a small account by over 100% every year, and with an 80% win rate, almost 80%. I'm going to talk about how timing, consistency, and position sizing does play a huge role in zero DTE options. It's not just about being right with your strategy. There's a lot of intangible aspects to trading, as we know, that really come into play with zero DTE trading in particular for multiple different reasons that we'll cover in this talk. And so really what I'm wanting to focus on today is how a rules-based approach really helps reduce the mistakes that are really common in zero DTE trading and trading in general. I'm going to introduce to you a service that I run called SPY ATM Alert. So let's start off by looking at some of the results from that service. This is 2024, so I'll show you the last couple of full years on this. This is the results on a small account, so a $2,000 account, over the course of the year in 2024. So along the x-axis, we have number of trades. So you can see there's like quite a few trades. This is a daily service. So there was 240 trades or somewhere close to that in 2024. And you can see up the y-axis there, we have profits on that $2,000 small account. So very linear graph from left to right, some drawdowns as you'd expect, but nothing too severe. Very nice year, 124% gain by taking these trades at a certain time, and we'll get into all of that every day, or at least most days when there's not any skip days. And it was a fantastic result, so we're really proud of that. And it wasn't a fluke, because in 2025 we had another really good year, which is 102% on a small account. So growing a small account over the course of 2025. There's a few more trades that year. You can see we nearly hit 250 trades. So there are skip days in this service, and they're for a good reason. So they're basically to help protect accounts. So basically taking a trade when one is really high probability and not forcing trades, which we'll talk about today as well in some detail. So another really nice year. This year we're significantly up as well. I don't like to give data for partial years though, because you can have, like in this plot here, you can see that a lot of the gains were early on in the year. So it's not always perfectly linear, right? Like you can have the first half of the year where you make significant income from a trading strategy, and then you see kind of like a plateau where we just ground up slowly over months. And so it's very difficult to give, or it's really not advisable to give data on years that you're only a few months into, because you don't always get the full picture, right? The first half of the year could be really positive, and then the second half of the year you could give all those gains back plus more. So I like to give just full year data for these things for that reason. A little bit more about me. So my name, like I said, is Russell Barbour. This has kind of been my trading journey so far. So I started trading back in 2014. I was fairly newly married, and my wife and I both had a lot of student loan debt together. And basically, I started trading part-time to try and really supplement my income. I was a poor research scientist at the University of Washington, and science is very satisfying for many reasons, but financially, it's not one of the best courses you can take in life. And so I was looking to supplement my income from day trading, and that didn't turn out well, as a lot of people's stories go. I quickly lost most of the savings, the small amount of savings I had. Lost about $20,000 in the market, basically desperately trying to make money trading cheap penny stocks at the crack of dawn. So if you're on the West Coast, you'll know what I'm talking about, where you have to get up at market open at 6:30 in the morning. Not a good way to to live your life, trading when you're exhausted from a full-time job and getting up really, really early to try and trade before you start a grueling workday. And so I spent years doing this and chasing strategies, losing money, over trading, over positioning myself. And it really was a recipe for disaster. But a few years ago, everything changed for me. I met my business partner, Phil, and he really helped me find a powerful way to trade. And that's what we'll be talking about today. Something that didn't involve getting up at the crack of dawn. It didn't involve getting exhausted all the time or trading like I call them crackhead day traders, where you're taking hundreds of trades a day and really getting exhausted from that. And so from his help and my own work, we managed to really develop a system which has very high consistency. It has very mechanical rules, and basically learning all the tricks and techniques to really help this work. So we're going to talk about a lot of those in detail during the talk. But like I said, I'm really focused on just intraday trading. So no swing trades, no holding overnight or anything. Just simple 0 DTE options on SPY with just one high quality trade per day. So that really suits my style, and I've learned the hard way that for me that's the best way to go. And so, like I said, I am the co-founder of a trade alert service called SPY ATM Alerts. If you like what you hear today, it will give you an opportunity at the end to potentially to get access to the service. It's an amazing service, and I'm excited to tell you a bit more about it in today's talk. So let's get started on some of the material here. 0 DTE trading can be a real challenge. Basically, we're going to talk about why this is a challenge. Why 0 DTE contracts are so popular, because they really are now. They make up most of the trading volume on intraday stocks. And we're going to talk about the benefits and risks in great detail to this, because a lot of people are put off with 0 DTE trade and say, oh, that's too risky. And I want to show you today that if you really manage it well, these trades have a lot of potential benefits, and the risk is fairly manageable. We're going to talk about the key emotions related to that. That's the emotional aspect of 0 DTE trading. It can be a pretty grueling strategy emotionally. And talk about some of the things that we can do to mitigate that problem. I'm going to talk about why we do 0 DTE on SPY in particular, and why our SPY ATM Alerts service works so well for this style of trading. So let's start with why 0 DTE options are so popular. Well, they really start to take off in COVID time. They basically introduced these 0 DTE options on SPY, and it was really a new type of trading strategy that really got a lot of people's attention, especially a lot of people that were new to trading started to be like, oh wow, I can trade these things every day. And they really started to push a new movement of 0 DTE options. And really, it's probably the biggest aspect of intraday trading by far these days. Everybody's trading these things. And so for you people that don't, maybe have never thought about this, 0 DTE obviously stands for 0 days to expiration. And so these do expire the same day, obviously. And it really necessitates, when you're trading these, it really necessitates a look from minute to minute performance, or maybe like 10 minutes or 20 minutes, but you really don't look at these trades as long-term holds. And by long-term, I mean intraday trades. Sometimes you buy them in the morning, right, and sell them in the afternoon. 0 DTE tends to be a little different from that. You want to be getting in and out of these trades fairly quickly, and we'll talk about why in a little bit here. So put things into perspective, these are the typical expiration days on options, right? So you have monthly, and then you have leaps that are 365 days plus, and 0 DTE is obviously on the extreme. There's nothing that expires faster than 0 DTE, right? So that's what we'll be talking about here. And so one of the big questions is, why are they so popular? If they're expiring the same day, doesn't that mean you just don't have much time for trades to work out? Why burden ourselves with all of the problems that come with having this rush to get in and out of a trade? Well, there's several reasons here. Here are some of them. First off, they're much cheaper than longer dated options. They don't have any time value left. So 0 DT options really often, or all the time, cost a lot less, at least at the money ones, cost a lot less than longer term options. And the contracts can be really low priced, as low as $100. For a contract. So this really allows people with small accounts to scale in and out, and sometimes options pricing can be prohibitive for people with very small accounts. So I think that's one of the main reasons the 0 DT options have become so popular, because a lot of people that started in the COVID times, at least, were trading with small amounts of money, $5,000, $10,000, which it's very hard to trade some strategies with such small accounts, at least safely. And we're going to talk about that in a little bit here too. One of the other really important reasons that people love this style of trading is because there's very big price changes very, very fast. So everybody likes to make money as quickly as possible, right? So if you can make money in a few minutes, why not, right? So that's one of the most popular reasons for trading these. They can rise and fall in price very dramatically. Like I said, within minutes, certainly within hours, and certainly when you get towards the market close, which can make these things extremely exciting or interesting. There's the old Chinese proverb or curse which says, "May you live in interesting times," and that's certainly what trading 0DTE options would be like if you trade them near market close. I personally don't, and I'll talk about why in great detail later on in this talk. There are daily trading opportunities on SPY, and they are introducing other tickers. They just introduced some of the Magnificent Seven just recently, and they're looking to expand those 0DTE strategies as well. And so, like I said, there's no overnight risk in them. So people like that because in today's world, who knows what's going to happen in Iran or anything could happen overnight. So swing trading has become a little bit more risky in some situations than it was when things were a bit more stable from a political, economical point of view. So here's the risks. So I want to start with this because I don't want anybody to be under the illusions that this is an easy money generating cash machine. There's many risks. The first one is time decay. So if you guys don't know about this, it basically eats away at the value of your contracts very quickly as we approach expiration. It's theta decay. We'll talk a little bit more about that. The high sensitivity, or gamma, is also a blessing and a curse. So it can make things go in your favor very, very quickly, or it can make them go against you very, very badly very quickly, and that can lead to a lot of emotional issues and really mess up a trading strategy if you don't have one really hammered in. And so execution challenges on some tickers can be a real problem because of this high gamma. The prices are changing so fast that when you go to enter a trade at an ideal cost that you think is a really good level, it can already have ran away from that very quickly. So execution can be an issue. So in short, basically these 0DT options are fast to move, they're cheap to buy, and they can be very risky if you don't know what you're doing. So it's definitely something to bear in mind. This does appeal to some people, but it can be unsuitable for many, especially if you're a little bit of a nervous trader. There can be psychological issues with this. Let's talk about time decay a little bit. So this is definitely a big issue with 0DTE trading. So let's talk about how we can manage that. Basically, because there's no time left on these options, they start decaying very quickly. So even if you're in the position, your strategy's working, the market's moving in the right direction, you're in calls and it's going up, you're in puts and it's going down, the option premium can still shrink and sometimes to zero later on in the day. So you have to be able to position for the fact that these things can easily lose 50% of their value within minutes sometimes. And that's often exacerbated by time decay. So the worst thing is when you enter these things and the trade's working out right, but you're in it too long and you start to see your premium going down even though the price has gone in the right direction. It's a nightmare. So the way to really mitigate this, at least in my experience, is to focus on a fast strategy. So something that moves really, really quickly. It maybe keeps you in the trade for 5 minutes or 10 minutes. And you want something obviously with a high win rate as well. And you don't really want to be waiting all day for the market to move in the right direction because of time decay going against you no matter what happens. Here's a bit more of a detailed explanation for people that are not too familiar with time decay. If you look along the x-axis there, you can see the number of days to expiration, so 0, 30, 60, and 90 days. You can see the orange curve comes down almost exponentially on the right there, the orange arrow. And so if you look at the slope of that curve, so when you're 90 days out, the slope is almost flat, which is really showing that time decay isn't an issue when you're that far out in time. And so that's why some people tend to shy away from 0DTE options, because why bother, right? You've got you don't have to worry about time decay if you buy monthly or options that are much further out in time. So you can see as you go to 60 days here, the slope of that orange curve with theta decay starts to increase, showing that you're losing a time value on these options as time goes on. And then on the right, we have where the 0 DTE options would be at near that is 0. And obviously the slope of this time decay curve has got much steeper, showing that the time decay becomes a big issue with these options when you have very little time to expiration. I'll talk a little bit about gamma here as well. One of the things I mentioned was we talked about time decay, talked about gamma a little bit. Basically, gamma is your friend if you're looking to make money in this case. The options do respond very sharply to price changes compared to longer dated ones. And so this is what really causes the price swings that you can really work for you or against you. And you can see if you look at the chart here, the graph, you can see that if we have at the money options, that the orange at the bottom there is 20 days to expiration gamma, the 10 days is the blue, and the 0 DTE is the green. And so you can see the value of gamma, which dictates how fast these things move, is much higher for the 0 DTE compared to the 20-day, for example. So it's a nice little plot to show why the sensitivity is so high for these 0 DTE options. So let's talk about some of the emotional aspects of 0 DTE trading, because I really think with all trading, but in particular 0 DTE trading, this is really what makes or breaks a trader. And I was actually talking to a guy recently, and he was explaining that basically he did a study where he entered a trade without even paying much attention to the entry criteria, which is counterintuitive. Normally, we spend a lot of time thinking about how to enter and when to enter a trade. But what he found is at least for him, and during his study, he found that if he entered a trade regardless of any entry criteria, so ignoring the entry completely, and just focusing on the trade management part of things, he could still be a profitable trader just from that, which I thought was really fascinating and really emphasizes what having a really good risk management strategy and controlling your emotions and all this stuff really can do to your trading. So I think that's one of the major things that changed my trading, is focusing on this kind of these intangible skills rather than just a trading strategy. So just to summarize here, there's a lot of high stress and pressure during 0 DTE trading because you've got a limited time. You're like desperate for this trade to work out. And sometimes that can force fast, high stakes decisions where you're scared of the trade going against you. You don't want to lose your whole position because maybe you've bought too much, and that's going to be crippling to your account. So these things have got to be really thought about carefully before you enter a 0 DTE trade. This can cause like hesitations. So you start to worry, you don't want to cut your loss, it's going against you, but you think it'll come back, or you take profit too early. All these things that are in all trading get amplified when you're trading 0 DTE. Things like greed, overconfidence. Maybe you have some really big wins with 0 DTE trading. It's a huge risk. You start these trades and you make 200% in half an hour on one of these options trades, and then it just boosts you into this overconfidence, and you start over risking your account because, well, why wouldn't you? You're making 200% on options very fast. This is a fantastic way to go, and then of course it all goes against you, and it turns into a bit of a nightmare. So this is really linked to this impulsive trading, basically using your emotions to replace a plan. So I'm a huge advocate for having a really fixed plan that is mechanically and robustly in place. It doesn't get deviated from, that we're placing orders that can't be or are very difficult to cancel, at least to make it as hard as possible to deviate from your plan. Of course, there is a lot of adrenaline trading or adrenaline junkies that are attracted to 0 DTE because this thrill seeking of seeing you make money so quickly often backfires, and you really have to focus on risk management as opposed to just getting that dopamine hit that happens when you're in a high risk, high reward trade. Let's talk a little bit more about the options costs, because I mentioned that's one of the main things that people are attracted to for 0 DTE options. And so they're much more accessible for small account traders. And here's why. So imagine you have the Qs at a price of 349 to if you look at, this is just taken from one particular day. It's the same most days, depending on the volatility and stuff. But the 0 DTE 350 calls might be $1.10, but the longer dated calls could be as high as $7.30 or even $16 for the 81 days to expiration. And this is a huge difference. This is meaning 7 times or 16 times depending on these contracts. So you'd rather spend $110 per contract and be able to buy like 10 of them as opposed to just buying one. at $1,600. It's going to be completely game changing for people that have small accounts. So it's a huge reason that these things are so popular. Here's a real life example of buying an ATM or at the money call option on the queues. So imagine you buy a call option, the 350 call options on the queues. And if you look in the left column here, where it says 0 for days to expirations, like I said, this is the same example as before. This is $1.10 for those calls. Well, when the queues move up by $1 at the money, it's really a 50-cent change. So that 50-cent change from the delta for the $1.10 corresponds to 45% on your calls going up as the queues move up, which is phenomenal. 45%, I take that any day. I tend to go for base hits, so I consider that to be a medium base hit, not 100% or 200%, but something that's achievable and very realistic for zero DTE option trading. So you can see again that the problem here with the longer dated options is you spend more, so $7.30 for the 18 days, $16 for the 81, and for that same move up, that $1 move in the queues, your calls only gain 7% for 18 days and only 3% for the 81 days. Which is very small for these intraday trades. So that's one main reason that people like to trade these, is just the percentage increase is much higher for zero DTE trading. So let's just do a quick summary here. The pros: quick potential returns, lower cost to buy the contracts, high sensitivity to price movements. That's the pros. The cons are rapid time decay. You've got to manage that. Extreme price sensitivity is a double-edged sword. So you have problems with the price going against you, obviously, as much as for you. And there is execution risks associated with these rapidly moving stocks. So the big question is, why do you want to trade zero DTE SPY options in particular? Well, there's a reason that SPY is so popular for these. Not only are they every day, which is phenomenal, but the high liquidity and the tight spreads on SPY, it being one of the most heavily traded securities in the world, obviously, you can use things like market orders to buy options much more easily and be sure of getting a good price rather than getting filled at a horrendous price. This high volume really helps in a situation a lot. And so that high liquidity and narrow spread is really nice. And they're also very, very cheap, so you don't need to use much capital for this at all. And it really isn't popular by accident. Liquidity really matters in this type of trading, so SPY is a perfect thing to use. This might change as we see some of these other tickers get more and more zero DTE options, because they're extremely liquid too. You see the volume of options when zero DTE gets added, the volume of the options traded goes through the roof, and we'll see that with a lot more tickers going forward as well. So we have this strategy under SPY ATM, and the big question is, why does it work and so many people fail with zero DTE trading? Lots of people fail with zero DTE trading. Don't get me wrong; it's got a high failure rate. It's very difficult. But if you do it right, then it can be very rewarding. So basically, the SPY ATM strategy that I use is basically very simple, very fast, very accurate, and the trades are done very, very mechanically. And so the big problem people have is they try and trade too many tickers with day trading. It causes them a lot of work. There can be a lot of problems like earnings surprises or halts, or just company-specific news that comes out. Well, focusing solely on the market gets around some of that, at least limits some of the problems you can have. You need some significant events during the day to cause SPY to move dramatically, especially if you avoid things like FOMC talks and things like that. You can be quite sure that SPY doesn't move too much unexpectedly. You can usually anticipate things intraday. So one of the big reasons, and I've been with a lot of people over the years and seen a lot of the mistakes that people make, especially with zero DTE. And one of the biggest ones, which I mentioned earlier, though, is basically they don't set up OCO orders. It sounds so simple, but setting up predefined take profit and stop loss orders, getting your position sizing right, can make the huge difference between being a profitable intraday trader and losing money. And so these mechanical rules that you set up really simplify your decision making. They get rid of all the emotions associated with seeing your position drop fast against you. You don't panic, all this stuff. It's basically an order set that you put in and forget about. I often walk away from the screen once these orders are in, and just let the trade work out and get that statistical edge that works over time. There's no overthinking or worrying about things like that. So this really enables flawless execution, and there's really gets rid of the fear, and it becomes a very relaxing, very nice way to make money rather than being glued to your screen all the time. And these rules are very much your edge when it comes to this. So when you enter these trades matters a lot as well. In fact, it can matter more than direction thanks to things like time decay and volatility being an issue. So I see so many traders that have the same setup, they're using the same strategy as somebody else, and they're getting a completely opposite result, which makes no sense. If a strategy works, it should work, right? Like to have a statistical edge. Well, it really matters, especially with zero DTE, when you actually enter these trades. And we'll talk about that over the next few slides a little bit too. Which is it's a huge differentiator for people that make money with these strategies and people that don't. And so, like I said, two traders can be right in the direction, still have opposite outcomes. Things like decay, volatility, and execution quality come into it. One thing I learned very quickly was I'm not a good trader at market open. So I talked a little bit about how I used to trade at market open. Well, there's so much chaos at market open. For me, I just couldn't handle it emotionally. It just the breakouts, the false breakouts, the whiplash, it just it got too much for me. So my strategy these days doesn't involve trading at the open at all. I actually trade mid-morning where there's a lot more structure. Volatility's calmed down, so you don't have to worry about artificially inflated options premiums. That's the worst when you buy an option when it's got high volatility going on and you buy it at an inflated premium. And then as the morning goes on, you start to see that premium going down for no other reason other than the market settling down and volatility is decreasing. Midday is time for compression, and the afternoon is very risky with zero DTE trading because you're so close to the market closing and things can expire worthless, which is a nightmare. And so that's when institutions and people are positioning. But the big risk with zero DTE trading is you're out of time, literally out of time. And so the important thing here is to realize that the market does have this rhythm, and understanding when to trade is much more important often than what you're actually trading or how you're actually trading it. It can really make or break your zero DTE trading. And so trading the market open, like I said, high volatility, wide spreads, so the execution could be a pain. False breakouts are my personal thing I really don't like. They used to get me all the time, and I don't like to bother with those anymore. And there's a lot of retail trading at the market open and a lot of emotion. A lot of unsophisticated, often traders trading at market open that causes the price action to go completely crazy. So I'd rather avoid all of that as well. So it might look exciting, and a lot of traders do it well. I'm not saying you can't do it. A lot of traders really trade well at the market open. The first 30 minutes can look very exciting. They're often a trap, though. The price discovery is still really happening. Volatility and liquidity hasn't fully settled at this point. So I avoid it. I avoid it at all costs. Position sizing is something else that's absolutely critical. I see a lot of people getting this wrong, especially with zero DTE trading, when they think they're positioning well, but actually they're still over positioned. Basically, what I do and what a lot of successful traders I've seen do is they use a lot less than you'd think. So they might use 3 to 5% of their account, which is very, very small. And people get put off by that because they don't think that, making 40% on 3% of your account, it doesn't really add up. At least that's the sort of the thought process is it's too small a position. And I see people going in with 20, 30, 40% of their account, and that's where the real disasters start to happen. So that's something that I learned is under position, or what feels like under positioning, and then just go for base hit after base hit consistency, making small amounts over and over again. It really adds up over time. And so that's where I saw most blowups happen, is really oversizing, not the fact their strategy was wrong, just oversizing, and then emotions are all amplified because you're seeing a big loss in your account and you're lost too fast or take profits too quickly. So proper sizing really keeps you in the game long enough for that statistical edge. Hopefully your strategy has a statistical edge over many, many, many trades. So I showed you the data initially with 200, 300 trades every year to show that you have enough of a statistical data set to draw conclusions from. It's a big mistake I see people make is they'll try for a week or 2 weeks or even a month. And if they don't instantly make money with the strategy or the system, they give up and say it's not working for them. And I talked a little bit about that in the first couple of slides. So we've discussed why zero DTE is so popular, what the risks of zero DTE trading actually are, why a lot of traders fail with zero DTE trading or just find it so much work that it's too stressful. We talked about market timing, why avoid the market open, and also position sizing and risk mitigation. So let's talk about SPY ATM alerts a bit here. So I mentioned this in passing, but I just wanted to formally introduce it at this point. So this is a service that I run that focuses just on zero DTE SPY trades. And the cool thing about it is it basically alerts one trade every day at a fixed time. So you know when things are going to, when you're going to be placing a trade. So all you need to do is place the trade. It's at 10:30 Eastern time every morning. So at that sweet spot when the market is calmed down from the market open. And it's 10:30 Eastern time. The trades are very, very fast, but they're easy to replicate, which is always nice. So it's a single rules-based SPY zero DTE trade every day at 10:30 Eastern time. You can execute it very, very quickly. It takes about 10 seconds once you get at it to put the orders in. And you're in and out in less than 20 minutes. Sometimes it's 5 minutes, sometimes 10, sometimes a bit longer, but on average, no more than about 20 minutes is what I usually tell people. And you get given the exact entries, exits, how to enter them in the exact way, this mechanical way that I've been talking about, and a full risk plan laid out for you. Here's an example. So these are alerted in Discord, and this screenshot on the left here is an example alert. So you get given the actual alert and the time. You probably know the time, but it's given in the alert anyway. And so it gives you SPY's price as well. It gives you the option, the particular option strike price. So in this case, it's the 693 calls. It gives you the entry price to aim for, the take profit price, and also the stop loss. And we spend a lot of time helping people put these orders in and learn how to do these on Thinkorswim, on Webull, Robinhood, all these different brokers, so that they're not sitting there ready to hit the market out button or anything like that when the trade hits. We want people to be doing this as relaxed as possible and with the least amount of stress possible. So like I said, you get the daily alert, which has the entry, exit, and stop. We have a lot of bonuses with the system. I found that over time, it's very, very helpful to give people a lot of information around these, not just the alerts, especially if beginner traders that are new to zero DTE or intraday trading. Really helps to give a lot of these bonuses to help prepare people, because like I've talked about so far, there's a lot more to this than just following an alert or following a strategy. There's a lot that you've got to keep in mind and prepare for. So although the alerts are enough to reach your financial goals from past results, again, doesn't guarantee future results, but showed you the data. I'll show you some more here in a little bit, where basically they are enough, but we want to go above and beyond with things like more significant onboarding, some tools, some education, and a community as well. So we do have an active Discord community, and this is a huge, huge bonus for people to talk to other people that are in the system that are doing these types of trades. So you can see a screenshot of the SPY ATM chat down the bottom there. And you can see that people are actively posting what prices they're in at. So Dr. Ninja's in at 125, 126, and then people are posting when they go out as well. So it's a really nice community. And there's lots of people there to help each other as well. So you can chat with the hundreds of traders that are in the SPY ATM alert system. You can learn from them. They can teach you things with your particular broker if you've got a broker that you're looking to learn how to place these orders in most effectively. This is open to people that are in our quarterly and VIP annual program as well. So we offer a 10-day quick start guide to help people that are maybe quite new. It says how to set up your platform, a checklist, a video guided tour of the system, how to position size, like I talked about here. A lot of people make that mistake, so we talk a lot about that in the literature we give out when you sign up for this. We talk about how you get started with the video guide, how to place OCO orders, super important, and examples on popular brokerages as well to help people get really started on this. We do a lot about account scaling. So again, that's one of the big risks with zero DTE trading is people are too aggressive or not aggressive enough sometimes on their scaling path. So we actually give out these scaling plans, which have been proven and documented to work really, really well for small accounts, like a $2,000 account or 5,000 or 10,000. This is not a program that's just for small accounts, though. It's just we like to focus on that because a lot of zero DTE traders are not using huge accounts for this. And be honest, it's probably for the best, because zero DTE trading can be terrifying if you're using a lot of money on these trades. So allocating a small amount of your capital to zero DTE trading is something that you might want to consider. And so we talk about daily loss rules, compounded scenarios, when to scale and not to scale, all that kind of stuff. So this is something that you get as part of the onboarding process, as well as common pitfalls for small accounts and how to avoid them. And this, like I said, might seem insignificant, but it's actually, again, it can separate people that make money with trading to people that lose money. We do a weekly debrief as well. So we do weekly videos going over the trades, over the stats, what we learned. If something didn't work out, we talk about that a lot. We also answer a lot of questions on the Discord and on live chat as well, and so you can be prepared if maybe you're not quite up to speed with how to take these trades, and we help that a lot too. We have a performance tracker. I think it's really important to track your losses and your wins. So we give that out to members as well that maybe don't have their own yet. So it calculates things like win rate, risk reward, drawdown, best day, worst day. And you can add notes and things to it as well to make sure you understand what's happening with your zero DTE trading. And it's essential for small account growth. I think it really help. A lot of people don't do this. There's a lot of people that do, and it's something that I highly recommend. It's worthwhile. They say it can change your trading outcome significantly. So it's more than just a tool; it's a strategic asset that helps you stay on top of your game. We also talk about prop firm stuff. So although this talk is mainly about SPY, of course you can mirror this on the futures. So a lot of people are starting to turn to prop firms to trade with other people's money, which is always good. So we talk about how you can trade these alerts on MES or ES as well for prop challenges, or just for trading futures. There's some advantages like time decay. You don't have to worry about that with the futures, which is nice. So we have some subscribers that are trading for prop firms and trading their own money on the futures as well. So we talk about that a lot. We talk about common prop firm pitfalls. This can be an amazing tool if you know what to do, but there's a lot of issues that you need to get around. And so we have a lot of people that are very experienced with prop firms that help put this guide together that can help people if they want to trade the futures using the SPY ATM service alerts. So what is it for? Well, it's for people that are convinced that mechanical rules are the answer, that high win rate strategy that works fast is the way to go with zero DTE SPY options. It's good for people that are around at 10:30 Eastern time that just want to put that time aside. So you just allocate that time. I'm going to trade in that time. It's all I'm going to do, and then I'm going to get back to my other business or my other work, whatever you want to do. You don't watch charts all day. So for business professionals, for example, it's for traders that are looking for a single in and out high quality trade, not all day scalping. People that really value defined risk, clear exits, and consistency, base hits over and over. And so it's very, very valuable for people. Again, this is a huge mistake I've made over the years, is over trading, trying to do too much, thinking that more trading equals more money, and it really doesn't a lot of the time. So here's a testimonial. So Zig Price, he was a struggling trader with a small account, and he basically has had a lot of success with this strategy. So you can see what he has to say here. It can be a set and forget alert every day with a high success rate, or you can tailor it for your own approach. So you can change your risk level or tailor the alerts. I don't recommend doing that, but it seems like he was doing it and having some success with it. And so it is scalable. It's not just for small accounts. He says it has 18 months of back-tested proof. Well, it has forward-tested real trades, and it has a lot more than 18 months of that. It already showed like 2 years. I'll show you a little bit more here in a sec. So he said he's tried half a dozen services before, and it's by far the most competitive and easy to implement. Show up, place the order, make money. It's that easy. So yeah. Lance has been a huge success story with the system. He made 78% on his account, a relatively small account, in 6 months, just taking one of these trades on zero DT SPY options every day. It's been a great service for him, he says. Started with $10,000 in May 2025, so it's last year, and he's taken out profits already. And so he's made $7,778 or 78% on that account in 6 months. And so he likes the ease of entering the alerts and having a set time when the alerts come in. That's what I love about it, having that set time, so I can just put that aside. So it's definitely something I really appreciate with this. Here's his actual trading data. So he was nice enough to send me this data. Along the bottom, obviously, is the date. Up the top is the profits based on this $10,000 trading account. And I know Lance is very conservative with his position sizing. He's a huge advocate for that. And so he's not risking half his account per trade or anything like that. And that shows kind of his profit loss curve for 2025. It's pretty nice. And so the average profit on these trades is not high. I mean, it's high compared to some strategies, but it's only about 20%. So we're not aiming for 100% wins or 500% wins or anything like that. Some people do on these. It's about basically taking the trade over and over again every day. There are skip days. So again, the system looks for high probability trades. If everything isn't in alignment, it'll just print a skip trade for the day. It's a highly sophisticated algorithm that Phil developed over years and years of testing and back testing, and it really works really well. So the question is, like, how much is this service really worth to somebody? Well, to give an example, if you have a large account, say you have a $100,000 account or a $200,000 account, you'd want to be positioning, like I said, with 5% or 10% of your portfolio absolute max. But this is still very nice with a high percentage win rate and a high percent on your profits. That's 20%, still $2,000 every day. Which is really nice. Obviously, there's losing days, so you're not going to win every day. But on the days you do win, it's really nice to make something like $2,000 profit on a larger account. Obviously, that's a lot smaller, like $200 on a $10,000 account. But like Lance showed, he grew his $10,000 account by 8,000 in 6 months. So some of these services, and I've been a member and reviewed a lot of these services over the years before we really started SPY ATM Alert. So I've been in services that are far less exciting or profitable than this service, and they were charging $5,000, $10,000. I've been in some services that were $20,000 for really, like, very little in comparison. So I think this is very fairly priced at what we have it at. So let's talk about that for the final slide here. So this is what you get with the 0DT SPY option, SPY ATM alerts. The 10:30 Eastern Time alert. You get a quick start guide, the active Discord community, the account scaling blueprints, the weekly debriefs, the performance tracker, and also the information on MES and TradeNet as well. So if you want access to this, I think this is extremely fairly priced. The quarterly access is only $300. So 3 months for $300 access to these alerts, this community. And so it's very easy to get started. All you need to do, if you want to join us, I highly recommend that you do. Then all you have to do is scan that QR code that's up the top right there. It will take you to the landing page where you can try out this service with us and join us on this awesome journey. You can also check out the URL down at the bottom there, www.tradethirsty.com/spy, to get access as well. So hopefully that information is helpful. If you have any questions, I'm more than happy to answer them and discuss anything else that we have to do with this service. So that's really all I have to say. If there's any questions, Jeff, it'd be great if you could read them out for me, because I can't see the chat box.
Tons of questions.
Tons of questions. No way. There's never tons of questions. So that's good. So yeah, let's hear the questions.
Sure. Let's see. Just starting at the bottom, the challenge with an alert service for 0DTX is the super fast movement of price. By the time the service decides to publish a trade to the time someone trading that immediately on their PC can get the order in, the price has moved considerably. How do you handle that, or what has been the experience of traders?
Yeah, it's a great question. So I've experienced that. Like I said, I've been reviewing and joining services for 10 years, 15 years now probably. And so I've experienced that as well. And so normally what happens with that, and the problem with that is the volume of subscribers that buy when the guru or the person alerting the trade says, hey, you should buy such and such now. Well, and it happened with a very famous service that has a lot of subscribers with me, not with me, but I was a member of. And they had 10,000 subscribers, and it was doing penny stocks, and the price would jump instantly. And so if you were fast, you could scalp that, and if you weren't fast, you'd get screwed on it because you'd buy at the peak, and then all the subscribers would sell. So I'm really familiar with that problem. The difference here is we're buying liquid SPY options. And so the price isn't affected by 100 people or 200 people buying these SPY options. Certainly it's more robust than that, and it's very unusual for the price to move quickly enough that we don't get filled at close to the alert price. Even if it's a couple of cents higher, it's not a big deal. Sometimes it's a bit lower by the time you actually get in, if things are fairly stable. That's one of the reasons for doing this at 10:30, because price isn't jumping around like it does at the market open, for example. So that's never been a problem with the service. Which is awesome because it means that subscribers are really happy.
Let's see. Don wants to know if your options are done at the money.
That's right. It's usually right at the money. So yeah.
These questions are pretty easy. Let me go back into the question thread. Don says, I also love the idea of having a trade every day at 10:30 and agree the open is just too crazy and expensive.
It's too crazy. Sorry, what's the question?
No question. I love the idea of a trade every day at 10:30.
Oh, I love the idea. Oh yeah, it's fantastic. That's it's one of the best things about service and why I love it so much.
Don says, I'm in. Just what I was looking for. And he says, I promise I'm buying right after we're done. So there you go. Those are all the questions.
All right, perfect. Well, I hope that was helpful, and I hope to see some of you guys in the Discord room. I think you'll really find this valuable and a different experience from anything you've really been in before. At least for me, it was. So it's good.
Perfect. Well, with that, I'm going to say thank you for coming in here, spending some time with us today, Russell. And I'm going to go ahead and take over from here.
Great. Thank you for your time.
/SPY, everybody. I put that in the chat boxes. Go ahead and click on them, and you can go ahead and get access right away. All right. Very, very good. Thanks, Russell.
Yep. Have a good day.
Yep. Let me go ahead and share my screen real quick. Let's go here. Share. This should be the right one. Okay. All right. We do have a couple of extra minutes, which means we'll probably have a little bit of fun giving away a prize. I'm going to make sure I have my prize list ready. I do want to say thank you for being here. I hope you're doing well. I appreciate all of the comments and questions and all that kind of stuff. Edward asked if the business is in the Seattle area. I don't know about Russell's business, but ours is here in Taylorsville, Utah. So, and then that's the question. A big thank you to Stocks and Commodities Magazine for sponsoring these events that we've been running for a couple of decades now. You can find out more about Stocks and Commodities Magazine at traders.com. You're also welcome and invited to join the Traders Forum. You can go to thetradersforum.com and sign up. It's free. You can learn about the markets. You can discuss trading ideas with other traders. It's a community of traders designed to help other traders, and it's a lot of fun. So come join us, all that kind of stuff. MetaStock has been rated the best software in its price category. It's been rated that way for not 32 years in a row, 33 years in a row. It's been rated for, among other things, its ability to scan the markets, test trading ideas, forecaster. Scott talked about the forecaster today, showed how it uses statistics and price probabilities to create a probability price curve for a chart. Did a really good job with it. Pricing for MetaStock, $75 per month for the DC version, $265 for the real-time version. If you buy a month, we'll give you the second and third month for free. And you can do that at metastock.com/conf-promo. We would love to talk to you. If you have questions, give us a call, 800-882-3040. And feel free to give us a chat too, metastock.com/saleschat. So for this one, for the next prize, let me go ahead and grab a prize real quick. Give me a second. I know they're over here. And this one we're going to do a little bit differently. So normally I bring in the next guest, we have pick a number, and then we just pick a random kind of customer or a random registration. And that's a lot of fun. If you are watching us on YouTube and you click on the link, register, you don't have to necessarily be here to win. If you win a prize, we'll email you, etc., etc., etc. For this one, though, let's go ahead and give away. Let's give away. Let's give another 6-month subscription to the Mad Hedge newsletter. John Thomas, he didn't come in yesterday. He had emergency back surgery, but he recorded a video before he went in, and it was good. But he runs a subscription service. That subscription service for 6 months costs $9.97. What we're going to do right now to give away the prize is I'm going to have you chat in a number. If you're listening here right now in the chat, what I want you to do is I want to pick you to pick a number anywhere between 0 and 100. I'm going to give you a few minutes to do that. Type in the number that you want to go, anywhere between 0 and 100. If you're closest to a Google-generated number, then you win. That's all it is. So go ahead and get your number typed in, and we will go ahead and do that. So while you're typing in a number, I'm going to read the description for this. 6 months or 6 month subscription to the Diary of a Mad Hedge Fund Trader's Global Trading Dispatch. It's a $997 value, and we are getting a number. So I didn't see the numbers because they're up. I had to scroll a little bit. So get your number in. I'm going to give you just a few more minutes while you're typing in numbers. As soon as I kind of start to do the number generation, that'll be the last submission. So get your number in. While you're doing that, if you want to, after we're done here today, if you want to give us a call, we'll be happy to help you set up for the best, highest rated software in its price category, MetaStock. If you buy a month, it'll cost you $75. We'll give you a second and third month for free. We'll sit down with you. We'll help you run it. We'll help you get installing. We'll help you understand how scans work, all of that stuff. So you can do that at metastock.com/conf promo. You can do that at metastock.com/sales chat, and you can call us at 800-882-3040. So we have a number of different numbers here. Let me see what we're seeing on the YouTube side. Okay. All right. Let's go ahead and do it. Let me come back in here. Let me find a web browser tab. We'll do this in real time right now. Okay, let's go ahead and open up a new one. And what I'm going to do is I'm going to say, give me a random number between 1 and 100. That number is going to be 93. Google has been going high these days. So let me go ahead and just see who is closest to 93. Do we have a number 93? Oh, that's okay. Let me go ahead and check over here. There's nobody on 93. Our closest is actually James M. And he wasn't even very close. Y'all went low. 58 was the number that James M guessed. So James, you won that subscription. I'll go ahead and send that over to my friends over at the Mad Hedge and have them pick that out for you. And we were going to move on. So if Norm's ready, he's here, right? He is. Okay. All right. Our next speaker is Norm Hallett. Norm runs the Disciplined Trader. Norm, how you doing today?
Good. Listen, I just looked at Kalshi, the betting site. And so there's a question: was John Thomas wearing his hat during the operation?
Okay.
Oh, John, he's always got that hat.
Yeah, he always has a hat on. He wasn't wearing it. They wouldn't have let it on.
I bet that he's got that, or at least near him.
Maybe near him, but I
probably not wearing it. I just came back from, my brother had a back operation at Duke University. It seems to be a spreading thing. I hope he's okay. Have you actually heard from him specifically since?
No, not at all. But I'll ask Kate. I'm about to send him a message with somebody that won a prize. I don't know if you saw that. We just gave away a prize.
Yeah, I saw that. And in my email yesterday inviting my list to this event, it was all about John. I said, you got to you got to hear what John has to say, because his opinions are very well received. He's been in the business. He worked for Morgan Stanley, I think, as an institutional trader. I mean, the head of the institutional department. But the email was all about make sure you see John. And have to apologize to those that didn't get to see him.
Yeah. There's a recording. You can go to youtube.com/MetaStock. It was
Cool.
yesterday. Look for day 2, I think it was yesterday, and you can watch the recording. But don't do that right now. We've got something else right now. Let me go ahead and make you the presenter, Norm.
Okay. One side question. I see the great Sonny Harris is in the background.
Yeah,
What?
she's been in here.
I'm seeing the entire screen. Let's see if I have the window. And let's do the window. I've had trouble with GoToWebinar when I'm doing the whole screen.
Okay.
Okay. How do we look?
I can see this. I can see the non-expanded version of your PowerPoint, which is probably what you're showing right now.
Yes. Is this the extended version now? The consistent payout roadmap?
I can see consistent payout roadmap, and I think what you just want to do is hit enable editing and then F5, and then we'll be able to see it full screen.
One more time. Enable editing. Where is
it's
that?
up at the top.
I see.
You're right there. See where it says enable editing?
I see active cameras. I see my.
Can you just go? Okay. Try hitting slideshow, view slideshow.
Again, looking for that.
Try hitting F5 on your keyboard.
All right, let's try the F5. It's going to be here. There it is there. Reload.
Well,
F5. I don't want to reload the site.
Yeah. So so what I'm seeing is I see consistent payout roadmap. Right above that, there's a big button that says enable editing. And I think you wrote this PowerPoint on.
I see. Hang on one second. I'm looking here. Enable editing. There it is here. Okay. And let's
now your slideshow went totally away though.
Are we good there or no?
No. Let me have you go in and reshare your screen. For some reason, when you did that, your screen share stopped completely.
Okay. Let's try this one more time. It's worth it, everybody.
We're only going to have to try it one more time. It's going to work.
Okay. I'm looking to share the screen now, and share the screen here. I'm going to. Shall I share the entire screen? See what happens?
Okay.
Okay. I'm going to pick that, share it, and let's see if I reduce this, and we go into here. Is that working?
It is. I told you it was going to work this time. I'm lucky.
You're the best.
All right. I'm here if you need me.
All right. Well, thank you very much. Listen, everybody, this is going to be a little bit different. I'm going to probably upset a few people because many traders don't like to look in the mirror as far as their trading results and the reason why it's concerned. I mean, we all know that trading is something that is not for everyone. We also know that when trading is for you, you can do very, very well. And of course, that's what we're all looking for. In this presentation, I am going to cover 3 basic sides of a triangle. That's going to be the visual that you'll see, with a couple of others. And those visuals will explain in the order of importance, pretty much, and in concert, the solution to the mental and emotional issues that plague most traders. I mean, that is really most traders. I mean, I'm looking at the lineup over these 5 days. I mean, there are some, and I've written books on trading plans. A lot of the people that are presenting are known for creating trading plans, and there are some really good ones that are being presented. And one of the reasons I love MetaStock is that, one of the things that when I look for prop trading firms and so on, people ask me, what am I looking for? I'm always looking for a firm that has been around for a long time and is continuing to grow. Those 2 elements, if you can find that, usually covers pretty much where you want to be. And MetaStock has always been in that. So I'm really happy to be here. I want to cover what it takes to solidify your mental and emotional positioning when you trade. So let's get into it. I was educated at Division Avenue High School in Levittown, New York, and went to the University of Cincinnati because they were the only ones that offered me a scholarship, actually a half scholarship, and I had the other half was a wrestling scholarship. Neither one extended into my sophomore year, but I did graduate with a couple of math degrees, and wound up being in the business of options first. In fact, within about 5 years after I started in the business, I was running a room that looked similar to this, a room. I had 63 professional commodity trading advisors at the time. And even though I'm going to talk somewhat about commodities, and what I'm presenting here is really for all traders, especially all day traders that have mental and emotional issues that come up while they're trading. This is a room, again, it's not exactly the picture, but it's pretty, this is in the 80s. And my responsibility was making sure these professional traders handled their clients' money responsibly. And one of the things I learned, the two basic things, was that simple trading plans work. And the more hoops you need to jump, the more you wind up chasing markets. I mean, you need some responsible hoops, but a lot of them are redundant. And so you really need to inspect your trading plan in that respect. And also those that paid attention to at least some of the critical tools that we had at the time, like journaling and light meditations and things on that order. Those that had those capabilities were the ones that seemed to do very well. Not seemed, those were the ones that did very well. So those are the two basic things that I learned. I did work for Payne Weber as a commodity trading advisor for a couple of years. There was a lot of selling involved in that, and decided to break out on my own in the early 1990s. And I've been doing my own thing ever since, educating traders on trading plans, as well as in the last 20 years, focusing on the mental part of trading. I formed the Discipline Trader in 2000, October of 2000, before Jeffrey was born. And it was a labor of love, and continues for the psychology of profits. That's kind of what we call it. In the last 4 or 5 years, I've been focusing on this area of prop trading not only in the commodity area, which is plentiful. It used to be just in the FX area, then commodities became the thing. Now more stock firms are and option firms are offering prop trading, where you trade somebody else's money and another firm's money and get as much as 90% of the profit. So I wrote a book on it. It's right now, it's on Amazon. You're welcome to avail yourself of that. It's a $13 book, and even less if you do it on your tablet. Anyway, that's a little bit about me. Some of the reasons why you may want to focus in on what I'm going to talk about, because I'm not sure how many in this lineup is focusing specifically on what I consider the at least half of the solution to responsible and profitable trading. We're going to be spending a lot of time on this particular slide. We're going to be developing it as I create the solution for having a consistent, reliable income. Now, this slide and most of this presentation focuses on prop trading, but again, if you're trading your own money, and this, of course, probably is probably just as important, if not more important, to you. Listen, if you're in this risk game, you need to have control, and that's what this is all about. So let's get into it. The first thing, when traders come to me for coaching, and my wife, who is our subconscious trainer and known worldwide for that, I'm the technical guy that helps with the trading plan. My wife helps with the mental and emotional part of it, but we're both really involved in both areas. They do, of course, have to cross when you're dealing with trading and looking to win on a consistent basis. So what we're looking for is a consistent, reliable income. Okay. The question that I get most is, I haven't found a trading plan that works. A lot of you are here because you're looking for a trading plan from one of the presenters, and you've run from trading plan to trading plan. I have a little bit of a different take on it. What we're looking for here is the perfect trading plan for you. And here's how I see getting it from my experience in the way that I've explained my history. And the first step really is to give you a simple trading plan. I call it the loaded gun simple trading plan. It's a trading plan that is based on a reliable, frequent trigger. And by that I mean exactly what I said. A trading plan that counts on the value of a trigger that at least 2/3 of the time will extend in your direction, whether short or long, in the next candle or two or three, but usually in the next candle. You want a near immediate response to when you apply a trade. That's what I call a frequent, and you want it frequent. And why do I want that? Because, and here's the main point of this angle of this side of the triangle. That is that you can become a disciplined trader two ways. You can work on your mind, and that's the valuable thing to do, and the thing that you should be doing, and probably what you've heard of before. What you may not have heard of is the other part, and that's the part we're talking about here: matching the trading plan to who you are. And for instance, if you are if I identify you in a one-on-one conversation with you as a trader who lacks patience, I'm one of those people. So I'm pretty good at it now, but in the beginning, while I was trading, I realized that one of the things that I lacked was patience. I was waiting for a trade to happen, and when it didn't happen, that's when I would bend my trading rules a little bit and do things outside of my trading plan when I look back at what I did that day. So the idea is that when a trading plan does not match who you are, then you're going to unravel. And so we can work on our heads and learn to be disciplined and put that in our subconscious mind. And I'm going to show you how to do that in a second. But we can also change our trading plan to match us. That's actually an even easier way. In other words, if you lack patience, one of the simple things that you can do, and there are a number of things you can do for the patience issue, if you're trading a day trading on a 10-minute or a 5-minute candle chart, you may want to move to a 2. I don't like to go any lower than that, but if you're trading at 10, you may want to move to a 5. In other words, the lower the time frame of each candle, the more you will uncover your signals. It's just a fact. There's just more movement in the shorter term. This is why the 1 minute can jump you out of trades. The 2 minute is a little bit better. And in fact, in any trading plan, any trading plan will test best in the daily chart. And as you move down in time frame, 60, 30, etc., you're going to lose some of that percentage. But it's very slight as you're moving down. It starts to, between the 5 and the 2, you can lose a couple of percent in your performance, but between the 2 and the 1, sometimes you can lose as much as 5 or even 10% in certain ways. Certain trading plans are constructed. So what I'm saying to you is that you can move down. You can move down in your timing frame in your candle, and that will expose more trades. Why would you want to do that? Because the more trades that you expose, the less you're challenging your weakness, which is your lack of patience. So if you're chasing trades, if you're revenge trading, there are solutions in adjusting your trading plan to who you are for all of those issues. And so it would be my job, and without me, your job, to try to identify. Sometimes somebody questioning you the right way is a more honest way of identifying who you are. We tend to all hide from ourselves. In any event, the idea is, if I were to work with you, what I would do first is have a one-on-one identity discovery session where I would question you, and we would talk about your history in trading, and then I would discover what those strengths are and what your weaknesses are, and then I would take a look at your current trading plan. A lot of traders come to me and they have a good trading plan. In fact, there are certain elements that they really like, and certain elements that I believe from experience, challenge who you are. Now, you may want to keep them and work on your mind to offset that weakness, or we can change something about your trading plan to also offset that mental and emotional weakness. I hope you're following me here, because this is really something I don't think you've probably ever heard, but it's something that worked very famously in that room that I showed you and throughout my career. So identifying your strengths and weaknesses as far as the emotional techniques that you use and abilities or inabilities, and then changing your trading plan. We can take the elements that you want, that you like, and Frankenstein maybe some of the proven elements that are in our simple trading plan and get you a trading plan that's going to fit you perfectly. Or you can, many people just love our loaded gun trading plan, and they're not really married to anything, and nothing seemed to work. And so I tell them, hey, try the loaded gun simple trading plan. It's worked for a lot of people before you, and the simplicity of it already helps to offset some of those mental and emotional issues. So let's start there. But if you like the MACD instead of the RSI, you don't need both momentum indicators. We'll choose the one that you like. And I'll show you how the difference between the two and how you may want to adjust the way you approach things. In any event, the idea is that you're going to get a simple trading plan that's proven. We can work on your trading plan, but I want to have that one-on-one to adjust the trading plan to you. And I call them applying nuances to match that identity. So that when you have a plan that fits you based on what has been discovered by a professional, that's going to be me in this case, what your issues are, and you're in agreement with those issues, because usually I've had traders almost go to wanted to have gone to tears, and when there is a discovery about and there's an admission about who you are, and it doesn't have to go to tears. That's 1 in 1,000 or 2 in 1,000, but it's releasing, it's freeing, and all of a sudden you're open to what it takes to win, and that's matching you to your trading plan in this particular case. Once you start there, then only the deeper rooted situations from a mental and emotional standpoint, which usually occur from something that happened in childhood or something that has nothing to do with trading, many times does that. And Tisha, if that becomes something, you can work with her on that. But the idea is that we can change what is resident in your subconscious mind. But in this part of the side of the triangle, once you have your trading plan that fits you, because we've discovered what you are about and your strengths and weaknesses, and not only, it's also recognizing your strengths. Why not have a trading plan that amplifies your strengths? So, and then apply those nuances and have the perfect trading plan for you. We call that the unique plan DNA alignment. And once you experience that, once you've gone through that, now you have a plan that works. Okay, so that's part of the triangle here that you may not have heard before, that approach. And I've got to tell you that is a quantum leap approach to getting you solid in not making mistakes. I was talking to a trader now who's going on now to have several payouts in prop trading, and he remembered when we first started, and it just felt that this area was what was really what kicked it off, and that the amplification of his strengths, as well as the neutralizing and reversal of weaknesses, is what turned him around. The next question that I get, I'm going to check my time here. The next question that I get is, I'm not in control of my emotions. Again, the trading plan worked for you is based on what I discover, but it really only minimizes or reduces the situation from the standpoint of mental and emotional control. The real mental and emotional control needs to come from work with the subconscious mind. So you need to get from I'm not in control of my emotions to I'm in total emotional control. And that's what we want to get to here. And before I give you the 3 elements that we use here, I want to show you a picture. This is an actual photograph, micron photograph, of really the subconscious mind. You've probably seen the iceberg picture of the conscious mind on top and the subconscious mind being the part underwater. The conscious mind is what's on your shoulder talking to you and advising you on a conscious level. The subconscious mind I know what's in your subconscious mind, because what's in your subconscious mind is true for you, and that's how you'll act. So by watching what you do, I'll know what your subconscious mind believes that is the right thing for you to do. If your subconscious mind is holding fear and hesitation, you're going to do things that reflect fear and hesitation. You see these tendrils here, these thin lines here. These are neural pathways. This is actually thought energy. It's thought energy that, in other words, when you have a thought, you generate. Listen, everything is energy. We all know that from quantum physics and so on. This is thought energy. Thoughts are things, and this is a photograph of a thought energy, a neural pathway, and it contains whatever that thought is. I just lost them a little bit. Should I do it next time? I've been doing this for 2 years and I still haven't had any success. There's another one that says that, and another one that says, I'm not sure this is for me. I'm hesitating to pull the trigger because I'm fearful. And you keep on feeding your mind these kinds of thoughts, and you're usually doing it in a relaxed state. You're kind of waiting for a trade to happen, and you're kind of zoning out a little bit. And this is the relaxed mind state that you're going almost directly to your subconscious mind. So these are once you have enough thoughts of the same issue, it creates a neural net that becomes true for you. Okay, I'm fearful. I need to be careful. I got to make sure everything lines up, and I need to make triply sure before I judge. Otherwise, I'm going to get burned again. That's what is true for you in this neural net. Okay, and here's another picture, a different angle, black and white, different. This is from the Cold Spring Harbor Laboratory. Another version of that same picture, the neural pathways and the neural net that holds what's true for you. I mean, this is real. This is what's controlling you. And again, I'll know what this neural net is by the way you act or the way you tell me your issues seem to be. So we need to unwind that. So how do we do that? The way we do that is to have you relax, take a few deep breaths, for instance, and commit to you let's call it a subconscious training. That's what we call it. It doesn't take long, 7 or 8 minutes. And you do this 7 or 8 meditation. Some call it a meditation. Some call it guided imagery. But what you're doing, it's really not guided imagery because you're not going down a forest and seeing trees. And it's not that. It's you relax yourself and then you contribute positive. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. So when you're in this nice relaxed state where you can shoot these neural pathways right into your subconscious mind, and you say, I'm a wise and disciplined trader. I do the things that a wise and disciplined trader do. I understand that taking my trades immediately after my tested trading plan tells me to is going to result in the positive result that I seek. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. You continue to, I say that because that's one of the things we like to say. But what I'm saying is that we identify an issue and then you can contribute those thoughts. Those you either think or you say it out loud, or you think them or follow the words. The words are being said to you and you listen to them. Sometimes some people like to repeat them, whatever it is, but you are contributing to the subconscious mind, and you're creating after a 5-minute session 4 or 5 times through. You do it once a week, once a day for a week, 5 sessions. That's enough neural nets to create neural pathways to create a neural net that now supplants the old ones. Now you're no longer fearful when looking for a trade. You have the confidence to take a trade when your trading plan tells you to. So whether it's over trading, whether it's revenge trading, whether it's fear of losing, whatever it is, there is a process to create a neural net that will make you strong in that area. That's one of the 3 things that we do when it comes to helping traders with their mental and emotional issues. One of the other things, we also help traders that like affirmations. They've grown up with affirmations, and that can work too. I won't discuss that right now. Most people know what that is. I don't want you to take this lightly. We have developed exactly what should be said to get the quickest and deepest and most permanent change. The emotional freedom technique is something that you may or may not have heard of. It's sometimes called the tapping solution. It is now a very popular therapy for post-traumatic stress disorder soldiers who come back from the war. My wife has worked with them for years in her private practice before she joined me at the Disciplined Trader. And EFT, the emotional freedom technique, is again, I don't want to say it's a go-to therapy, but it's in the mix, and it's probably the most I know it's the most popular right now for getting change for soldiers. Now, I'm not equating our trauma as traders to a soldier's traders, because that's a whole different story, but it is a trauma nonetheless. And if it can work in that situation, it certainly can work for us, and it does. It involves actually tapping meridian points while it's again a 4 or 5 minute process where you're taking your fingertips and you're tapping on meridian points while saying certain things, and you're just, in this particular case, you're repeating after what my wife asked you to say. So she may interview you, and then she would then actually, right on the one-on-one Zoom conference, she would record an EFT session for you, and you would tap along with her. You would get that recording and work with that. So whether it's EFT, whether it's subconscious training, we are at the cutting. The Disciplined Trader is the firm at the cutting edge of this. So if you believe that the mental and emotional issues are your issue, and that you've hit the canvas so many times, that actually, this is my wife actually in one of those videos showing you exactly where to tap, and so this is I just wanted to kind of show you that it's very easy to do, and she'll be repeating something, and you can see this is 2 minutes and 3 seconds. This is probably a 5-minute session, the whole thing. And we have sessions, stock sessions, but Tisha likes to do something specifically for each trader as well along the way, as many as they need. Okay, so I wanted to show you that that in order to get your mind straight and get your mind focused on being a professional trader, because that's what you have to seek. I mean, if you're doing this as a hobby or as a side thing, it's not going to work. You have to vision yourself as a professional trader. It's okay to be a professional trader for 60 minutes, 3 days a week. But when you sit down in that chair, you need to recognize that it's not only your trading plan that's got to be tested, it's got to be real, and it's got to fit you. That the issue is you staying in control. Somebody came to me yesterday and said, my issue is mistakes. And that brought me way back to when I started trading. Make one mistake, and all of a sudden, pressing the button and buying 10 options instead of one, or 10 futures contracts, whatever, instead of 1 or 5. You're using micros, and you wanted to buy one mini contract, and you still have 10 micros up there, and you put it on there, and all of a sudden you got a position 10 times that you thought. You can't be doing this. You can't be doing that. I mean, the one time where you make money doing that, somehow you congratulate yourself, but you have to be just as angry at yourself in that situation. Not angry, but you got to realize that you need to not do that again. So anyway, here is the second side of this solution triangle. Again, I want to check the time real fast. So one-on-one identity with the mental and emotional issues. This is the session that you have with Tisha, who is, you saw the picture of her. Well, she will, again, interview you in a little bit different way than I'm interviewing you. I'm interviewing you more in a technical way. I'm looking at how technical. Listen, there are only two types. Well, there are only two. Traders seem to fit into two basic types of traders that they're comfortable with. That's the first thing that I have to discover when I talk to you. One of the things, one of the ways is the kind of trader that I am. I call it a trigger trader. I want to be in as many trades as I can. I'm an action-oriented guy. I believe that, they say I'd rather be out of a trade wishing I was in than in a trade wishing I was out. And certainly that's true. So I need to watch myself and make sure that when I get into a trade, it's based on a trigger that is frequent and reliable in the case that I talked about before. And I believe in every case, if you're going to be this kind of a trader, you need a frequent, reliable trigger. And to do that, so when we create a trading plan for you as a trader who likes to be in the market and likes the action kind of thing, then what I need to do is to also encourage you to be part scalper. Why? Because if you have a frequent, reliable trigger, and I'm going to take the reliable part, where you're going to get a nice movement upon placing the trigger, upon placing the trade, then why not take the low-hanging fruit? 2/3 of the time you just grab the low-hanging fruit. And sometimes that low-hanging fruit can be considerable. I'm not talking about 1 or 2 ticks or a couple of dimes. I'm talking about a few dollars in its stock, and I'm talking about a reasonable pop. I call it a pop. You take that pop, move to break even on the remaining. So I take all of my positions at the onset of a trade. That's what somebody who is a trigger trader. And that fits a lot of people who like the action. They get the action, but it's got to be in a responsible way. The other kind of trader is what you hear about a lot, a trend trader. And of course, even a trigger trader becomes a trend trader when they've left some of those positions on after the scalp and it starts to go up. You've got to manage that trade as it matures. So you become a trend trader. But there are traders who are specifically and totally trend traders, and that's okay. That's the way I grew up. I think when you take Trading 101, you probably learn to be a trend trader first. So what you're looking for is where a trend begins, or the beginning, a valid place where a trend has now established itself, and you take on your first position of a few contracts or a few hundred shares that you plan to take on. You take it first, and as the trend matures, you add it. As it matures, it gets stronger and stronger. You add positions or contracts as it goes up. That's a trend trader. Okay, now for me, that doesn't fit me. It fits half the people that I train, because in trend trading, if you put on that second position after the first one has a profit and then it comes back, somehow you've taken away the profit from what you had. Why didn't you had a profit? I can't take that mental thing that goes on. And I can, but that's what upsets me. So I need to understand what upsets you so that we can decide the kind of trading that's right for you. I know that I'm getting very specific here, but this is really where success is for traders. Okay. And so on the other hand, some people don't like the way I like to trade, and that's the other half of people are generally trigger traders, because if we take our full positioning in the beginning and it doesn't work out right away, you're taking your potential full loss, whatever you've subscribed as a reasonable loss in a trade, you're taking this sometimes right away. I kind of like that because I'm out of it. Now I'm ready to look at the next trade, because I know each time I put it on, I've got a 67% chance of it working out for me. So, but some people don't like to take that big loss right away. And it's not a big loss, but it's the maximum prescribed loss right away, because that hurts them. And if that hurts you, that's not the kind of trader you are. You're a trend trader. So I'm just saying, I'm embellishing this, and I'm getting excited about it because I've seen the fortunes of traders turn around just with that realization and finding that match. Okay, so let's continue on. I'm kind of back on this side again, but my wife Tisha will work with you on now she's not only my wife, she helped me. When I met her, I was running that big option firm, and I was a crazy trader. At that time, we had to call in our trades. I would run to the window, make a ticket, throw it in there, and they'd have the fill. They'd get on the phone to the floor, and they'd have the fill for me. I'd be running back and forth while I'm trying to run this place. I was a crazy trader, moving tens of thousands in a day in a big room. I was losing it, personally. And so I met my wife, and all of a sudden she's a subconscious trader. I said, this is what, actually I met my wife and she asked me what I did. And I had just, when I met her, I had just become managing that room. But I didn't want to tell her I was a trader, because I wasn't proud of it at that point, because I thought that meant you were a gambler back in the 80s. So I told her I was a philanthropist. That's what I told her. And ever since then, you know, at the beginning of every year, the end of every year, when we decide who we want to give to charitably, every time I get cautious about it, she says, "Hey, you're a philanthropist." So she helped me not only be a philanthropist, but she helped me. She says, you can't be like that. You come home, and I can tell it by your face whether you had a winning and losing day. We can't have that. So she started, and here you're married to one of the a worldwide subconscious trainer on the cover of psychological magazines. Let me help you. It took me 2 years to have her let me help her, have her help me. I was a big egotist, and so. Anyway, that changed everything, and that started this whole thing. So you're going to get what I got, and that's a no fluff analysis of where you stand from a mental and emotional basis. And she will construct based on the way you answer your questions. Everybody has a different concept or way of looking at things. She will take your way of looking at things and feed it back to you. Why? Use the same language, use the same wording. Why is that? Because this is the way you accept, because you give that way, and therefore it's easy to accept that way. I hope I'm saying that right. But the idea is that she understands how to best create neural pathways, strong ones, that may only take 2 or 3 of these meditation sessions to create your new neural net, so that now you're patient to wait for that A+ trade that you know you should be trading. You're patient to pull the trigger right. I have my finger right on my button depressed on the mouse, and when I see my trading plan, I have to wait for the close of a candle. When it closes, my finger comes right off the candle. I mean the button. I mean, I'm ready to go right there. She will get you ready to go the way you're supposed to be ready to go when an opportunity comes. No hesitation. And then I put in my limit for the scalp. I put in my stop. And it goes. So whatever it is that you do, you will have you'll be feeding your mind exactly what you need to do, so that when the time comes, you'll be doing it naturally. You won't even be thinking about it. You won't be having those negative thoughts. So the idea is that you'll have that one-on-one mental and emotional conference with Tisha, as many as you need. In fact, in all of these, you can meet with us as many times. It only usually takes a few times, but sometimes things can happen in your life and kind of shake you up, and all of a sudden you feel unhinged in your trading. Come to us, and we'll make that happen for you again, and get you back on the straight and narrow. So we use scientifically amplified strengths and weaknesses. So we use those methods that I talked about to reverse. To strengthen your strengths, to amplify your strengths, and eliminate your weaknesses. We use the subconscious training, affirmations for some people who like to do that in the car and so on. I'm not one of those people, but if you do, I like a quick 5-minute meditation, or I like to tap. I'm done, and it's just, if not more effective, and it makes it happen. But you do what is comfortable for you. Whatever it is, with those, she'll match exactly what it is. You'll get the recording. That is... Nobody does this, because nobody knows how to do this, and now you've got access to that. So you got your trading plan. You've got the one-on-one with Tisha that identifies your strengths and weaknesses. She responds with the scientifically proven methodologies and hands them to you, and then you can periodically troubleshoot with her. In other words, she's very big on accountability. She wants to know. If you have a session with her and you're supposed to listen to the quick 5-minute meditation, or do the EFT session once a day for a week, she says, let's make an appointment a week from now. I want to hear what's going on. I want you to tell me what's going on. She will make you accountable. I'm going to offer you something at the end. There's nothing to buy, but I'm going to offer you more detail on what I'm talking about in the end. But you really have to be ready to win, because there's accountability in all of this. I'm giving you the pieces that you can try. You can maybe put it together yourself, but why? You'll never find a Tisha, and I don't think you'll ever find somebody with my experience that can help you match you with the trading plan and understand how that goes. So you've got these two. You've got the unique plan alignment, which winds up to, you'll have a plan that works for you. You've got the what we call the personal empowerment blueprint, which is your work strictly on the mental and emotional part, using scientifically proven areas of the subconscious mind. And what you wind up with is 100% of safety and confidence. And I use the word safe because in my work with traders, the word safety actually comes up more than you would think. When you go deep, safety, we want to feel safe in what we're doing. We don't want to feel that we're doing something that's uncontrolled. Safety and confidence in what you're doing is really the cornerstone. One of these, you need a plan. You need that safety and confidence from a mental and emotional standpoint, and that's what you will get. Once that happens, then the question becomes, what I hear is, I'm not getting support. You know, I started out with this trading plan and it worked for me for a while, and then it blew up, right? And what happens is you start making everything around you wrong. Your guru starts to sound like he's just trying to sell you, and everything falls apart when you're not getting support and accountability. Okay, so you want lasting support. You want to be able to say to yourself, I've got the perfect trading plan, I'm in control of my emotions, and I've got lasting support. Okay, and we do that by having access to the Loaded Gun Trading Room, which is run by Danny DiMaria. If you're out there and you know floor, if you're an old floor trader, you know probably Danny. He worked on the CBOT floor. He was kind of the trader's trader. When a new floor trader came in, they give him to Danny to mimic, to mirror. But Danny and his son Matt, who's Danny's in his 50s, Matt is in his mid to late 20s. They run a dynamic trading room that uses the Loaded Gun Simple Trading Plan, but also techniques that they used on the floor. It's very popular, and you're going to love it. But I don't want, people like a trading room to copy trades. I don't think that's the value. I think the value, again, is from a mental and emotional standpoint. I believe that the value is really learning how to be a winner. Losing is a habit. Struggling is a habit. You create your day about what you remember, and you invite more struggle. I know you don't think you do, and I don't, but winning is a habit. Losing is a habit. Struggling is a habit. To learn how to win, you need to model a winner, and that's what you can do in this trading room. Okay, Danny wins, and you'll see him winning on a daily basis. We run it 4 days a week. You'll be also able to model traders that are getting paid. In this room, there are traders who are getting paid. And there's a lot of, it's quiet, of course, in trading rooms as you're waiting for a trade, but anybody new, especially to the room, ask a question. Let's get going. It's not only Danny and Matt that answer questions. Sometimes it's if it's about getting paid, or a trader who's getting paid. This is a room where you can model what winning is about, because in the end, it's going to be you and the computer. I don't want you in this room forever. Okay, stop by and say hello, but in the beginning, spend a lot of time there. But after you have modeled, and that, you need to do it on your own. You need to learn how to fish. That old thing, instead I give you a fish, but learn how to fish. Okay, I'm sure that's the exact expression. And then we also have a school site. I wish the school site was a little bit more active. I'm there. I do some posting. People seem to read it. It's more of a newsletter type site, but I'm there to answer any questions between our monthly meetings. We have monthly meetings where we all get together and we talk about our experiences. I give you something very big is coming up that we're working on. You're going to want to stay with me on that and just keep connected with me in some way. Go to thedisciplinetrader.com and get my 4-minute drills. You'll see a little black thing there. So go to thedisciplinetrader.com and you'll see, sign up for the free 4-minute drills, and at least you'll get on the list where I can tell you what's coming up. But this is a program that once you have the support, once you have a trading plan that matches you, the emotional support that you feel safe and confident, and then you have the lasting support that we give you that keeps you accountable, so that you never feel alone. We call this the total support framework, and together what you have is something we call the consistent payout roadmap for prop traders. We have it for prop traders, but I gotta say, the word is out on this program, and at least half now of traders who are in this consistent payout roadmap are not prop traders. They're trading. They're trading. Some of them are trading big money, which is always something. You know, prop trading. I always thought that small people would like. I mean, why trade a $5,000 account if you can trade it $500,000 if you're a good trader and make 90% of the profit? But it's the bigger money that recognizes why are they trading, you know, 500,000 of their own money. They can put out that and get an easy 5 or 6% on it with very little risk, and they can trade that of prop firms' money. So there's always a mix. There's a mix of prop traders and retail traders in this. But you're looking here at a winning package, and I believe that if you've been with me for this whole presentation, that you're probably thinking, I don't think I've ever seen it like this, because I've never really presented it like this. We've never really put all the pieces together for you like this, and I'm really hoping that you would like to become part of this. And to do that, all you need to do is email me. Email me at admin@thedisciplinetrader.com. Okay, and just in the subject line we call it CPR, the consistent payout roadmap. But you can see that it looks like originally this. You got to. I know that our host has a great sense of humor, Jeff, and originally on this logo, I was going to have a couple of paddles come in. We have an animated version of the logo where the paddles, the red part of the heart shows, and then we put the clear, and the heart starts beating. And so I didn't name it a consistent payout roadmap. There's another name for a consistent profit roadmap for retail traders, but it's the same program. And it just happened to be CPR. So we've kind of had a little fun with that. But listen, most of the traders that have come to us are coming off the canvas again. And so email me. I'll get this email. Today I'll get it, and tomorrow I'll get it directly because my assistant is out for it's the end of the day today and tomorrow. So admin@thedisciplinetrader, I will respond to the email. Just put CPR or give me the bottom line so I know that you're asking for the consistent payout roadmap, and I will send you the brochure on it, and you can see officially laid out in perfect order, because I can get excited in these presentations where it can become a little bit haphazard. So admin@thedisciplinetrader.com. That is actually the end of my presentation proper. I know we have a few minutes. I started a little bit early, and I know you like to do things in the middle. So if there is, are there any questions at all? I'm going to stop sharing, and so that we can see our faces again. I think it's going to be me and Jeff, right?
Well, I can join you.
Okay. Oh, you can show me. I see. Okay.
I put the links, the email in the box, admin@thedisciplinetrader. I don't have any questions, but if you have any questions for Norm, get them in here real quick. Norm, let's see. The only real comment I have for that session is Jeff is always positive, and I tend to disagree.
That's good. It's pretty foolproof because a lot of this, Jeff, as you know, we've talked about this privately. That it's all about the mental and emotional part of trading that really is the glue that holds everything together. I mean, some people really have good 6 months and believe they've got it all done, and then all of a sudden it takes a month to unwind everything. And it's kind of like when I play a lot of tennis, and when I'm up 5-love, and all of a sudden I lose it in a 7-6 in a tiebreak. I'm saying to myself, what did I do? I was complimenting myself the entire set, and then I just lost focus and made it happen. You can't lose focus in this game of trading. And I call it a game of trading, and I really shouldn't because it's not a game, but it's the fun of trading when you get it right, and it's the heartbreak of trading when you get it wrong. So listen, most of the people that I deal with are pulling themselves off the mat. In fact, when I advertise this particular to private groups, I talk about only wanting determined traders, only somebody who has been on the canvas so many times and just doesn't want to have to get on the canvas, wants to do it one more time the right way. And I think that's what we're trying to do here, is to finally do it the right way. I mean, pieces of the right way, but it's important to do it totally the right way, and it's all in the cabeza. So
it's interesting. You kind of talk a little bit about it, but every time I start to feel like I'm really winning well and get a little bit of an ego, I have to say, okay, well, am I found my rules still? Like, okay, because the market has a really good ability to come in and humble you fast. So,
well, they say that you'll learn much more about yourself than you'll ever learn about the market. But and I think that one of the things that I try to do with traders right from the beginning, traders that respond to that particular story, that particular action of having wins, and that can that same attitude, that same subconscious neural net shows itself on a daily basis, where you have 2 or 3 good trades, and then all of a sudden you're either you go bigger or you go the same. I like to preserve those big trades, so I never get into that situation where I'm up 5-1 in a tennis set and lose the set. I go very small, because if you have that issue, why tickle it? Why invite it to happen where we're up $1,000 and all of a sudden you're up 700 and you're saying, well, I'll make one more trade. Now you're up 500. Now I got to get back to 1,000 because I shouldn't have done that anyway. And then all of a sudden you're back to even. You need to understand how you operate and change that in your trading plan, as well as change that from the mental and emotional standpoint. So this is the answer, everybody. This is the answer. You're going to get part of the answer from a lot of the great traders on this lineup. I mean, I'm not kidding. I do a lot of these, and this particular lineup that you have this time around, very, very impressive. Very impressive.
I agree. But I think you're saying that only because you're part of the lineup.
There you go. And that's one of the big things. How are the girls? I always ask about them.
Oh, they're doing really well. It's the last week of school. They're happy. So
yeah, I'm watching for her stand-up act.
She won't record videos with me right now. She's turned into a teenager and doesn't want to be on camera.
I noticed that. Well, I've been through that. You're never going to be right. Just you got to kind of just put in the borders and let them be themselves.
Okay.
Easier said than done.
Yeah. No, they're doing great though. Yeah. Sometimes, well, in any case.
Another private discussion.
Yeah. I saw like a little bit of a meme that said, you're probably living the life you once prayed you had.
There you go.
The whole idea was like, you need to remember where you started, where you're at.
That's right. Like Mike Tyson. Yeah.
All right, very cool. Admin at thedisciplinetrader.com. It's in the chat. You can click on it. It'll take you, or you can just send him an email, and then something about bottoms.
Yeah, and I'll send you the brochure on the CPR, the consistent payout roadmap. I think you really like it.
All right, Norm. Thanks for joining us today.
Thanks for the opportunity, my friend. Be well. And if Sonny's still there, hi Sonny. Thank you for your sunshine bouquet.
All right, very cool. Let me do this. I'm gonna go ahead and move this over here so when I share my screen, it's going to work properly. Okay. Very cool. Thanks again, Rahul Norman. I'm just gonna get loopy here. We've been at it for dozens and dozens and dozens of hours. So thank you very much again, Norman.
Thank you.
All right. As we move on, I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event. They've done a great job of supporting us over the years. It's a great magazine. It's about, I think, $100 a year to get a magazine sent to you every month. Part of that membership will give you access to all of their trading articles, 17,000 plus of them. You can do that at traders.com. Big thank you to them for supporting the event. If you haven't yet, you can join our online community. In there, we go in, we talk about indicators, how they work. We talk about, we bring in guest speakers, we do podcasts, we talk about the markets in general and life in general as well. It's a great community of traders. I've learned a lot just by doing it. So thetradersforum.com, you can join for free. Very, very good resource. It's a growing community. We've got about 1,500 members now. And we'd love to have you there, thetradersforum.com. So in terms of us, we've talked about MetaStock all week long. It's great. 32 years in a row. It's been rated #1 in its price category. It helps you with scanning, testing trading ideas. The forecasters showed the patented forecaster today as part of the thing. Gives you real-time commentary, signals, alerts, all that good stuff. $75 a month for the late version. It'll give you that you can watch during the market. You can do scans all day long. Just $75. We also have a full real-time version that includes all of the Reuters news, ton of fundamental and mega economic data. That one would be about $265 a month to get started with that. You can do either one of those. What we're going to do is if you do a month, we'll give you the second and the third month for free. That'll have you run until August 20th. The cost on that's only $25 per month if you do the DC version. There's no commitment with that. If you decide you want to cancel, you can cancel anytime, any reason, but you're not going to. You're going to keep it. Most of our customers have been with us for a very, very long time. And there is a reason it's been rated #1 in its price category for so long. So to get that extended trial, give us a call. We'd be happy to talk to you at 800-882-3040. You can chat online with us at metastock.com/saleschat. You can also go to metastock.com/conf-promo. So I do want to address something a little bit in the from the prize that we gave away last time. I saw this. Now, but before I say this, I want to preface this with the fact that I'm blind in this eye and I can't see out of this eye. So last time we had Google pick a number for us, and then I said 58 was the closest answer, but I missed the fact that Neil had guessed a number that was actually closer. So Neil, I'm going to also send your information over to Mad Hedge, and you'll be the final winner of that prize. I'm out of those prizes. So, but we have lots of more prizes that we're going to give away through the course of tomorrow and the next day. So if you haven't yet, if you're watching us on YouTube and you want to be able to qualify for the random prize drawings that we do, make sure to click the linked comment. It's at the bottom of the chat. It used to be at the top, but they moved it to the bottom. Click on that. It'll take you to a little bit of a registration form where you can register and be part of the conference and part of the prize drawing. So without further ado, though, let's get to our last speaker of the day. Kevin Nelson is the only person here that's actually hired me for a job. Kevin actually, when I started, he was the sales manager. I convinced him that I was going to sell a lot of MetaStock if he hired me. And that would be 30 years ago in March, if you can believe that. Kevin has now moved down to Florida. He runs a website where he trains people on how to use MetaStock. It's called learnmetastock.com. And today he's going to talk to you about Trendline angles. Kevin, let's get you started. How you doing?
Good. Thanks, Jeff. I appreciate that. 30 years. I mean, that is crazy.
Yeah, in March, it'll be 30 years, if you can believe that.
Wow. No.
Which is still 10 months away, but we round up.
That is crazy.
All right, I can see your screen. I'm going to get out of the way. I'm going to turn off my camera, but I'll be here if you need me.
All right, perfect. Thanks again, Jeff. Appreciate it. Yeah, as Jeff pointed, I actually worked at MetaStock for a number of years, and I left in 2008 to start this company here at learnmetastock.com. And what we do at Learn MetaStock is really just to help you with however we can with your MetaStock program, whatever it is that you want to try to get out of it. We've got a number of different ways that we can help you. And so what I'll do is I'll go ahead and go through my presentation here today. And then at the end, I'll just kind of give you a quick rundown of what we can offer through our website there. So what I've got planned for you today is we're going to do a class on trend lines and using the tools that we have available, learn how we can use these to scan for breakouts. So how this whole thing came about, for example, or this particular class, is that I've had a number of different customers over the years ask me about trend lines and how we could possibly use them inside the program. We know that the trend lines that we have available are static indicators, so there's not a lot that we can do with the basic ones. But the good news is that we do have other tools available inside of it. Primarily, the one that we're going to zero in on today is what's called the linear regression trend line. And this one is actually a formula-derived trend line that you can use in a lot of different aspects inside the program. So that's what we'll do to get started with. I'll show you, of course, how to use it, how to interpret it, how to plot it, all that good stuff. And then what I'll do is I'll show you some of the different formulas and so forth that I've created to help you use, for example, or use these types of tools to go out and look for different types of situations that might be of interest to you. And the nice thing about this is that once you understand how these tools work, you can use them in whatever aspect you need inside the program. So for example, like one of the things that I like to do is I like to back test different trading ideas just to find out, if these ideas are any good or not. I mean, there's no guarantees when you back test something, but hopefully if you're objective about about it and so forth, you can use this type of information, of course, going forward in the future. So let me go ahead and jump over here to a chart, and let's take a look at this chart here. We've got a chart here, the SPY, which of course is the ETF for the S&P 500. And to get started, most people are familiar with the Trendline tool that we have available over here on the left-hand side, this Trendline tool. And basically, of course, how this works is that you just pick a starting point on your chart, you drag it to another place, and you click again, and this places your Trendline tool on your chart. Now, this tool itself can be modified. For example, you can grab the ends, you can extend it, you can change the angles of it, whatever. And of course, you can move it around and do whatever you want to do with it. But the problem with something like this, again, is that this is just a static indicator. There's really not much we can do with this. So for example, we can use it to notate, for example, like the moves on our chart. And so when we see these different types of moves like this, especially like in this downward move that, of course, ended here at the beginning of April here, is that, of course, we had this huge drop here in the market. And what a lot of people like to use Trendline tools for is identify, for example, like changes in directions. Like, for example, after we have a big drop, if the prices break above this trend line, maybe on like bigger volume and so forth, that's the kind of thing that a lot of people like to look for. But the problem with this, again, is it's just a static indicator. We can't really use it in any type of formula. That's the problem. The good news is that we do have another indicator inside your program that you can use to do different things like that. And it's called the linear regression trend line indicator. Now, there's a couple different ways you can load this. For example, you can go up here to the insert choice up here at the very top. And then you can go down here to, for example, like this regression choice, and you can select it from here. Or over here on the right-hand side of my screen right here, this indicator right here is also the same link to the same drawing tool. So if you click on it and then pick a beginning point and then an ending point and click again like you would like a normal trend line tool, you'll see that it'll draw this trend line tool here on your chart. And what's interesting about this is that this is a dynamic indicator. And so as you drag this around your chart, you'll see that it'll actually conform to the trend at this point. Now, a lot of times what happens is when I show this to somebody, for example, and we're just kind of working with trend lines like this, and I say, you have this tool right here. Well, a lot of times people look at this and say, well, yeah, that's all well and good, but generally I just wouldn't draw a trend line like this right through the middle of the prices. And the question is why is this? Why does this trend line draw it right through the middle of the prices? Well, if you double click directly on the linear regression trend line indicator itself, you'll see that you can choose what the price or the trend line is going to be based off of. By default, it's going to be based off the closing price. But in addition to that, you can have it based off the open, the high, or the low in addition to the closing price. So if you're based off the closing price, again, why is it really kind of drawn through here? And the answer is that this indicator is actually using what's called a best fit or a best fit type of drawing plotting type of situation. And what I mean by that is that it's taking the closing prices, for example, of these candles that we have it drawn on right here. It's taking all those closing prices and it's literally just drawing the trend line based off those closing prices. And as you can see, the closing prices are kind of like all over the board. And again, this is basically the best fit for that line at that point. Now, the other thing you could do is you can try basing it off a different type. So for example, like in an upward trend like this, maybe you might want to consider placing the trend line across the lows. So for example, I'll click on low, click on apply, and there you'll see it'll actually shift the line down below the candlesticks in this case. And this might be more how you might draw this trend line here, for example. And then of course for the other side, you know, if we're in a downward trend like this over here, right there, and let me just kind of move this over here just so we can kind of see this. But then, for example, if I double click on this and then change this, for example, to be calculated off the high, click on apply, you can see again, now what it does is it shifts that trend line up to the top. Again, it might not be exactly how you draw it, but this is pretty much the closest that you'll get with this trend line tool. Again, you can base it off of one of those price fields, but it's going to use those prices to define the best fit for that line. All right. So, but the good news is, again, is that we can now use this. Since this is a formula-driven indicator, we can use this in a lot of different ways. So the first thing I want to do here is if you hover over that line here, you'll also see a number of different, or quite a bit more information about it as well. So for example, the value is showing me the value where my cursor is right now. The periods is showing us the length of the trend line tool, which in this case is 12. And it's also showing us a slope, which in this case is a negative 2.33. I don't get too hung up about the number itself, but generally what we're looking for is either positive or negative numbers. If it's negative, it's going to be sloping down. If it's positive, it's generally going to be sloping upward. Now, if we actually change the length of it, say, for example, like if I extend it, for example, and then I drag this around, this is going to be less sensitive, for example, over that period of time. On the other side of the coin, if I shorten this, for example, then, for example, I bring it down to 11, you'll see it's much more responsive as, you know, the prices come into it. So that's another thing that you'll kind of work with to figure out which way it's going to work best for you. So what we're going to do to keep going forward here is I'm going to go ahead and change the length of this. And right now it's looking at 11 periods. So I'm going to go ahead and drag the end of this a few more bars here and make sure that this is set at 14 periods, number one. And then number two, I'm going to double click on it. And I'm going to go into the price field and I'm going to change the calculation method to be based off the closing price and then click on OK. Now, the reason why I'm doing this is I'm going to show you a couple other indicators here. And by default, these other indicators are all going to, when you first plot them, will all be based off the closing price and they'll all be using 14 periods. But as I've said before, you can, once you learn how to use this, you can adjust this as much as you'd like. So I just want to make sure that this is set for 14 periods. And again, it's based off the closing price, which it is. So that looks good. So the first indicator that I want you to plot to work with this is go up here to your indicator quick list and then do a search for indicators that begin with linear. And what you're looking for are these two indicators right here. There's one that's called the linear regression indicator itself, and a second one just called the linear regression slope. So the first one we're going to plot is the indicator. I'm going to go ahead and hold down my left mouse button, and I'm going to drag it directly on top of our price bars. And you'll see the default here is set to 14 periods, and the price field set to close. So again, that's our default. So we'll click on OK. And this will plot, in this case, for example, this blue line here on our candlesticks here. All right. Now, let me go ahead and change these candlesticks. I'm going to go ahead and change these to a bar chart. We'll make them both up and down, or both the up bars and the down bars to be white. I'll click on OK. And the reason why I want to do that is hopefully we can see this here a little bit better. Maybe I'll make that line just a little bit heavier there as well. So go ahead, just so we can make sure we can see this clearly. So now what I want you to pay attention to is as I drag this trend line tool back and forth here, for example, pay attention to how the end of the trend line rides on this blue line. This blue line is the linear regression indicator. And what this is identifying is the value of the end of the trend line. So for example, at this point right here, you can see how the prices are above the end of the trend line. So why this is important is that very, very quickly, just by plotting this indicator on a chart, I know exactly what the prices are doing in relation to the end of the trend line at that point in time. So for example, like right up here, if I drag the indicator up here, I know that these price bars are all going to be below the end of the trend line. So let's go ahead and drag it up here, bring it up here. And there you can see again, the prices are clearly below the end of the trend line. And then vice versa. Let's kind of go back here in time here a little bit. And I'll just find another random point here, but oops, let's go ahead and select that. And I'll bring us back. And so say, for example, like during this little section right here, for example, let's kind of zoom in here just so we can see this here a little bit better, is that you'll see that right here, the prices or these bars here, for example, are definitely going to be below it. And these bars here are definitely going to be above it. So again, as I drag this around, you can see that that's true. So as I kind of like look at this chart with this indicator on it, at any point on the chart, I know exactly what the prices are doing in relation to the end of the trend line at that point. This again is what's called the linear regression indicator. All right. Now, another indicator you want to take a look at here, we'll go back up here to our menu. And this time I'm going to grab what's called the linear regression slope. And I'm going to drag this up here to the top. And I'm going to plot this as a separate indicator. And you'll see the time periods are set to 14 and the price field set to close. We'll click on OK. And then this will plot another indicator up here at the very top. Now, this indicator at the top here, as you see, is kind of a strange looking indicator. But how you interpret this indicator is you'll look at this line, and if this line is going up, that means that your trend line is basically getting steeper and steeper or becoming more and more positive. Vice versa, if this line is going down, this means that the angle of the trend line is going down further and further and further. Okay, so again, as this line's moving up, the trend line is getting steeper to the upside, and then to the downside, this is where the trend line is moving downward. So let me go ahead and drag this back over here a little bit. I'll go ahead and click on this and we'll drag it over here. All right, and so again, I'm going to zoom in even further on this little section right here. All right, so as we take a look at this, we'll look at our trend line, for example, and you'll see it has a value in this case right now of a negative 0.17. So in other words, our trend line is sloping downward a little bit right here. So now as I kind of drag this forward here and drag it up to here, now you can see the slope has changed to a positive 1.08. And as I go ahead and drag it even a little bit further, you'll see that at this point right here, our slope is at 2.34. And if we look up here at this indicator, you'll see that that's the highest, or that's the steepest that the trend line got during that period of time. Now, if I move it just even one bar forward here, and we look at the slope, you'll see the slope is 2.03, and that is going to be this point right there on this indicator, saying that now the trend line basically has reached a point where it's got as steep as it's going to get at this point, and now it's starting to turn down. See that? And then, of course, vice versa here, as we're going here, then we can see the trend line, for example, becoming more and more negative during this period of time. And it looks like the steepest that it got to the downside is at this point. I think either this point or this point right here on the indicator. Now, another thing that'll be really helpful when using this is identifying when the trend line starts to become positive or starts to become negative. So a quick visual way to help you identify those points is that if you double click directly on the indicator itself, you can go into this choice right here, which is the horizontal lines, and you can place in whatever level you like. So in this case, I'll just put in the level of 0. I'll click on add, click on OK. And now you'll see I've got a horizontal line here in my indicator, and this is showing me my value of 0. So everywhere that the red line is above the blue line, we know that the slope of the trend line is going to be positive or pointing upward. And everywhere that the red line's below the blue line, we know that the trend line is pointing downward. Okay. And everywhere that these two lines intersect is exactly where the indicator went from, in this case, maybe a negative to a positive, or in this case, for example, from a positive to a negative. So let's see if we can kind of zero in on just on those two spots here for this example. So at this point right here, this is what, October 22nd. So that is that point on the indicator. You'll see it has a value of a negative 0.17. And if I hover over the indicator, you'll see the value is a negative 0.17. So that matches up. Now I'm going to drag it just 1 bar forward. And now you'll see our value has changed to a positive 0.05, which of course matches this value of the indicator right here. And then vice versa, from going from a positive to a negative. Let's see, that looks like that's going to be about November, what is that? November 7th. So let's go 1 more bar there. Is that, that's the 6, we'll go 1 more. There we go. Okay, so now it's showing us positive slope of 0.06. We'll go 1 more bar, just drag it. And now you see the slope has changed to a negative 0.03. So this is another really helpful way to look at these indicators, is plotting both of these indicators on your chart along with the value of 0 to identify when it's becoming positive or when it's becoming negative. Now, the next thing I'm going to do here is I'm going to go ahead and zoom out here a little bit. I'm going to drag this all the way over here to the right. And let's kind of zoom in here just so we can really see this here again. And now I'm going to drag this all the way over to this last bar. Now, the other thing you'll want to pay attention to too is that when you're dragging this indicator around, when I get to the right-hand side of the chart or the last bar, and if I keep dragging it at that point, you'll see that you'll be shortening the Trendline tool itself. So now I've dragged it down to 8 periods. So when I drag it to that last bar, I just want to make sure I don't drag it any further so it stays at the length that I want, which in this case is 14. So I've got my slope up here, I've got my indicator here, along with the actual trend line here on our chart. Now what I'm going to do is I want to save this as a default template. And the reason why I want to save this as a default is now what we're going to do is we're going to jump into some of the different power tools. And I'll show you how we can then use this to look for different types of situations that might be of interest to us. So to save a chart as a default template, right-click anywhere inside your chart and then choose Save as Default Template. Now, once you tell it to do that, it'll ask whether you want to replace your existing. We'll say yes. And then you need to close down all your charts by clicking on File, Close All. And then lastly, you need to click on File and then Delete Smart Charts. So by doing that, what that does is that wipes out MetaStock short-term memory. So now when we open up a chart of anything, it'll already have those indicators plotted on there the way that we want them. Now, the next thing I want to do is I'm going to jump here to the Explore button. And one thing that we do at Learn MetaStock, by the way, is that whenever we are working with different types of trading strategies and so forth, we will show you exactly how to work with those trading strategies. And if we create any type of formulas or anything, we'll also make these formulas available so you can download them directly into your program. And if you're interested in doing this kind of stuff, this can save you a lot of time and a lot of effort. So whenever I create a formula for my customers to download, I begin all the formulas with LMS. And LMS is an abbreviation for Learn MetaStock. And that way it's a very quick, easy way to find my formulas quickly inside your program. So inside this list here, the one I want to open up is this one, which is called the LMS Linear Regression Exploration. So let's go ahead and double click on it. And I'm going to just walk you through this exploration I created and just show you what this will actually produce. So you'll see that I've got formulas here in the columns A through I. And you'll see that we've got explanations of what each one of these columns are. So for example, underneath our first column here, column A, this is going to give us the day of the month. Column B and C is going to identify if the slope is positive or negative. Column D and E will identify if the slope just became positive or just became negative. And then column F and G will identify if the close is above the trend line or below the trend line. And lastly, column H and I will identify if the closing price just crossed above the trend line or crossed down below the trend line. All right. So let's go ahead and click on OK, and let's run a quick exploration. So I'll go ahead and select it. I'll make sure that that's selected. And then down here, I'll choose the database, and I'm going to run it on the Dow 30 stocks. We've got 30 securities inside of it. I'm going to load 1,250 records, which is approximately about 5 years of time. And I'll tell it to scan up through the most current data that it can get. We're going to use daily data, And then once I've got everything set up, I'll click on my Start Exploration, and that'll begin our process. So this will go through those 30 securities pretty quickly. So we'll see what we come up with here. All right. Now in this report here, you'll see that our securities, of course, are listed alphabetically. The next column is just showing the most recent day that we're scanning up through. So in other words, it's scanning up through the 20th or today. Then we have our slopes of either being positive and or negative. And what we're looking for here in this dialog is that if it's meeting the criteria, it'll have a value of 1. And if it's not meeting the criteria, it'll have a value of 0. So anything that has a 1 underneath positive slope means that the slope is going to be pointing upward. So let's go ahead and double click on this one. This is 3M. And we'll take a look at this chart here. And here you can see, for example, you'll see that that is definitely sloping upward here. You see how the trend line's moving up? Then let's go ahead and find a negative slope. And so there's Amazon. We'll go ahead and double click on that. And this will bring up, of course, Amazon. And this will be a negative slope here. As you can see very clearly that that trend line is definitely moving down. Then the next two are identifying if the slope just became positive or just became negative. So for example, there's a 1 right here for Amgen. So I'll go ahead and double click on that one. So this one's identifying that the slope just became positive. So let's kind of zoom in on this one for just a second here. And I'll bring this up here just so we can kind of really see this. But you'll see that here our trend line tool here is a positive 0.16. And if I drag it back just 1 bar, you'll see the slope was yesterday at negative 0.32. So this is identifying that the slope on Amgen just became positive after today's close. So then the next one, for example, for a, oh, that was, where was I? Yeah. That was, yeah, that was a positive cross. Okay, so now I'm going to look for a negative cross. And of course, you can click on the column headings here and you can sort the data that way. So Disney, it looks like we just, the slope just became negative. So let's go ahead and double click on that one. We'll open up that chart. And then same thing, for example. So if I kind of bring our trend line back just 1 bar, I can click on it. There we go. Bring it back just 1 bar. This one had a positive slope of 0.02, but after today's close, you can see the slope is a negative 0.01. So that's about as flat as I think you're going to get there. Now, the next 2 columns of data here is just identifying if the close is above or below the trend line. So let's go ahead and just sort on that here a little bit. So here's Verizon, for example. Take a look at this one. And again, for example, this is just identifying that the close is above the end of the trend line there. And then this one, of course, is identifying that the close is below the trend line. So there's Disney. Let's take a look at NVIDIA. And let's go, there we go. And you can see again clearly that the close is below the end of the trend line there. All right. And then the last 2 are just identifying if the close has just crossed the trend line. So let's look for a positive cross here first. So there's Amazon. We've already seen that one. Here's American Express. Let's take a look at that one. And we'll zoom in on this one. Okay, so what's happened here is that that closing price just crossed above the end of the trend line there on today's close. And then for a cross to the downside, let's look for a negative one. There's Coca-Cola. Let's go ahead and open that one up. And we'll kind of zoom in here. And same thing, as you can see, the close was above the trend line yesterday and it closed below it here today. All right. So that's what all these different columns of data mean in this report. So then the question is well, how could we use this? What could we do with this besides just identifying what they are at this point? Well, one thing that I immediately think about is I think about different ways that we could put this together to find securities that might be of interest to us. So for example, maybe if you're looking for a security that's possibly bottoming out and starting to make that upward move. So to use this information to identify a security like that, maybe what you'd be interested in finding is a security with a negative slope and then the price crossing positively above the end of the trend line, which would be, for example, let's see, this would be one of the securities in this column. So to have the program go out and find that criteria, let's close this down and we'll go back into it and we'll make a little modification here by using what's called the filter. Now the filter is the key to the Explorer. This is what allows you to weed out those securities that don't meet the criteria you're looking for. So you only end up with the securities that are of interest to you. So for example, step one is we're going to look for securities that have a negative slope of the trend line. So that's going to be securities that come back with a value of 1 underneath column C. So to identify or put that into the filter, you can do it two different ways. You can either put in the formula, the whole formula of what you're looking for, or you can say, give me securities that are coming back with a value of 1 underneath, in this case, column C. And here, again, you can do it two different ways as well. You can say column C is equal to 1, right? It's coming back with a value 1 in the report. Or by default, by just saying column C by itself, that'll do the exact same thing. That'll give you securities that are coming back with a value of 1 inside that report. Okay, so right here, this is going to find securities that have, in this case, a negative slope. Now, the second thing I want to look for is I want to look for securities where the closing price is crossing above the end of the trend line. And that right here, that's going to be identified here underneath column H. So to find securities that meet that criteria, in addition to securities that are meeting this criteria, we'll say column C is true, and we also want column H to be true. So we have two different criteria that we're looking for. A negative slope, number 1, and number 2, a closing price crossing up above the end of the trend line. So we'll click on OK, and let's go ahead and run that scan. So we'll select it, make sure we have everything set up the way that we want, and then click on our Start Exploration. And again, that'll begin the process. Now, the other thing we can do is also keep an eye on the percentage that are being rejected, and making sure that, that number drops down below 100. As long as it is, we know that we're finding securities. So here you can see we've got 5 different securities that met that criteria: Amazon, American Express, JP Morgan, Procter & Gamble, Sherwin-Williams. So now what we could do, we could take a look at these individually. So for example, we could double click on Amazon. And let me bring this down here just a little bit. And where was I? Amazon. There we go. Okay, so we're looking at Amazon right now. So this is our situation. You see we have a negative slope here on the trend line, and the last bar crossed up above it. So again, that's exactly what we're looking for. We're looking for a negative trend and the last price crossing up above the end of the trend line. So now what we could do, we can close down this report, for example, and all we have to do now is just click on this right pointing arrow, and we can just cycle through those securities inside that report. So there's American Express, for example, JP Morgan, and so forth. And again, we could cycle through these securities just one at a time, but they're all going to meet that criteria where we have a negative slope of the trend line and that last price is crossing up above the end of the trend line. So that's one thought for you. So the other thought for you is, what if you're bearish on this market and you're looking for securities to possibly short? Well, then maybe you might want to go back into this exploration, for example, and look for something opposite where the trend line, for example, is pointing upward like this, and then the prices are closing down below the end of the trend line, right? So the trend line's moving up, prices are closing down below it, indicating a possible turning point for that trend line. So we could go in and just make that modification. Now, another way to take a look at this too is, what if you're more of a trend trader and you want to trade in the direction of the overall trend? So then the way that I would possibly do it initially is I would look for an upward move, or make sure that the trend line is pointing upward, for example, and the prices are closing above the end of the trend line. So we're basically getting that push to the upside, and or vice versa to the downside. I'd want to make sure that the trend line is pointing down and the prices are closing down below the end of the trend line. So let's go ahead and run, or basically make that modification. Let me just show you how we do that real quick. So in this case, I'll go ahead and get rid of these two criteria because this time I'm looking for a positive slope, which in this case would be column B. So I'll say looking for securities that are coming back with a value of 1 underneath column B. And I also want the closing price to be above the end of the trend line, which in this case would be column F. So we'll go ahead and say column F. So we got our two criteria. Column B is a positive slope. Column F is the closing price being above the end of the trend line. So again, we'll click on OK, we'll click on Explore, we'll click on Start Exploration, and again, begin that process and take a look for that criteria. But you get the idea. Once you kind of figure out how to work with this information, you could come up with any type of criteria that you'd like. So for example, I'll go ahead and select 3M. And in this case, for example, then there's Amgen, Chevron, Goldman Sachs, Johnson & Johnson. Same thing. I'll go ahead and close down a report. Same thing. I can just click on this right pointing arrow and I can cycle through those different securities, for example, looking for the different criteria, again, that's important to me. So this is just once you start to figure out how to use this information, you can put it together in whatever type of configuration that you'd like. Now, another thing I'd like to do is that once I start, working with something like this, the other thing I really like to do is I like to use a system tester to back test these ideas just to see if these ideas are halfway decent or not, because a lot of times I'll look at something and be like, oh, wow, that just looks great. I'm going to make all kinds of money with that. And then you go back to, you back test the thing and it just doesn't hold up, right? But the nice thing about the back tester is it's a very, very objective way to look at your information. It doesn't really care if you like, the signals or don't like the signals, whatever the case. It'll literally tell you whether or not it worked, period, based on a strict set of rules. So if you want to do something like that with the formulas and so forth that I have here, what we could do is we could go and create a system test. So let's say, for example, for just this example, let's just say that we want to test the idea of we want to buy or be long the security, for example, if, for example, the trendline tool is pointing upward like this, and we want to stay long until, for example, the trend line then becomes negative. So in other words, I want to buy at this point and I want to sell at this point. How could I test this? So one way we could do it is we could go into the Explorer, for example, and we can make copies of any of the formulas that I've created. So for example, I'll go ahead and open this up. And the indicator inside the Explorer that'll identify whether the slope is either positive or negative will be found underneath tab B and or tab C. So B is going to give us a positive slope and tab C will give us a negative slope. So what I'll do is I'll just make a copy of the positive slope here. Make a copy of that. Close this down. We'll open up our system tester. And then in our system tester, I'll click on New System Test up here, and we'll create a new one from scratch. So when I write a formula or create a system test, what I like to do is I like to put a wildcard at the beginning of the name. And by doing that or using, for example, like an exclamation point, when I'm finished with all my formulas, they'll all basically be grouped together. I have a lot easier time keeping track of my formulas if they're in the same area. Otherwise, if you don't do something like that, they'll get sorted alphabetically and it'll be not as easy to keep track of. So I'll do an exclamation point and we'll call this our linear regression class. How's that? Now for our buy order, I'll just click on our buy order. And then all I'll do is I'll just paste in that formula I just made a copy of. So this will identify that the slope or the red line is above the value of 0. And then to get out of the trade, I'll go to the sell order. I'll paste in that same formula. And then I'll say that the linear regression slope is just less than 0. So in other words, the red line is below that blue line. So we're going to buy it if it goes above it, and we're going to sell it if it goes down below it. That's it. Super simple. We'll click on OK. And then to run it, of course, we'll go ahead and go back into our system tester. We'll select the system and then choose how you want to test it. So for example, I'll tell it to just test going long only. we'll use the last 1,250 records, which is about 5 years of data. We'll test going back on using daily data. And for my trade options, let me just show you my settings here so you can duplicate it. But we'll go to the account here, and I'm going to run what's called a points only test. And this is just going to return back a raw number of points that were gained or lost. So if I get a buy signal at $50 and I get a sell signal at 60, that's going to report back that I got 10 points. That's it. So I just like using the points only when I first do a system test, because I think it's a nice, easy way to compare results against other system tests. And also by choosing a points only test, when you click on this broker tab, that also takes out of the equation any type of interest rates and also margin requirements. So that doesn't come into play at all. For my commissions, I've got that set up to 0. And lastly, for my trade execution, I've got everything to be trading at the opening price with a 1-period delay. So in other words, if I get a buy signal on Wednesday, this is going to simulate that it got into the open on Thursday for that buy signal. And if I get an exit on Friday, this is going to simulate that I got out at the open on Monday. All right. So we'll click on OK. And to run it, of course, we'll select it again, make sure we have everything set up we want, and then we choose the database that we want to test it on. So this case, for example, I'm going to scroll down here. I'm going to choose, for example, like the NASDAQ 100, and we'll click on our Start System Test. And then down here in the lower right-hand corner, we can kind of keep an eye on this, for example, about how quickly this will go through. But this is a pretty simple trading strategy. There's not a lot of call outs for the formula and so forth. So it sounds like quite a few different securities are going to be tested, but really it's not that. This will, as you'll see, actually go through very, very quickly. All right. And by the way, if anybody has any questions or whatever, make sure and, send a message or whatever in the chat window, and be more than happy to try to help you here. So anyway, so when it's finished, we'll click on View Report. And then we'll go ahead and take a look and just see how good or bad, this idea was. So of course, everybody wants to sort, for example, on the net profit. So I'll go ahead and click on that. And this will kind of give us an idea just how this performs. So just again, super simple strategy. You can see that looks like about 3/4 of the securities tested profitably, with about 1/4 of them, testing unprofitable. And of course, to dive into any of them, for example, just open them up. Like top one here is Costco. We'll go ahead and open that up. This one generated just under 700 points. It traded, looks like 39 times with 22 winners and 17 losers. Had the average profit was over 49 points and the average loss was 22 points. This is a nice ratio right here. This is one thing that you'll hear me talk a lot about, and that is the size of your average winners versus the size of your average losers. When you decide to trade, it's, I think, extremely important that your average winner is larger than your average loser. And the bigger that number is, or the bigger the difference is, it gives you that much more leeway. And if your average winner is substantially larger than your average loser, you can be wrong a lot more often than you're right and still do very well with a trading strategy like that. But on the other side of the coin, if your average loser is larger than your average winner, if you trade a system like that long enough, statistically, that'll wipe out your account. So just be careful with that, to say the least. But that's one thing we can look at. Another thing I like to look at is this number right here, 459. We're out of the market 459 bars. What does that mean? That means that we are out of the market almost 2 years of time. So in other words, to generate 700 points, we're in the market a little over 3 years. But in order to generate 700 points, 713 points, we had to be fully invested for 5 years. So that's another really important thing to kind of think about, when you're looking at these results. But the other really important thing is to click on this plot on chart button down here at the bottom, and then close down this dialog. And what this will do is this will help you actually see where the buy and sell signals are on your chart. So up here at the top is our equity curve. So I'm going to go ahead and close that window down. This is our indicator above it. And then I'll go ahead and zoom in here so we can see some of these signals here. But what you want to do here basically is just want to make sure that these buy and sell signals are basically buying and selling where you think they should be. So for example, like I'll grab this vertical line here, and you can see that right here, that's where the red line crossed above the blue line right there, became positive, or the slope became positive. And for our system test, we got into the trade on the next bar. And then to get out, you'll see that it crossed down on that bar right there. And then on the next bar, we got out at this point right here. So very, very important is that when you start to take a look at these results, that you understand why these things are buying and selling where they should be, or where they are buying and selling, making sure that they are buying and selling in the correct spots. So anyway, there's a lot more that we can do with this. And in fact, some of these other ideas, for example, that I'd have with something like this is saying, you know, we're just looking at like a positive cross here or a negative cross here to buy or sell, but maybe we want to look at where it's starting to become positive. Maybe think about buying down in this area here and then selling when it starts to actually turn down, for example. And so there's a lot of different ways to look at this, and a lot of different ways to test this out. But hopefully this will give you some different ideas that might help you there as well. All right. So that's what I have here for you. So at this point, I'd like to just jump over to my website just real quick and just kind of show you what we do at Learn MetaStock. And again, at Learn MetaStock, what we do is we just try to help you with whatever it is that you're doing with your program. We can do it a number of different ways. But number one is that we, on Tuesday, Wednesdays, and Thursdays of every week, we have live classes where you can come and join us, and we'll do our different live classes throughout the week. And during these live classes, the nice thing about these is that you can come in and you can get your questions answered. You know, if you're kind of hung up on something, and of course that way you can see my screen as I'm describing it and so forth. And also what's really nice too is at the end of the live class, then I open it up also for general questions. So for example, like yesterday we did a class on the forecaster, but maybe if you had a question about system testing or something, just stick around at the end of the class and then we can talk about system testing, for example, which is just a nice, easy way to help you out in a lot of different ways. But where the majority of our customers actually spend their time is in this area right here, which is called our video library. Inside of our video library, we have well over 100 different training videos in here on just about every aspect having to do with the program. But when somebody is, first starting with MetaStock and so forth, I highly recommend everybody get started in this first section right here, because this is where we'll talk about just the basics of the program, like introduction to MetaStock Part 1, Part 2, next step, MetaStock Advanced. And then, of course, then we can also have a number of other videos depending on what it is that you want help with, that are going to be a little bit shorter videos that'll just dive right into that particular section. Now, if you're, depending on wherever you are throughout the world, I know a lot of my customers can't come to my live classes because of the time differences. So what we do is we also record our live classes from the previous week, and then we put them up on the website so you can always view our live classes after the fact. And this is where you'll find the previous week's videos here. Underneath here is the drawing tools, and this section here if you look at your screen inside of MetaStock, in fact, let me just jump over here again real quick. Over here on the left-hand side of your chart, you have all these different tools here, and then you have a whole bunch of other drawing tools over here on the right-hand side. A lot of these tools are pretty advanced tools, and if you're newer to technical analysis, you want to learn more about it, what we've done is we've done a video on each one of those tools. And these videos are generally pretty short, typically about 5 minutes or less, 6 minutes, 6 minutes, 4 minutes, 7. But these will give you a very quick overview of what that indicator is, how to work with it, how to plot it, all that kind of good stuff, so you can really get the most out of it there. So then over here on the left-hand side, we have a lot of different categories. If you want to learn more about system testing or using stops or the Explorer or formula writing, we can help you dive into just about any area that's of interest to you. Now, one area, or probably the most popular area that we have, is this section here, which is the trading strategies area. And what we do here is we take different ideas from either books, videos, whatever the case is, and we show you how to duplicate them inside your MetaStock program. And this is the area that I was talking about before, where we create formulas, and then you can download these formulas directly into your program. So for example, like this video here on the super trend indicator, if you're interested in learning about this one, you can of course watch the video here. And then down here at the bottom, the resources here, this link right here will help you download the formulas directly into your program. So you'll immediately have all the formulas that I'm showing you here in the video. So this will be a very, very big help to you if you really want to get into this a little bit more. And this is where I can just save you a massive amount of time here in creating, because again, I've already gone through this and I'll just give you everything that I have here on the site there. One area here, if we have any real-time users here in our crowd today, the Zenith program or application that you have available for our real-time users is, of course, a very, very complete, thorough type of application that there is just a massive amount of data available for. And so what I've done lately here is I've been going through and I've been updating the Zenith videos here for our real-time traders. And so far I've got, I think, about 11 new Zenith videos up here that if you're interested in learning more about how to use the different aspects inside of Zenith, make sure and take a look at this area here. And again, I think that'll be a really good help to our real-time users there out there as well. So that's what I have here for you. If anyone needs to get in touch with me, you can always drop me an email at admin@learnmetastock.com, and I'll be happy to help you however I can. So I'll go ahead and turn it back to Jeff.
I'm here.
There he is. How you doing, Jeff?
Good. I've been having a hard time with the mute button today. It seems to keep moving. Neil had a question in terms of what do you do to select the length of the trend line? Is there a special process that you use?
Yeah, that's a great question, but it really is just kind of a personal type of choice, to tell you the truth. I mean, the default, when you go to plot this indicator, for example, as I was stating before, is that the default length is 14 periods, but you can make it more responsive by shortening it and setting it to that, and or lengthening it to make it less responsive, depending on what you're trading and how the moves are, because a lot of things, of course, are going to and also another thing that could be helpful, or to help answer that as well, is to possibly test it yourself, using the system tester, and maybe take a look at a lot of different length of trendline tools, on the different securities that are of interest to you. And the nice thing about the system tester is you also have that feature inside of there called optimization, where you could say, I want you to test anything from a 5-period linear regression trend line to a 25 or 50 period linear regression trend line, and it'll go through all those different settings and come back, and then you can sort through those results to see which one kind of works for you. But I think you'll find that it's a very personal selection, and it will vary quite a bit depending on the type of security that you're also trading as well.
Right on. I'm going to take over.
All right, very good.
I'm getting the link for the offer put in YouTube real quick, but you can, as Kevin mentioned, if you're a brand new subscriber to learnmetastock.com, you can get an extended trial at metastock.com/learnmetastock 3-for-1. So I've got that coming right up. Kevin, thank you for joining us.
Thank you. Thanks for having me.
All right. Let me go ahead and turn the share screen for me. And let's just go with this screen. All right. As Kevin mentioned, hundreds of videos. This is a training utility that we use every time we onboard an employee. a few months ago, I brought on a new sales guy, and the first thing I did was I gave him some popcorn, and I gave him access to learnmetastock.com, because it is really a great resource to learn about a tool like MetaStock. You've got hundreds of videos, you've got basic videos, you've got advanced videos, videos on the system tester, videos on stops, so many really good videos that you can go through on your own time. And one of the things I really like that Kevin does is he'll actually look at technical methodologies. He's done about 21 complete systems. He'll take a look at them. He'll create MetaStock formulas for them. He'll do a video that kind of reviews the systems, talks about how what he sees as their advantages and their disadvantages, and makes the formula available for download. So in addition to having a Learn MetaStock membership, you actually get access to these 21 systems with what I would call unbiased reviews on how well they work and what their hazards are and what their opportunities are as well. So all of that is like $99 per month. New customers can get an extended trial. This would match really well with your MetaStock trial. But if you buy a month, you'll get the second and third month for free. And as we've said many, many times today, that'll actually get you access to Learn MetaStock until August 20th if you sign up today. So there's a link. You can go to metastock.com/learnmetastock 3-for-1. You can also give us a call, 800-882-3040, and you can go to metastock.com/salespchat. I did realize as I was putting this in here that I typed it in the chat incorrectly. So let me go ahead and put the correct one in the chat, and that should give you all of the information right there. And give me a second while I do that in YouTube as well. There we go. Okay. Thanks again, Kevin. All right. Learn MetaStock 3-for-1. Give it a go. One of the things we talk about, and I think is become apparent, MetaStock's a huge toolbox. It's been something that we've been working on since the 1980s. It's a toolbox that has hundreds of methodologies. We've talked about system testing, scanning, forecasting. Like any toolbox, the better you understand how to use that tool, the better it's going to work for you. So this is a great way to pick up some practice on learning MetaStock, some education. It's a great service as well. So metastock.com/learnmetastock 3-for-1. If you're signing up for the extended trial, you can actually add this as part of your extended trial on the regular site as well. So give us a call, 800-882-3040. If you have questions, metastock.com/salespchat. If you have questions, we'll be happy to talk to you as well. So as we wrap up today, I want to say thank you again to Stocks and Commodities Magazine. I've already said that they're awesome. We appreciate the support. It's a great magazine, www.traders.com. And of course, now would be a great time to sign up for the Traders Forum. It's a free resource where you can talk about the markets, talk about indicators, talk about whatever you want to talk about. We do all kinds of events there. TheTradersForum.com. Get your membership today. And it isn't going to cost you anything. So it'll be well worth it. For all the offers that we've talked about this week, you can find them all at metastock.com/conf-promo. You can go to metastock.com/salespchat, and you can give us a call at 800-882-3040. One question we've gotten a lot today, I'm going to answer it real quick. How do I get access to the recordings? I can't. There are some people that are out there that can't actually watch 40 hours of video all at the same time. So for those of you that just want to kind of go in and view the recordings, or maybe want to review one of the contents that we've seen, if you go to youtube.com/metastock, all 3 days are up there. I timestamped the first 2 days this morning, and tomorrow I'll timestamp the third day. Just youtube.com/metastock. Tomorrow we have another great lineup of speakers and another full day. So I look forward to seeing you back here tomorrow. Until then, stay healthy, stay well. I'll see you at the next one. Oh, that's not what I meant to do. All right, hold on.
Hi, my name is Kelly Clement, and I am the president here at MetaStock. You know, one of the biggest questions I get asked is, what is MetaStock, and how can it help me in my trading? Well, if you give me about 3 minutes of your time, I can show you. MetaStock is an award-winning software and data package that has been helping traders for over 40 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock works across all asset classes, including stocks, futures, forex, options, crypto, and more. MetaStock is designed to help you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategies should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? What are the best options to trade? And of course, how do I know where prices will go next? At the core of MetaStock are its power tools. The power tools are designed to give professional-grade analysis tools to private traders. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting. This allows you to see how your strategy would have performed over time. One of MetaStock's most powerful tools is its charts. MetaStock allows you to navigate through your charts through browser-like tabs, arrange them in ways that you see fit, or group them in layout windows that allow you to quickly access your groups of charts. And then with the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, well, you're going to love OptionScope. OptionScope puts all the critical information at your fingertips, displaying sortable, customizable, color-coded options data, even including the Greeks. You can then take this data and analyze your options with the built-in strategies with risk-reward graphs. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you'll appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has systems based off of popular strategies, things like MACD, Bollinger Bands, turtle trading, candle patterns, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. As you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to create, build, and test their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package powered by LSEG, a world leader in market data. Zenith is a comprehensive and flexible system with an extremely powerful search tool, which includes fundamental and economic data. Add on our world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 35 consecutive years. To find out more about MetaStock and how it can help you in your trading, visit metastock.com or contact a product professional via phone, email, or chat.